don't know if it'll hold up today, but we'll see.
Traders time to roll. Numbers shaking down the scroll. Clock is ticking, you already know. Welcome into the stock market show. Oh, yeah. Monday to Friday when the floor's alive. Captain Jim James help you cut that dry.
Check 1, 2.
Charts are jumping, green and red glow. He's steering this ship on the stock market show. It's a stock market show.
Check 1, 2. That does not sound good, does it? I haven't heard my voice in like at least 24 hours. Hell yeah, it's gonna be a glorious day.
He keeps you calm from the open road till the last trade goes. He's calling the
Goddamn right.
market show. Hey, it's a stock market show. Where the bulls run wild
I literally left my calls on until the close yesterday.
and go. Ride that wave on the stock market show.
Literally to the closing bell. Oh, fuck yeah, I made money, motherfucker. Oh my god.
TraderTheTrigger.com. TraderTheTrigger.com.
Jesus Christ, I made money yesterday. Fuck me. Holy shit. I might have to do some humble bragging and show my accounts to you today. Oh, man. Oh, God. I just checked my account, and I haven't looked at it since yesterday. I made a fuck ton. So I bought calls on spy calls on Friday low and never sold them. And I was at a doctor yesterday and couldn't close. The market was going up, so I didn't care, but I couldn't close them while I was at the doctor, and I have not looked. I didn't want to look. And I just looked right now. They stayed on until they died at the close. There were Friday calls from the low. I bought them at Friday, I think, at 4:14 in the afternoon, and I left them, diamond-handed them to the closing bell on Wednesday. So I'm on a little early this morning because we got to chat. Sometimes I stream too much and catches up to me. And then I think a week or two ago, I did a stream at nighttime, and it was too much. And sometimes when I stream, it becomes too much, and I take a break if I can. Now, normally when I take a break, I try to stay away from this desk in particular, because what happens is I drag myself into speaking. So I'll set the stream up, and I will stay away from the desk because I get sucked back in like everybody does in the market, right? So what day was it? Was it a Tuesday night? I did a short stream for like an hour or two. If you guys don't know, when I get done with the stream, normally what my routine is, I got done with the stream, and I spend the early evening with my children, my wife. I might take a nap sometimes, or at least rest my voice. Now, recently it's like springtime, so my youngest has a lot of things going on, in particular where it requires me to, or not requires, but, I want to be there for her. It's a part of her life where it requires me to be there as a dad. And so on Tuesday, I did that during the daytime, and then I did the stream with you, and then I went out with my friends on Tuesday night. And well, not my friends, with one friend in particular, a guy that I kind of mentor, and he's a friend of mine, but he's younger than me, and I never had a dad. And I had a few drinks that night. Now, what happened is not related to drinking, but when I came back to do the stream on Wednesday morning, I couldn't speak. I wound up going to my doctor, and it's not confirmed yet. I still have to go to a throat, eye, ear, and throat specialist, but he thinks I have torn a fold or something, or like a hemorrhaged a fold in my vocal cords. And when I was talking to him yesterday, it wasn't good. It was, like he was asking me, like, what am I doing to make this happen? Like, what's going on? And I had to tell him that I stream all day long and I speak all day long. And sometimes I'll come back on and do a second stream or something like that. And then I told him that I went out with my friend that night. And I guess if I take like NASDs or NSAIDs or whatever they're called, or drink or anything like that, and if I have a strained throat, it can create a situation where I'll get a tear because my blood is thin. And I guess that was the kicker was I'm straining my voice, and then I don't normally drink. So like when I get done with the show here during the day, I stay sober. I got to take care of my kids. I got to take care of my wife, take care of myself, all that kind of stuff. But where I'm like streaming during the day, then doing the thing with my kid, and then come back on for another stream, and then going out with my buddy at nighttime, that's like the perfect thing. Not only that, just the number of hours that I speak was enough. Like from his perspective, he thinks it's insanity that I speak all day long. He's like, you got to be kidding me. So this thing that happens to me when this isn't the first time it's happened to me. It's not the first time. I think now that I know what's happened, I know that I've done it more than a few times. And what happens is I lose my voice. I'm having a hard time speaking even right now at this moment. So I lose my voice. It gets this thing where I start to try to say a word, and it gets gravelly, and then I lose my voice. You might have heard it on Tuesday. I was reading very slowly. You'll probably hear me like that today. I'm going to speak very slowly, enunciate, and try to be easy on my vocal cords. But I'm sick. Even though I look fine, I'm not fine. It's a bizarre thing. I think it's called a vocal fold hemorrhage, or a vocal cord fold hemorrhage, or something like that. I don't know a lot about it. I know a lot of, or I know my extent of knowing anatomy is college and high school anatomy class. Other than that, I don't know a lot about anatomy. Yeah. And it can build up like scar tissue and stuff. It can like get bad things can grow, like scarring and stuff. So it's just this morning I just want to give you a heads up that I'm not doing well. And I made a bunch of money yesterday. And I shouldn't be laughing, and I shouldn't be straining, but I am. Anyways, good morning out there. Hope you're all doing well. On Saturday and then Sunday and even Monday, there was an overwhelming cascade of articles, information saying that the stock market was going to crash. And I was pretty angry about that. If you remember on Monday, I was like doing the pounding on the desk thing. And I'm pounding on the desk because, these people are the most trusted people in the world, right? You trust you trust the street when they talk, right? That's why they're on CNBC. That's why they're on Bloomberg and stuff. And they railroaded that fucking shit through the market, and we knew it was going up, right? We knew it wasn't going down. There was no crash. We're going to slam it all up here, roll those calls. And hopefully some people listened to that and not to those guys, right? Would have been a huge mistake. I'm sure that some accounts out there are pretty fucked up right now. I don't think our group is, but I'm sure that somewhere out there, someone, had it wrong. It's because you're relying upon that stuff, right? All that information, all that technical stuff, all the reasons why the market should have crashed this week on Monday or whatever. And we're fairly high right now. Let's go take a look at it right now. Any of you that are members here, did you guys see like the charts from yesterday? We like fucking traded that thing fucking laser beam all the way up into the close, and even into this morning, right? So we got to take a peek at that really quick. This is a fairly fucking significant move, right? This is fucking Friday right here. Look at this. This is Wednesday, Thursday, right? And this is right in here. See this right here? This was Friday. I bought this one right here. I bought this close on, I believe it was, let's see here. Was it Friday? I'll check and see when I opened them. Maybe it was, maybe I did buy them before Friday, but I'll look at them. I'll look and see when exactly I opened them. But here's Friday. Right there. That's where I bought them, I think. And right on this close right here, I bought them. Or maybe I bought them back here. I might have bought them right here. I'm not sure. I might have bought them like 2 o'clock. I'll check and look and see when I bought them. But I held these fucking things up until the close yesterday, and it was a fucking thing of beauty. This move on from Monday to today. What is this, Monday? That's a 3% fucking move straight up. That's fucking beautiful. Technically, we've only finished 3 New York cash sessions. This would be our 4th today, and we get one more tomorrow. So that's a fucking epic move. 3 fucking % on 3 sessions straight. Ooh, gorgeous move. Fucking gorgeous. How y'all doing? I personally would probably take the money off this bell. We're gonna chat about that this morning. If you are still long right now, we're going to look at it together, but we're going to look at it together here. But I mean, I figured we'd hit 733. I think I said to you on Tuesday. Someone had asked, they're like, "Were you going to hit 7?" Or I was like, "Yeah, we're going to hit 733." And people were like, "What do you mean we're going to hit 733?" And I'm like, "Yeah, but I'm not going to plot it for you now." The reason I say that is because our membership has higher frames. They get updates on like a 4-hour, a daily chart, a weekly chart, and those charts actually show us going up here. You might be a free member and not see those charts, but we don't chart just this. We chart like we chart the entire markets on multiple frames. And let me just show you something here on a higher frame. I think is kind of appropriate here. So. Give me a second here. I'll see if I can bring up a chart, and maybe this will help here. And I'm in some fucking pain here, man. And here, let's go to spot, or we'll just do this one. This will work. I think we can still go up here. I'll be honest with you guys. And I don't think we need to roll here either. We're probably pricing in a bunch of inflation. There's AI panic too. Bubble panic. Everybody must buy everything panic. There's, oh, wait a minute. Let's do this together. Let me get this. Let me get the days. How about this? Get the day started for you, and then we'll look at this in a higher frame. We should pop and drop too. It should go up a little bit in the open. It should, but let me just take a quick look at this really quick. So, you know that we're not quite losing, but like just look at this right here. Okay, and you kind of see that right there. You see that like dip and then rip here. So what we're gonna do is we're gonna look at 2 things. Now this is not the same as this right here, but I want to look at just this for a brief moment, and then we'll take a look at this. And I want you to remember something else too. This daily velocity being up here can remain here in the right time of the year. It can actually be supportive and not indicative of a roll too. But let's just take a quick peek. Oh, wait a minute. Say a quick peek. Look at this here. Just see what happened down here. And this is kind of what I'm afraid of here. Is there's a little bit of this going to happen here. A little more grinding or distribution of some kind. We'll look at this in a higher frame for you. I think there's a possibility of going to like on pullbacks and shit and distribution up to like 745, 750 potentially. If we break it, we break it. But if we maintain it, and we haven't even, sorry, my throat's really fucking bad. And it's crazy here is like, they were calling 760, 7,600 for the end of the year. And I said to you the other day, like, let's start talking about 10,000 and stuff. And you guys know that I know, or I think we're in the bubble. There's a lot of argument if we're in 2000 right now or 1999 or 1998. The thumbnail on YouTube shows Paul Tudor. He's a famous old school hedge fund guy, billionaire. The picture is a guy you might not know if you're young. He this week claimed that we got 2 more years left, and this guy was active in the 90s and 2000. When you start seeing these articles coming out now, and I've warned you of this for years now, right? I warned you before the AI started. The AI trade started. I told you we're going to enter this fucking AI bubble, and they're going to start this AI trade, and that's what we're doing. Everybody right now this week, the past day or two, has been just hammering on this being the late 1990s. So it's nice to kind of get the know before it happens, and then trade this whole fucking thing up. So let's look at this together, okay? We'll look at this together for you on the show. Take a peek at it. I mean, just look at that fucking thing. That is absolutely disgusting. Disgusting. And this really speaks to like why we have trading rules, doesn't it? I mean, it really does. It speaks to like when anything shouldn't happen and you follow trading rules, price action trading rules, when your indicators and your RSI and all those other things don't really work for you, and you couple that with trading rules, like you have your own basket of fucking tools. It's just basic and simple and complete. It just works. In the face of anything in the market, like this can happen, that can happen, this is supposed to happen. None of that matters. The only thing that matters is you're trading in front of yourself. Or what's in front of yourself, I should repeat that. Put that right there. Let's put this week right here. And I agree. When it does come tumbling down, it's going to be fucking crazy. It's going to be fucking crazy when it all comes down. And the best part is that you're going to know when it's happening. And there's something else I spoke to you about on Tuesday or Monday where price is getting away from the monthly trigger, which is giving a reprieve. Normally, if price cannot escape how close it gets to this monthly trigger, there is risk of that was the top of the market. So when you see this like spacing, this stretch, it's very good. It implies that we're not near like the bubble top, and it's very believe it or not, it's healthy for the bull market to have that space to the monthly trigger and pulling away from it as it climbs higher and higher and higher. And now it's going to be dragged more vertical. It's not flattening either, so it's not like it's down here, we're flattening it out, it's the top, we slip underneath it, bull market's over. Let's go over here. So we got let's do the days over here. I mean, I thought maybe we get a pullback already, but I mean, if you wanted a catalyst for the pullback, everybody probably knows what it is, right? NFP, U-rate. Told you earlier this week that the data was looking good. I had looked at the data over the weekend and I thought it would be bad. And I think on Monday or Tuesday, I was like, all that data is going to be good. And then the jobs data is going to be good. It was all good. It was all good fucking data this week. God, I sound like a fucking 80-year-old smoker. I don't sound good. Hold on here, guys. That looks like that's rolling now. There's a roll. Hold on 1 second here. Let's do this one right here. And this one back over here. This is what we want to be looking at right here. There's a 4 hour. Another 4 hours. Just stacking them. Selling them cheap and stacking them deep, right? Fucking A, man. I can't believe. Hold on a second here. I can't believe how much money I made. I'm just like still a little shell shocked here. Going here. So you got a new poop mountain in this 4 hour right here. So you want to be chilling over here. Remember, you want to be buying the half an hour and the hourly trigger. Let's go over here. That looks like a fuck you candle, doesn't it? Look at that. That looks like rage. It looks like a Jeffrey Gunlock rage candle right there. Or maybe that's a I don't know who that is, but somebody. Did any of you guys read that article about douchebanks fucking still doing spoofing and shit? Anybody read that article? About the guy getting caught spoofing and the bank was condoning it? Kind of pissed me off. Knowing that they're still I mean, you kind of know they're spoofing the market on orders and shit, but that shit's been illegal for fucking ever. Let's do that right there and this one right here. I mean, you want to see where I think we're going? I don't know if they want to see where I think we're going. Did you want to see? We should hold this right here. There's 10, right? 10. You could theoretically say we could go down here. There's potential to go down here if this hourly's down here. There's a gap to close over here. Let's do this one for 12. Let's go deeper. Right there. I don't know. I think you're lucky if it goes this deep. The high here is 735, 735.95. Jesus Christ. We're right into NFP up here. I don't know if we can get up there. I'm feeling a little I'm feeling a little like I'm feeling like this is the better trade over here. Like this is a nice gap down here for NFP. And this is stalling right here. So I wonder if you could like come down, park all day long, right? Have NFP, whammo. And then we start going up into Friday, Monday. How about we play it by ear? I'm gonna do it like this. I'm gonna do it like this, and if we get caught in this, just like I have a feeling this isn't what I think, or this is my time in market speaking more than anything. I do wonder if there's going to be like a stall into 12 o'clock or into today. They gap us and then they bring it back up for Friday, and then we actually do this on Friday. But we'll chart it like this and see if we start turning up. Okay. So don't be mad at me if it goes down, hiding out over here all day, and then tomorrow morning we get a little gap and go. Yeah, something like this. I think it's something like this. Let's go to this 1 minute right here. Check a peek at this. Was there a pop on that or no? Yeah, okay, so that's good to see. So here's the high in pre-market. They had a failure on the open to keep popping and get a new high, so they're going to send this down, right? They're going to check, likely close that too. We'll look to see if they buy this at 10, but I don't know if they will. If they don't buy it at 10 a.m. though, that's not a trend day. So if we drag into like 12 p.m., we could get pinned in here all day long. So what we'll do is we'll just see if the flows to buy come in at 10 and at 12. If we start, it'll look like this. I'm going to show you two ways here. And if these guys come straight in here, right, they buy this shit and they beat this, then we're back down here and then we're trying to do this, then we're good. We're on a trend day. We'll be fine. If we stall in here, right, we're down here, bullshit, and then we're down here, bullshit, and then they start packing us in until 1600, you know. I think there's probably like a 45% chance of that happening. Fairly good percentage chance, and it's all due to where we are right now. The bulls, if they want an argument for us continuing to do this today, the fact that we traded 735 and we went over it, we wicked up here. You can't see it, but there's a little look above up here, implies that we're not done going up. For a multitude of reasons too. We're in the middle right now of a few things. We're in the middle of pricing and inflation, even if it's going to be looked through, and we will pull this move back even if we're higher, if we are fighting the inflation or it is looked through. We're also in this like unloved stocks and broadening of market going on right now. I'll explain some of it later. Like transpo semis, like the UPS kind of not semiconductors, but like delivery stuff. We'll talk about a bunch of this here today, but there's a bunch of like can't miss out on the bubble. The fact that they were talking about us being in the late 1990s is like everybody wants on that train. Everybody wants to be all boats lifted trade. You've heard me harping on it here. We get fucking on a slow day, we get 6,000 to 10,000 people watching the show on a slow day. No bots, no bullshitters. This we don't stream like if we go watch some of these prop firms, they pay for fake viewers. We don't do that for like a live stream. Doing that many numbers across all these different platforms is pretty significant. So I'm sure what we're saying is getting out there too, and then it gets regurgitated, and then before you know it, you got 20, 30, 40,000 people talking about it, and everybody wants on board, right? So there's a little bit of mania right now going on too. There's some inflation. There's some mania. There's also the pricing in of SOH, SOH, another ceasefire or whatever it is, you know. So we'll just watch this in at 10 a.m. See what happens. And we had just did 3%, which is also about what they thought the war ending would be repriced back in the market. So you also have earnings that are they're beautiful. GDP is good. People are getting hired. The zeitgeist is wrong yet again on economic data. So I gotta speak really slowly. Or I'm gonna lose my voice will be gone. I can't even speak. So just be patient here. If we can pick this back up and grab it, we will. If we can't, and they're gonna do the thing with NFP, we won't buy it. I'm here with you, so I'll let you know if you want to buy something. Okay, I'll be here with you today. But just I can't speak as much as I've been speaking. I have this. The most fucked up thing about this medical condition is like there's some pain, but it's not like painful like you would think that it is. So it's a really weird, like I'm injured, but the more that I speak, the more damage I do. This guy wanted me to not speak for like a week or 2 weeks. I was like, that ain't happening. I don't give a fuck what you tell me we're gonna do. Like literally like 2 weeks. No speaking to anyone. So we'll see what's up here. We'll take it nice and slow, and we'll trade the day together. Hey, thanks, Tampa Bay Buckeye, brother. Thanks for becoming a member. I appreciate you, my man. Appreciate you. You know the syndicate from the CBOE? Like the dealers are going to come get me if I fuck with them? I think that shit's so hilarious. Sorry, my time on Twitter right now is pretty much I like tell myself that something I think funny and then I repost it. I post it and I'm like, yeah. Like, I'm not doing it for likes. I'm doing it for my own fucking shits and giggles laughing. I find the stupidest shit to be funny. I do. I don't know why. Hold on here. Fucking harassing Twitter. Fucking love it though. All right. I have really bad old school black Mel Brooks type humor. So I don't know. I find like the things that I find fucking hilarious. It's just like no one else does. It's just me. Or like that's bad taste. I'm like, no, not really. There's a lot of bad real things in life that are bad taste. I'm a real black humor kind of guy. So hold on a second here. Don't do anything here, okay? Don't do a thing. I'll let you know if we're going to turn up. Good to see you all this morning. Thanks for supporting the show. I was thinking about that this morning. I was like, can I get whatever it is, Medicare, or like whatever like the insurance is for when you're, whatever the fuck it's called. I've never, my entire life, I've never like, ever once in my entire life, ever like gone on sick leave and collected money for it. Never. I've always been a hard worker. I've never believed in it. Dumbass. Like, I'm a total dumbass. But I was thinking that I was like, can I go on? Like, I was like, I don't even have any health insurance. Oh, I have health insurance, but I don't mean like health insurance for being employed by myself or whatever. You know what I mean? Like I remember when I was younger, I used to say to myself, when I've owned other companies, and I was always like, what am I going to do? Pay that insurance, and then I get sick and I'm going to lose my money anyways. Like there's this, like, if you're a small business owner or whatever, you're kind of SOL when it comes to like, workman's comp. You're not going to get workman's comp when you're, when you're not, working for the man for 40 hours a week. It's just not a thing. Hold on a second here. Don't do anything here. Don't do a goddamn thing. Don't buy nothing here. Do not buy anything here. And if we start rolling, if you follow your rules, if we lose the half an hour and the hourly trigger, right, we stop buying. and we can short down to the daily trigger, and then we'll look there to see if there's a dip to buy. It's fairly easy, you know. Um, and I know that it's harder than I say it is, but I get that it's not as. I mean, we literally have traders here that say, if you're not on, I don't trade. That's what they say. Like, I don't do fucking shit if you're not there. And I'm like, what? They're like, yeah, that's why I need you there every day. I'm like, oh fuck. Um, so hold on here. Let's watch this. Yeah, we got the 12 o'clock in there. It's a good goddamn day, dude. I didn't know how much fucking money I made. Oh my god. I never hold calls through the whole thing ever. Like, I'm usually like in, out, in, out. I don't even tell you guys sometimes. Sometimes I'll like get in and out and be like, yeah, I'm long all day long, but I'm getting in and out like all day long. I try to min max that shit, but these stayed on to the bitter fucking end. Oh my god. Whatever. Hope you guys did well here. Hope this has been a good week for most of you out there. Let's watch this closely here, see what happens. And we have a shit ton of stuff to catch up on too. We got to catch up on a bunch of earnings. I think the other day I called out SMCI and AMD. I was scared shitless of calling AMD. And we got to look at a bunch of different stocks. I did have one bad call this week. I wanted to see Disney go down deeper. You know, don't fuck with the mouse. I fucked with the mouse. That was my own personal greed. I wanted to see Disney crater so I could go in and buy it. Like, that's what I wanted to do. I didn't trade it, but I did get that call wrong too. Just a heads up. I think I got that one wrong. I've got most of them right this season. I've done very well this season. I'm calling out stanks, and there's some more reports after today that I'm interested in, and so we'll take a look at whatever's left over for this week. We'll take a look ahead to next week. Yeah, we got a bunch of stuff to go over. So we'll go slow. Just let me go slow with it today. There's if I go too much today, there's potential that I can't speak tomorrow, or even today. There's that potential. So, I don't know. I think that's all I want to say on that topic. I have an appointment with my ear, throat, and eye specialist coming up here in a couple weeks. So, we'll see what's up with it, how bad it really is. You know, you guys, like I stream. Just want to let you guys know, like I stream like 7.5 hours a day. You know, like most people are like, if you're like a radio host, it's like 1 to 3 hours a day. There's a lot of downtime in those talk shows, like on AM radio and stuff, where it's just repeated previous shows. If you look at like a TV broadcaster, there it's like an hour a night, you know, and they're like 2-3 days a week or something. You'll see your broadcasters on TV, and we're doing like 7.5 hour a day, 5 days a week. That can be someone's like month right there, right? 7.5 hours a day, 5 days a week. That's you know, more than like 37.5 hours in a week. People put out a 20-minute show recorded on YouTube at nighttime. So you times that by 3. I don't know how many shows that is. It's like 90 shows in a week. Or I do in a week record or live what people record for a quarter. I do it a week in, a week out, and you know, and all kinds of other shit goes on, like technical difficulties, get sick, all this other shit, you know. So it's a brutal schedule. Not gonna lie, like the schedule is brutal. It ain't easy. But I like it. It's just not easy, you know. I don't dislike it or any of that kind of stuff. I don't want to not do this. I love it. But at the same time, there's like physical things happen. I'm doing this stuff. So let's watch this closely here. See what happens. I'm going to come over here to the main screen. Hold on. I got to look at this fucking Robinhood shit too. I gotta like see, When did I open that fucking thing? Okay, so I opened it earlier on Friday. I opened it like 1 o'clock in the afternoon, somewhere in there. I wanted to see when I opened it. Okay. To the bitter end. Sweet. I wish I'd held those AMD calls through. I didn't. I closed them before the close on Tuesday. Dude, what the fuck is with Snap? I gotta look at that beautiful SMCI. Oh my god. Oh god, yes, SMCI. What the fuck is going on with Snap? This thing's been fucking dogging me for fucking forever. Ugh. Like, I was looking at my account this week. Here we go. Let's watch this and see if it can start going up. I was looking at my account this week, and it's littered. I have like dead trades that I've been accumulating for a long time. I'll buy shitco's that I'm like, 50 cents, $1, sure, let's load up, and they're just sitting there for like. I'm at the point where I want to clean them all out. I just want out of them. I can't even watch them. Like, I can't even keep up. Just like I'm looking at Snap right now. I'm like, I should have gotten the fuck out on any of those highs. What was I thinking? Oh yeah, what's going on, Arkansas? It's a dope name, brother. CBOE. Yeah, I might need to get some tea at some point. I'm likely gonna have to get some tea. I'm like bleeding in my throat right now. I have a tear in my throat right now. I can't drink any alcohol. Can't take any aspirin. I can't take any fucking ibuprofen. None of that shit. Let's watch this closely here. Don't do anything here. I gotta be. That's a nice name, dude. I like your name, dude. I gotta say, like, I know a few guys from the show from Arkansas, but I actually have some family and some friends from Arkansas. Fucking Arkansas is awesome, dude. If there was like anyone from the South that I know that if I partied with, it'd be crazy, it'd be anyone from Arkansas. I've never been to Mississippi. I've had a few friends in Mississippi, but not like close friends. I have some family members though, and some real true lifelong friends in Arkansas. Arkansas is a good place, man. First time I ever went there, dude. I went into Arkansas, and I was whipping down those roads you have there. They're like 1.5 lanes, no markings on them. Whipping around corners. They'd been there since like the 1910s and shit. Fucking crazy. And what's that old gangster spot in Arkansas? Hold on now. With the old bathhouses and shit. I went into this town in Arkansas, right? We're Hot Springs, Arkansas. When I drove in there, and I had no idea. I'll just think if you had bought that, you'd be angry, right? I went to Hot Springs, man, and like it was so cool because it's like a ravine, and you just like it's like driving into Shangri-La or something. Yeah, Hot Springs, my brother. Yeah, Hot Springs was a good time. I liked it there. I would never have expected Hot Springs to be as cool as it was. Like especially going there if you're not aware of what's there. I had no idea what was going on there. Let me put this on.
0.6%, 0.6%.
Oh yeah. U.S. construction spending month over month 0.6%. Forecast was 0.3. Even the analysts are drinking the fucking Even the fucking analysts are drinking the goddamn Kool-Aid, guys. They've gotten every fucking expectation this week wrong. All of them. And the only reason why I got him, or I knew it was going to happen, is because of Wolf Richter. That fucking guy is good. That fucking guy. If any of you guys don't follow Wolf Richter, you should. And then live in the comments, because he's the only guy that now, I think he might just be the only guy I trust now. I don't think I trust anybody else. I don't know how he gets replaced either. Does anybody out there, if you're watching this show, because there's 2 or 3 other guys that I've followed, and I've slowly fallen off of reading their stuff. Does anybody have, if Wolf Richter said, I'm not going to do my thing anymore, is there a replacement for that guy? I don't think there is. I have looked over the years, and I've never seen a replacement for that guy. Does anybody out there think there's a replacement for Wolf Richter? I don't think there is. I don't think there's a single. I mean, I've followed a few other guys with that do the econ data, and none of them are near his peer.
We have posted the US construction spending March 2026 report on the feed for those interested.
Oh, I like that. That's good. Nice save right there. Like that. We now have something to beat. This is good. I like seeing this one right here. This is a good previous high to beat. That's all we need to get started right there. You can break above this one right here. If we can break above that one, we'll talk about taking out this one and this one right here. Maybe not that quick, but let me just check this really quick. It's somewhere. Wait a minute, what happened there? I did that wrong. We'll mark this as a bottom and see if it's legit. This should break right about here. We really need to like... Jesus. I might have this wrong. This might just start fucking running. Hold on here. We might just start blasting up here. This is a tough call here. Hold on here. Hold on here. Just give me a second. I just want to wait to see this here, because there's the reason I don't want to chart this little thing here is, or this, all this right here, is because there's a mini 5 waver in here, and then another pullback down here, and then there's like another mini. So I'm assuming is like 2, 3, and then no, yeah, no 3, 4, and then 4, 5 is like up here somewhere. But just give it a second here. Oh, hold on here. We'll take it slow. All this stuff from this morning back there is kind of making it messy. Hold on here. So we should beat this one right here. Come back down over here. This is the first one. 1, 2. Be right here. That, I think that should be there. Yeah, that might even be right there. I mean, you could argue it's right there. It's something like this, but there's a smaller one within here. So I think this is 1, 2, 3 in here, and then there's like a quick 5er in here. And we just beat this high right here, so we're just gonna watch. Yep, I think it's gonna move. So let's watch this closely here. Remember, this is the best leg right here. This is the first leg. Second leg is the most juicy. And this can fail. This third leg can fail, of course. This is where the money is, right in here. risky inside of here and risky inside of here. If you want like best trades, it's in the middle. Yeah, Hot Springs, Arkansas. I loved it. I had a good time there. I what I liked was the history of it and the like you're in this like very poor part of Arkansas, and then you like come into this place where you can tell that someone spent the money there, right? You can tell they spent the money in there. I don't even know if you could build that today. It probably costs like $2 billion. You know, like the ballroom. Couple $1 billion ballroom that the U.S. is now paying for. This is gonna piss off the Bears, man. Like we're likely, like I got us trading like failing 740 and then trading 750. I do. And 735 will be used as the back test. Uh-huh. Yeah, thanks, guys. Thank you, Gladriel. Hey, Gladriel, I saw your DM. I just haven't been able to make my way through my DMs to respond to you. I get a lot of, I have like, every week I have like a few hundred DMs and emails I have to go through. And I did see your DM, but I haven't made my way through it yet, my DMs enough yet to respond. So I apologize for not responding to you. I did see it though. Yep, just nice little pullback, right? Seal the deal on the 1 and 5 minute trigger, right? The cross. But we're trying to form a bull plane right now. Good job, good job. I like seeing that. Is anybody out there? Can anybody tell me? Is there a replacement for Wolf Richter? Anyone here follow econ data closely? Anyone? I'm wondering if I'm the only fucker here that does that. I'm the only loser here.
Situational assessments after Beirut strike on Wednesday.
I'm the only weirdo that follows that stuff. Thanks, Gladriel. Thanks for your patience. I get pulled like an octopus, guys. It's like crazy. It's like, oh, it's only 5 minutes. Like another 5 minutes for this, 10 minutes for that, 15 minutes for that. And then before you know it, the day's gone. Watch out for a flush here, of course, or above the 5 minute trigger. They could sweep us right down to that 1 minute trigger.
Fed's Hammock says the Fed should be neutral in policy stance and the outlook given uncertainty.
I don't think you're gonna get a rate hike. It like if this war ends, I would think that the Fed will look through it. If the Fed doesn't look through it, let's say Warsh doesn't want to look through it, even if he like a lot of chairs come in and they'll throw the hike on just to set the tone. Jerome did that too. You know, recall Jerome Powell threw a hike on. His first fucking act of business was fucking the market. If you guys are like young traders too, you might not know this, but the Fed used to be very adversarial. Even Jerome Powell. I don't know if he was directed to do this, but I remember during COVID, he said we're no longer an adversarial Fed, and
issuing Cuba a general license.
I think that's been a boon to retailers
and their ability to spend.
It means now with Warsh not being in or Warsh basically, he said it nicely, but he was like, we're not going to telegraph anything to you anymore.
Says the Iran war can impact both sides of the Fed's mandate.
Which is kind of bullshit. But not only that, what it means is
that rate on hold for the long period.
We'll more than likely have to start paying way more attention to
shares extend gain to session high 2.2%.
Anytime he's at the Senate hearings, anytime that guy has a scheduled hearing, anytime that guy has like an unscheduled appearance, like an emergency anything, anytime there's a Fed meeting, it's all risk off. Like it changes the whole stance of how we trade that or trade him. If you're a younger trader, you don't know what it's like with an adversarial Fed. It's very dangerous. Market will fucking crater. If like everyone's like, yeah, we're real dovish right now, and then all of a sudden you just get like an emergency hike, just comes out, has a presser, and says, "Here's a hike for you," and it's like, fuck, crater, fucking crazy. We probably need to talk more about that as time goes on, and find out what exactly that means. Like not giving guidance could involve being adversarial with the markets, and that makes it an even like the whole like the idiom comes back into play of you wait until after he ever comes out for any fucking reason. You just like literally go risk off immediately, and don't care if you would have made money in the way up, like a squeeze higher, a squeeze lower. I don't think Warsh is going to be that guy with you. I don't think, or at least right now, I don't think he's going to. I think he despises you and me and all other retail, I would suspect. I'd really like to find out why they were no longer. I mean, I realized at the time they said they were doing that because it was COVID. But they haven't been adversarial. I haven't seen that shit since 2019, maybe 2018, 17, somewhere in there. Yeah, it's been a while. It's been many years. It's been fucking 8 years at this point. Something like that. So stark change. Or I think that's probably the biggest change that as a trader you should be concerned about. If like the no guidance turns into a big fuck you sometimes, you know, like we're intentionally going to fuck you. We think it's funny. Like the cruelty of it. So, for me, the non-adversarial, like when they warn you, hey, we're going to start this tightening cycle, 3 months from now or whatever, and this is coming and that's coming or whatever. That's all been to the benefit of retail.
Hammock says the FOMC signal on the next move
not to the street
is misleading.
Yeah, thanks, leveraged happiness. That isn't my problem. My problem is I was thinking about it because shit, I just lost my thing. My problem is so if I raise my voice, I can speak. My vocal cords are forcing me to like talk like a very high voice. I'll slow down speaking.
And Fed says the Fed has been missing inflation target for years.
That was my thought about Wolf was like I gotta probably build my own databases at some point because if that guy ever retires, we're all fucked. I'm probably gonna have to like start charting this stuff myself or whatever, pull the data and start charting. That was my
pressures could be more persistent.
And maybe I need to start paying more attention to him and like how he tracks this stuff every year and like try to replicate it if I have to. Because maybe I'll contact him and just say like if you were gone tomorrow, what would you do? You just decided to up and stop doing what you do. Where would I go next? I don't know who's that special. Like that guy is like a fucking
inflation forcing more people towards trade-off.
It's like Mother Teresa for economic data, generally. Okay. Let's take a peek here. Check this on an hour. I just want to check to see what we've burned on this hour candle here. We took that one. Let's check a 4-hour really quick. We didn't beat this one right here. There. But we're good right there. 733.27. We have to hold that.
Hammock says low, high, low, fire, labour market, good single frigidity.
So this. There's your flush. See your flush?
Fed's Hammock says low.
That's taking all your stops.
Justified will drive up inflation. According to the Wall Street Journal, US to sanction Iraqi official over Iranian oil sales.
You want to buy the fuck out of this if you don't know. Some of you know. That's a flush. Now they're going to fucking take all your shit away from you up top. What you want to like? So this is your back test right here, right?
News, Iran's Iraqi.
You can look at this like a few ways. This is an A.
On the way back.
You can't give this up right here. Can't give that up. You can go all the way down here, flush it, and still be bullish to go up. So just remember the structure right here, like an A, like a poop mountain. Well, I'm not drinking my coffee. I should. Yawning. Yeah, this is weird. Like Fed saying, or Hammock saying, Fed signal on next move being a cut is misleading. He's intentionally clouding. He's intentionally being deceiving. The next move by the Fed is not a cut, but a cut or two is likely this year if Warsh throws a hike on. If Warsh throws a hike on, you'll likely see a cut this year. If Warsh doesn't throw a cut on, it'll likely stay at the current rate. But if he puts the cut on, or excuse me, the hike on, you'll get a cut from Warsh at some point. The rates don't need to be raised. They don't need to be cut either. Situation is normal right now. We are still inside of the soft landing right now. And as long as the bond market thinks that we're working on inflation, we're good to go. All the data is excellent out there. In the face of us being in a restrictive environment, you got to remember that we are in a restrictive environment. There is some QE stuff going on. There's definitely some shorting of oil. There's definitely, some intervention. You can see intervention in Japan right now. They're admitting to it too. There is intervention, but it's still a very restrictive market. So I think people are looking for the restrictive. I think someone said it on Tuesday in one of these articles I read too. They said everyone wants the restrictiveness of post-COVID. You're not going to get that unless inflation rips like that, and that's an anomaly, not the norm. It's like everything. I'm just thinking about it right now. I'm like, it was kind of like when the data was up here. Like there was a lot of data that was either goes up and that's good for bull market, or goes down, that's good for bull market. And then we had like
forecast
data whipsaw down and
hold
on here. Example being like this. I can simplify this. If you had a data point that let's say, of inflation. This is a good one. This is an easy one. Everybody knows this, right? An inflation track over many years. We have an anomaly where it comes up here. And so we begin tightening aggressively. And as we were coming down here, people were screaming for even more tightening. And Jerome actually aggressively loosened. The reason he did that was because he didn't want to overshoot this, and have this like craziness in trend. So what he did was he tried to arrest.
Nasdaq 100 extends gains to 0.5.
He tried to arrest this with easing to stop the violence of up and down, and some of these, are going down. Same thing was going on some of this data, but he did, because if we'd gone down here, would have created stagflation and a recession. The bears just want to see that happen. We got to keep tightening harder and harder. It's just they wanted a fucking recession, and we didn't get one. It actually arrested the data back up in here. The reason I'm saying that is because if inflation goes like this and you get this like anomaly, we're up, and then we arrest it, right?
Reversing earlier decline.
And then we have a little bit of a spike in inflation, and we're trying to like arrest that. We confluate. Well, we did this huge, did this huge tightening cycle over here. We should apply it right there. And it's the same as when we were coming through here. Why are you arresting this, and this data? So let's watch this closely right here. We were getting raging inflation. It's coming through the data right now. It's going to be glaring here shortly. But the question is, like, is it permanent? You know what I mean by that? Like, I don't want to call it transient. It's not transient either. It's the bigger question is it's the pipeline of molecules. You have like a gap in here. So you get this price spike in here, but does the price spike come back down? Does that make sense? Does that price spike come back down or no? Now there is one other problem here. We have natural inflation raging too. I'm surprised no one talks about it. Everyone's focused on the inflation from the war. There is a natural cyclical inflation that we're in the middle of as well right now. Larry Williams showed that in his outlook for this year, an inflation chart, and he said we're going to bottom in inflation in the spring summer of 26 and start ramping. And it will become a problem at some point down the road. I just don't think it's in our time frame right now. Like, I think we deal with the war inflation, or see if the market looks through it, like businesses look through it. There isn't too much greed, or you throw a hike up there to say we dealt with that. But I think that, like, even if you get like a cut at the end of the year, I think like next year, the year after, we're going to definitely go into a hiking cycle at some point. And I'll be honest with you, if we cannot go to like 2 or 3 points or whatever, or excuse me, 2 points or 0 points, like where the rate's at neutral, like the neutral rate is 0,
Shell CEO
that would be a really big feather in the cap. A huge feather in the cap of trying to break free from the 2008 stuff. But if we do another one of those style things, we probably get sucked back into it again at some point. Probably why Warsh is here too. Warsh is probably being brought in to combat that.
Expecting EIA natural gas change.
He's got his plate full. I don't know how long it takes. 2 years, 3 years. He's gonna be in a shit show. A world, like he's gonna be in the hot seat at some point. Once that, like when this bubble pops, it's gonna be the hot seat. Hold on here. Well, we're not at extreme greed yet. We were in fear when we should have been not in fear. What are they saying? A rally that drove stocks to all-time highs wavered? It didn't fucking waver. We're fucking like we're going right back up here for another all-time high in like minutes here. These fucking bears. It's like never fucking ending. Hang tight. I want to give me a second here, guys. I got a couple more. I got some spec growth for you today if you want it. You want to snort some spec growth picks? Post these in the Discord really quick.
According to Tasnim News, the claim by Al Jazeera reporter about the details of the traffic mechanism in the Strait of Hormuz is not true. Furthermore, Tasmin saying this morning, an Al Jazeera reporter in Tehran made claims about the details of the regulations for ship traffic through the Strait of Hormuz by Iran. A knowledgeable source stated that claim.
Dude, Hinge is still running? Fuck yeah. We called them out earlier this week.
Mechanism for vessels in the Strait of Hormuz are not true.
Oh, dude, Seagon. Slides still moving. And CRWV is still moving too. Some fucking dope ass picks in there. We've been picking these same tickers for. There's a couple additions in there, but few others are still doing well. What else do we have? We all know about NFP. We have consumer inflation expectations at 11. We have a couple auctions or mortgage rates, 4 and 8 week, 15 and 30-year rate. At 205, we get Fed diarrhea. 330 Fed diarrhea. 430 Fed balance sheet. But then on Friday, we get NFP, of course, and the U rate. And then consumer sentiment at 10. On Monday, we get existing home sales. That's going to be a bad number if you don't know. Existing home sales is going to be fucking terrible. We normally get something called spring selling season.
1 minute remaining.
It is not started. It's really fucking bad right now. I think that it's twofold. I think on the one hand, you have realtors that, no offense if you're a realtor out there, but like, it's not just realtors. Like when times are good, like when the economy is good, everything is honky dory, and then people that can't like get a normal job in a good economy, they become realtors, in my view.
10 seconds.
Then when the economy turns to shit, realtors get even shittier jobs. They like try to seek out. Watch out for this little bit right here, but
a build of 63 BCF, a build of 63 BCF, as compared to the forecasted build of 72 BCF.
There's like this thing with like realtors where like they want the accommodativeness of the Fed that they were used to for the past few decades. Started in 2000. And we're trying to normalize a higher neutral rate, not zero, but at like 2.5 or 3.5, which is what it used to be before MMT. And you kind of want that yourself too. You want a mildly restrictive environment. And I think the zeitgeist has grabbed hold of people, and not just the zeitgeist has grabbed hold of people. I count myself in this group of people. No one's fucking selling their homes still.
So this just did come out earlier, but just in case you missed it, we have put out the article about Trump's abrupt U-turn on a plan to reopen the Strait of Hormuz came after the backlash from allies. This article is from NBC. It's on the feed for those interested.
I'll look at it right now, see what's going on here.
US Energy Secretary Reich, speaking on Fox News, says we don't have direct dialogue with Iranian officials.
I'll read this to you here in a minute, but they're trying to create some doom here. This was known yesterday. They're spinning news that's stale right now, or this bear is. So, the reason I'm bringing this up is because you have a mix of the zeitgeist. And you have a mix of realtors wanting to go back to zero.
Right says, looks like
you also have realtors
400,000 barrels per day
that regurgitate zeitgeist diarrhea, low information people, and then you have the people that own homes or want to buy homes. They all have zeitgeist, like Main Street people. They don't know what's going on. So they're being filled in the air from realtors. But then people have their own experience too. And housing prices have been coming down drastically in most of the country. Now, real estate is very local. So I might say that to you, and you might live in a very small, not small, but a micro region of the U.S., and so your market might be booming still. Then you go like one other market over, and it's on fire right now. Now rents have stayed up, but what hasn't happened is no one's giving up their homes. We're running into that in Detroit too. I was trying to. I've come to a point where I need to, I think, rent a house for like 3 months or something. 3 or 6 months or so, I have to rent a home. I have to move out of my house for a little bit, and there's nothing available. Nothing. There's like nothing available here. Or the stock that is available is the bottom of the barrel stock, where I live. Now, this time of year right now, we're in home selling season, and you might think that's bad, but it's not. It's when like people start to age out or they're moving up, right? And we're still stuck in this nobody moving, and there's a whole bunch of reasons for it. It's like zeitgeist, and it's low information actors within this industry, but then there's this other part of it too, which no one wants to look at either, which is post-COVID, the ramp in housing prices, and not only that, but we went into QT. When the government releases money into the or creates money, right?
Would come from the energy department.
One of the negative effects of it is ruthless people know that you have this extra money, and so they want to pry it out of your hands, right? So when you're like blaming the government or blaming this or blaming that, like my wages went up from $10 an hour to $30 an hour. Where the fuck is it? Everyone's gonna like scramble to take your money away from you. So you may let's say you go from, not let's say this happened. Your bottom of the barrel worker was making $10 an hour. Your bottom of the barrel worker now should be asking for $30 an hour. I don't know if you know that, but I'm telling you, it's $30 an hour. Now, let's say of that $10, you were able to keep 3 of it for wealth. Okay, and now you're making 30. And so you're thinking, well, if I'm making $30 an hour, right, I should have $9 in wealth, right? Yeah, you should have $9 in wealth. You actually have a little bit more. You probably have like $10 in wealth, believe it or not. So you actually are better off than you were when you were making 10, believe it or not. But it's not noticeable. Because now you're getting this 10 here, but you're putting out $21, or you're putting out $20 in cost of living. And the 10 doesn't feel like 3 times $3. It feels like $3. Does that make any sense? Or no, sorry. It's like $9, but you made an extra dollar in profit for cost of living and all. Not cost of living, but like wealth. But you can't see it because the $9 acts like $3. If that makes any fucking sense, I don't know if it does or doesn't, but it doesn't translate well to how we feel when we're making that $30. Is the thing I'm trying to explain to you. And there's something else that's going on too. This is the last part I'm trying to get to here, which is like the grip that people have on their homes. I have a prime example. This house right here is a prime example. So I bought this house pre-COVID, and I didn't live in it, but I owned it. And
U.S. Energy Secretary Wright ends remarks on Fox News.
I was able to buy it at that pre-COVID price, so that's a big glaring thing, right? It's worth way more today. This house right here is way worth.
Says I see a strong.
6 or 7 times what I paid for it. I'm not kidding. 6 or 7 times what I paid for it. And now that's glaring. It's outside of the range, but that's what it is. And now here's where it gets crazier. So like when inflation rages, right? There's this mad dash to take all your money. It starts with greed. Normally you see it in services first. Then it starts to leak around. It'll get into like the inputs and stuff, and then it gets into the durable goods and disposable goods and all that kind of stuff at some point. And it switches from like greed to everybody has to raise prices because you can't like if you see let's say like McDonald's charges you 3 times for a soda. Eventually, somebody else with a company is paying for that soda too. They're drinking the soda, and they have to then pass that cost along to you, right? So
the Saudi Arabian government, in an interview with AFP news agency, denied American media reports about Trump's withdrawal from operations related to the Strait of Hormuz.
So there's like this like
Says the US dollar
it's like rats on a ship or something, the ship's sinking there, the rats are all going, they're all clamoring and climbing, and the same thing kind of applies to inflation. But there's something else too, which is when we get into the tightening cycle, it's not just the companies that want this money, this extra money that you have. Everyone wants part of it, and I mean everybody. So like your federal government usually gets involved in it. They'll raise your taxes typically. Your state, your county, your city, and where I live, they did that here. And they only did it for new home buyers. So if you don't do any major, if it's not your roof, you like do major like improvements that are increases the value outside of normal shit that you're doing. Like let's say I pull a permit for a roof or something, it doesn't affect me there. My taxes don't go up. Like certain things don't go up if I don't meet the threshold for my taxes to be kicked up. But one of the triggers for post-COVID, when they started this tightening cycle in my county, was seeking out this money, because you got to remember. If you're like a state or a county, I'm going to use the county. If you're a county government, you've got everyone making a bunch of money. You're making all these tax dollars, and then the tax dollars start going away a little bit. and everyone's high on all that money, including your government. And so then they start pressing to keep that money flow going, like we're still in COVID. That's still that loose policy. And so where I live, if you buy a house, a comparable house today, where I live, your taxes are going to be fucking ridiculous.
And that concludes remarks
So
from Fed's Hammock.
I have an incentive here to not sell. I have an incentive to not leave. I have an incentive to not want to roll into a much higher mortgage or mortgage rate, and then also because the rates want to get you too, and then more taxes. And there is no like viable or there's no rational, logical reason for me to ever move from this house, ever, or in these conditions. I should never sell this house in particular. I should retire into this house, even if I travel, even if I go places and rent a summer house. I should have this as my home base no matter what until I'm old and dead right now, under these certain conditions. And I can't be the only person, and the data doesn't support that I'm the only person thinking this. So there are still a fuck ton of people that are unwilling to sell or even buy for those negative conditions all over the country. It's not everywhere. Like there are places like Austin built a ton of housing stock. Housing prices came down in Austin. So it's not like that everywhere. There are some great deals and great places. Like as a matter of fact, if you're out there, like you want to buy a house, buy it in Austin. I mean, it's hot as fuck down there, but there are markets in the U.S. that are very good right now. My market's not good right now. My market just keeps going up and 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 up, and no one cares. And there's low supply here, so it even then artificially inflates the value of homes here too, even in the face of all this kind of stuff. So we have housing data coming out right now on tomorrow at 10 a.m. I don't know if it's in that data yet because it lags by 3 months, but I can tell you for sure right now that existing home sales should not improve. They shouldn't improve now, and they should get worse and worse. And the scary part is that this is the best time of year. Like this is the time of year where we wash people out. They go bigger, and no one's selling right now. Like nobody across the fucking board. And I don't know if it's a mix of all the fear and all this other stuff, money, taxes, cost of housing, all that kind of stuff. Yes, as a matter of fact, or not drives. What's funny is multi-family apartments are really cheap. It's fascinating right now. It's something really neat. Multi-family housing units have created a divergence in rental homes, and it shows the quality of living is going up. No one's willing to settle for a triple decker or a four unit building. So those are actually coming down across the board, across the entire country. So people are doing better than you'd think. They're unwilling to settle for. You need to get out up here right at some point. Just make sure you come off this as we pop up there, okay? We're gonna close that little gappy gap right there, and we're gonna pop and drop, okay? Don't worry, Daddy's here today. So,
Coast Guard says warn the Philippine side to immediately stop illegal harassment and smearing and inflammatory propaganda.
There are places for people to do that. There are places for people to if you're trying to save money right now, if you're having a hard go of it out there, like you're not jumping job to job to make the $30 an hour or better, you're left behind in all these different fucking things. There are places for you to get a house, or not a house, but if you're ever in the shits or anything like that, where if you're having a hard go of it out there, you're watching my show right now and you're like, I can't pay my mortgage or my rent, start looking at multi-family rentals. They're dirt cheap right now everywhere across the country. But that's also glaring, showing that people are better off than they say they are. And rents have gone through the fucking moon right now. So that also makes a statement too, which is the people that aren't buying houses, they're willing to pay that mortgage for an apartment or a house that's of quality. So you have a whole like people like stacked up that can't buy a house or don't want to buy a house or they think rates are going to come down. Also, there's also the crazy town. I'll wait for this. I'll wait for that. I'll wait for this. And they're getting left behind, right? So what are they doing? They're renting nicer places. You're not competing with a potential home buyer with better credit than most. Like most renters don't have good credit, and even like, or they have problematic credit. I used to be a landlord. Renters would think you wouldn't rent to them if you had imperfect credit. That's not true. Landlords rent to people with imperfect credit all the time. That's the point, right? It's not everybody, and there are people that don't rent for those reasons, but they're not the vast majority. Like 60 to 70% of renters have imperfect credit. But that's not the case anymore. Now you got renters coming in and they have great credit and they're just not buying a house and they're willing to pay the rent for the house. They don't have to get the taxes, and there's not a lot of stock available either. And there are a lot of people that don't want to do renovations too. And then you got to compete with the flippers finding those homes because they will try to seek them out off market, or they come right on market and they want the seller wants an easy close because it's probate or something like that. They just want the headache out of their hair, and you get cash in your engine like, hey, no inspection, don't put it on market, I'll give you your money. And so you got to compete with those people too. So there's a lot going against right now home buyers generally, because home sellers aren't selling. They're choosing to stay in these fucking houses. They're like paying off mortgages, then they're buying second, third houses with cash. You'd be shocked at the number of cash buyers in homes today. You'd be shocked. And you'd be shocked at the number of people that have paid off their mortgages as of today. And you'd be blown away if you saw those numbers. It's insane. Yeah, there's a lot of that too. I was just reading something else. A guy was talking about so there's if you're like below 60 years old, I think. So there's real boomers, and then the term boomers changed. It used to mean a generation. Now, if you're like over 23 years old, you're a goddamn boomer, right? Fucking 13-year-old's going to think you're a boomer if you're over 17 years old, right? But like the true boomer, I was just reading a discussion on it that was talking about basically all because of all of the PE and VC consolidation of nursing homes, that the generation just under the boomer, I don't know what the name of those people are, but they're dealing with their parents being fleeced, and so they don't want themselves to be in that environment to retire. So I guess I guess anyone that's like 40 to 60 that are dealing with parents being fleeced, that they're now telling themselves that they will only retire in their own home, that they're going to keep one home for themselves to retire in. Oh, that's a big topic right now too. Is that what it is, Gen X? I didn't know if like Gen X came. I didn't know if there's like a group before Gen X or not. I thought maybe there was one more group between the actual boomers and Gen X, but I guess not. No, they were before boomers. Yeah, the silent generation was before boomers. You have the greatest generation too, right? They were like, was the greatest generation an actual group, or is that just World War II veterans and stuff like that? I haven't looked at it in a while, like what generations are called. I know that they change it too as time passes, as they form which generation is which. I remember when I was a kid too, I was post, I don't think I was Gen X. I was like post Gen X, I think. And I even think that Gen X was did I just lose the stream? I think I almost lost the stream there. I remember when I was growing up, there was like a stark difference.
Inflation expectations forecast free spot.
I want to say like I was a little bit later than the class of 92, but I remember the high school class of 92 was a stark demarcation from kids from the 80s. I remember that. I remember like there was a stark change in these were all the kids that were like if you wanted a generation, it's probably like the high school kids in 1992 and forward was a stark difference in outlook in life and what they were doing in life. Kids weren't smoking anymore. They weren't doing drugs the same way. They weren't having kids the same way for a whole multitude of reasons. If you're like in that age group, like 1992 to 1998, I want to say, it's probably in my lifetime, probably the most, to today, probably the most, they probably had the best outlook on life. Like how awesome can things become? How great can we make the world? There was that group of people there. So what's up, Hepcat? How you doing, brother? Gen X is the silent generation, like the actual silent generation. And what about the yuppies? The yuppies were boomers, right? I think the yuppies were boomers too, right? Like the yuppies started out as hippies, but then they claimed that there weren't as many as people thought there were. It was only like 13% of the population were yuppies. I remember a lot of Democrats, my parents' generation. My parents are boomers, and I remember a real shift into like more conservatism from that group. I remember they were very liberal when I was young, but that might have been an effect of Vietnam and stuff. I'll have to think on this a little bit, because I know history gets rewritten, but I have to like recall this stuff, or what was my experience back then. So I come up here and pop this really quick. I see you guys in the pro channel. I haven't been able to chat in there for a minute. I gotta get through some of this information. I gotta get through some of this stuff with you guys here. Hold on. I gotta do today's catch-up day for me. I fucking hate catch-up days. I'm like a tomato. I'm like a baby tomato gets squished. Let's go back here in time a little, rewind this a little bit. Try to catch everybody back up. I'm not going to spend a ton of time on this today because of my voice, but I'm going to give you the broad strokes, okay? They're already pumping out narrative again. The narrative pump is going again. God, they just can't stop. Must have content. If it bleeds, it leads. You know someone's raging right now out there. There's a bear out there screaming.
In 5 minutes' time, expecting New York Fed 1 year inflation expectations forecast 3.5%, prior 3.42%.
All right, we're going to start right around here. This is a good time.
And a reminder as well, in 5 minutes' time, we're expecting Trump meeting the Brazilian president.
Everything is, so we're going back to Tuesday right now. Okay, this is Tuesday. Post.
We'll get the video up for Trump meeting the Brazilian president on the feed for those shortly.
You want to get out here if you don't know. You want to get out here for a pullback. Everything is squeezing, but not everything is confirming. This was on Tuesday, remember. Upside volatility, aye. Agreed. Retail punters, retail sized call buying under 10 contracts is surging. I already showed you that on Tuesday. I showed you that chart showing you that retail was not done rolling higher. Or not, then no, sorry, that's not rolling higher. I mean call buying, excuse me. Okay, what else we got here?
We have posted the video on the feed for those interested.
Let me read this to you. You're going to like this one. The Petrogas dollar. Said 3 people sent me this Richard Medhurst Petrogas dollar piece this week. I read it twice even.
Lebanon and Israel to hold talks Thursday and Friday next week in Washington.
How the U.S. pulled off an armed robbery of the world's energy supply and created the Petrogas dollar. A forensic investigation into how Washington leveraged the war in Iran to replace Nord Stream saved the dollar and established total command of the world's fuel from the Arctic to the Indian. It's tempting to believe that the U.S. war machine is finished. Military Iran have indeed dealt the U.S. the worst humiliation in modern history, one I covered in clinical detail. But in the background, Washington has been quietly carrying out an armed robbery of the world's oil and gas supply. All of it. No shit. This is someone else discussing this argument. There's a lot in there that I feel is correct. The chronology of Levantine Basin's deals, Cheney's 2001 national energy policy, the roughly $35 billion of Chevron contracts signed across Israel, Syria, and Greece and Cyprus in the past 6 months. None of that's in dispute. The piece is on facts broadly accurate. What I think, though, is that the reading of those facts is faulty. Some history. Whew. Fuck. I shouldn't have done that just then. So we've got equal legs right here. Can you see that? We have equal legs right here. We're likely going to pop and get a drop to go higher up here. Look at that shit.
1 minute remaining.
Damn.
The dollar yen down 0.1%.
There's R1, 736.34. The target for today is 738 and change, just so you know, a couple more dollars. There's a lot in there that I feel is correct. Blah, blah, blah. What I think though is that the reading of those facts is faulty. Some history. In 1944, Bretton Woods pegged the dollar. Nice place to ski, by the way. Bretton Woods
3.64%.
pegged the dollar to gold and made it the world's reserve currency.
5%.
In 1971, Nixon unpegged it.
Expected inflation 3.6% versus March 3.4%. April 3-year head.
Voice news disconnected.
The New York Fed one-year inflation expectations are actually 3.64. The forecast was 3.5. Previous was 3.42. So they're looking at it as pass-through at gas and the war. In 1944, Bretton Woods pegged the dollar to gold and made it the world's reserve currency. In 1971, Nixon unpegged it. 3 years later, Kissinger, negotiated the Saudi arrangement that pegged it to something else, oil. The petrodollar was born. Everyone needed oil. Oil was priced in dollars, thus everyone needed dollars. Medhurst's thesis is that the same trick is being repeated with gas as the new anchor. Petrogas, some architecture and a new commodity. But gas is not oil. Oil is fungible at planetary scale. One global market, one rough price band with quality differentials. Tankers go anywhere where there's a port and a refinery. Every country needs it. Every industry uses it. Almost every modality of transport runs it. But not the U.S. He doesn't say this here. The U.S. is not pegged to oil. It stopped being pegged to oil when we did all this fracking. But something else happened too. We also did gas fracking, right? And gas isn't oil. Oil is like fungible at a planetary scale. One global market, one price, right? Everybody needs it. But gas is regional. Like, it's not easy to put natural gas on a tanker and ship it around the world. It's very expensive to do that. LNG requires specialized liquefaction terminals on the export side, cryogenic tankers in transit, and regasification infrastructure on the import side. Each piece takes years and billions to build. Pipeline gas is captive to the geography of the pipe. Henry Hub, TTF, JKM regularly trade at multiples of each other for what is nominally the same molecule. In 2022, European gas hit roughly 25 times the U.S. price. That's the market telling you that there is no single global gas market, just regional ones tethered by expensive bottlenecks. Anchoring a settlement currency to gas isn't a step up from oil, in my opinion. It's a step down. Less universal demand, less liquid market, more infrastructure dependency, narrow counterparty base. If oil was the commodity that justified the petrodollar's reach, gas cannot replace it without shrinking the regime it's supposed to anchor. Then there's what's been happening to the dollar itself. The moment Western powers froze 300 billion of Russian central bank reserves in 2022, every neutral reserve manager on earth received an unscheduled lesson in what safe actually meant in practice. That lesson is still being absorbed, and the absorption is showing up in central bank gold, buying at multi-decade highs. By the way, gold should rip. If you don't know, if I haven't said that enough, gold should start moving here up in a big way. Or I think it's already has been. It's starting to gain some momentum to go higher. That lesson is still being absorbed, and the absorption is showing up in central bank gold buying at multi-decade highs. Parallel payment rails being onboarded, sovereign treasury holdings declining year over year. None of it is dramatic, but all of it is compounding. So the actual picture Medhurst is painting a fading anchor. Listen to this closely. A fading anchor of the oil attached to the dollar. Now, I've already told you that. I am disagreeing with that guy that I'm reading to you about and the guy that's interpreting it. I think they're both wrong. Ish. But so the actual picture that Medhurst is painting a fading anchor, oil to dollar, being half replaced by a structurally narrower one gas and dollar sitting on top of a settlement currency that's slowly losing the trust required to function as one in the first place. That's a regression on two axes at the same time, not a strategic plan. The successor isn't oil and dollar. It sure as ain't a gas dollar. By elimination of every other narrative, it will come back to gold. I agree with that. It'll come back to gold. And not only that, you have to remember, right, that the U.S. was never or has not been a manufacturing superhouse or powerhouse since 1978, and it's slowly eroded. Its ability, the U.S. is slowly eroded. Not just the U.S., like the U.S. Anyone under the petrodollar basically handed off all their manufacturing to third world countries, right, like China and places like that. And though we need new countries to do that, or the U.S. needs to do that, right? So we need our partners to do the manufacturing, and probably the U.S. to do that manufacturing. And the value of the dollar is likely going to be tied into that as well, even though no one is discussing it. You guys all get out here, yeah? In that big orange bar up there. We'll wait for a 1, 2, 3 corrective move over here and see if we can get back on it again. Come into 12 p.m. here shortly. Let's move this over for 12. Put a big fat green bar in here. I don't think any of these guys know this. I don't think most people know this. It's definitely not Zeitgeist. And you've heard me talk about this, right? You've heard me say that the petrodollar is no longer. And the discussion is only beginning right now that the petrodollar is no more. Hold on here. So none of it is dramatic, but it's all compounding. So the actual picture Medhurst is painting a fading anchor, right? That's a regression on 2 axes at the same time, not a strategic plan. The successor. Am I losing the stream here? I might be losing the stream here. The successor isn't oil and dollar, and it sure as hell is not gas and dollar. By elimination of every alternative, we'll come back to gold. Let's start with Russia. That's where his documentary opens. The most severe logistical disruption in modern Russian history. 40% of seaborne export capacity disabled. Production cuts of 300,000 to 400,000 barrels per 400,000 barrels a day. Not interpretation. Those numbers come from OPEC's monthly report. The serious report, which tracks vessel movements rather than quotas, has Russian seaborne crude exports flat at 3.5 million barrels per day in April. The Pacific terminals that got hit in the spring strikes are fully recovered by now, but the Baltic ports kept unloading. Whatever the bombing campaign was supposed to accomplish, it has accidentally functioned as a renovation program. The 300,000 to 400,000 figure measures voluntary discipline within OPEC quota framework. It is not a damage assessment. Russia produced slightly less in April because the cartel asked them to, not because there's a NATO destroyer parked outside of Murmansk. What did happen is that Europe outsourced the demand. They sanctioned Russia for the 20th time now, I guess, because the previous 19 were so successful. But because even Europe still needs oil, they then turned around and bought the exact same molecule via India and Chinese refineries. I remember that. Who bought it from Russia at a discount and most likely in local currencies, and that's where all that shadow tanker shit came from. Plus, they sold it at a premium to Europe. India has their hands all over this, by the way. Plus, they sold a premium to Europe that sanctioned the exact same oil. That's not good for Europe. Iran tells a similar story. The piece argues that the blockade is starving China of its third largest oil supporter. Tanker trackers reported on April 24th that Iran exported more oil in the first 3 weeks of April than in the entire month of March. The blockade has tightened since. Wall Street Journal's documented loadings dropping in the second half of April, and Project Freedom formally launched at CENTCOM this morning with 15,000 personnel and over 100 aircraft. Screws are turning, real consequences are landing. But Iran went to this war producing 1.1 million barrels per day at $47, though most of it production has run around 1.5 million at $110. I think Trump is pissed right now that he did not receive a thank you card yet. Another argument landed on Saturday, which is after Medhurst's piece landed, but it doesn't fit the frame of the article, so I doubt it'll be added. Uh, every sanction tightens the parallel system. Every escalation removes another counterparty from the dollar rails. This theory isn't some 5D strategic genius. In adaptation, metabolic, Washington swings at whatever part it wants today, and that system adapts. For 13 years now, Iranian oil has flowed to Chinese teapot refineries through Kunlun, settled in RMB, entirely outside SWIFT. Iran cannot easily spend the accumulated yuan in dollars, so it likely converts the surplus to physical gold via the Shanghai Gold Exchange. So Iranian oil, yuan, gold. The loop has been running since the year Obama was reelected. It is now formally protected on the Chinese side by a blocking statute. The PBOC has bought gold for 17 consecutive months. Oil official reserves are over 70 more million troy ounces. The unofficial figure is widely assumed to be substantially higher, given the Chinese domestic mine production since 2000 alone mined about 8,150 tons, exceeding the entire state's U.S. Treasury or stated U.S. Treasury holdings. China's U.S. Treasury exposure has fallen from 2013 peak of 1.3 trillion to 693 billion in February of 2026. There's another reason that this is happening, because China does not want to lose their money if we go to war with them. While we're on the subject, U.S. Treasury carries its own gold holdings in the books at $42.222 per troy ounce, a statutory price last revised in 1973. Spot is $4,800. The mark-to-market gap is roughly 1.25 trillion, or said differently, about 3% of its national debt, or even more differently, if they sell everything, they can run the U.S. government for about a week and a half. Every $100 that gold rises adds $25 billion. I have no idea whether anyone in Treasury has noticed, but I've heard a lot of chatter over the years about reevaluating this gold hoard. That's a misnomer there. There's a reason why it's valued at that, and I forget how to describe it to you, but I know a little bit about this. And they're not supposed to. I'll look that up and see if I can. He doesn't know what he's talking about here. But neither do I. Or I can't recall that I know what I'm talking about against what he's saying here. The mechanism that I envision instead of a gas for a dollar, not an official US Treasury term yet, is, as I've said it many times, and mainly in comments, internally in a country, the currencies stay fiat. We, the plebs, don't get to transact in gold and spend 0.03 grams of gold on a gallon of petrol or so. Would be nice, but that's a pipe dream, in my opinion. Whatever your local denomination is, be it euro, lira, franc, pound, whatever local political pressure on tax laws or domestic monetary systems you have, they're all localized. However, cross-border settlements will likely migrate to gold, not by design, by necessity, by elimination of all worse alternatives. Gold is the only other major asset whose ownership cannot be canceled by a remote. It's a destination by exclusion, the asset everyone ends up at after all the others have been removed. The monetary system is moving, but it's not moving to Washington. The third variable is Trump. The thesis requires you to believe that the same administration that fired its own Navy secretary 3 weeks ago for not building ships fast enough is simultaneously executing a coherent 25-year plan to reorganize global energy markets and replace 50 years of monetary structure. Trump and the 25-year strategic patience are two phases that have, to my knowledge, never previously occupied the same sentence before. That's another falsehood. It's not just Trump. This reorganization has been in the works now since at least 2015, if not earlier, 2005, somewhere in there. This has already been, the wheels of this have been in motion for a long time, and you can see it in the data, regardless of who the president is. So he goes on to say, don't get me wrong, the petrodollar won't be dying tomorrow. He's false. That's wrong too. The petrodollar's been dead since like late 90s, early 2000s. The U.S. still has just because you call it the petrodollar doesn't make it so. The U.S. still has the world's deepest capital markets. And this is where it gets important. You're changing the entire economies of the West here. And that fucks with the petrodollar as well and what it's pegged to. The U.S. still has the world's deepest capital markets, the most traded currency, and the only treasury market with anywhere near the absorption capacity to hold global savings. Reserve currency status takes decades to erode. The Bank of England held that status for over a century before the dollar took it, and at no point during the slide did anyone in London publish a piece announcing the handover. I want you to remember that when London gave up the dollar, or their dollar, right, or currency control, it wasn't oil. It was what? Manufacturing, right, and import and export power, right? That's truly what it is. So if the U.S. maintains control of the high seas, the U.S. determines its own fate in oil. We have plenty. One of the world's largest supplies of natural gas in the world in the U.S. There's a consolidation going on right now of what makes currency valuable. And so when you see like China removing its debt from the U.S. and removing its savings from the U.S. in case of war, what does the U.S. need to do to keep the value of the dollar? They have to wrangle in all their partners. They have to bring manufacturing back to their true allies, and they also have to control gas, right? Oil, gas, and also manufacturing and distribution of that manufacturing, and maintain control of the high seas. And that's how you revalue the de-dollarization. Medhurst is right that there's a transformation underway, but I strongly believe that he has the direction wrong. All this chaos ain't producing a stronger empire. I disagree. I don't think this guy realizes that we are creating a stronger empire. I don't think most people realize what is happening in the United States of America. We are literally building out right now an industrial infrastructure that we have not seen in fucking decades. And literally no one wants to accept that. No one wants to accept that. All of this chaos isn't producing a stronger empire. It's producing a more fragmented monetary architecture, and gold is starting to fill the gaps the dollar used to fill. I do agree somewhat to this with the gold filling that structure. He's got one thing wrong where he talks about the Treasury reserve should be revalued. There's a reason for that. And I forget what it is right now. It was explained to me once before, and it was very complicated. It was not really very complicated, but it was hard to grasp. A hard to grasp concept. But then once I figured it out, it was like this means nothing. It's still valued across the world at that price, but well, I'll try to find it for you. At any rate, that's a piece that I wanted to read to you about gold. And the reason I want to read that to you is because gold should start running hot and heavy here, if it hasn't already. I haven't looked at gold this morning. I looked at it yesterday, but I have not looked at it today. So that's the piece on gold. So is the petrogas dollar a symptom or a strategy? I'm going to tell you right now, it is a strategy. And it's a strategy that's been in play for much longer than these people think. And it's literally like, it's kind of like if you were to look at it from like England and how they controlled the world's currencies. They control what did England control? They controlled the what? They controlled the imports and exports of raw materials, commodities, that kind of stuff, right? They controlled the sea. They controlled the manufacturing, and they taxed when you manufactured somewhere else, right? They taxed the U.S., right? For raw goods and manufactured goods. So if you can maintain that with your partners, or bring that back in so you don't lose it, right? Like they did, right? They started giving other empires their own destinies. India, prime example, right? And so the U.S., if they were to fall in that trap, could have a problem, right? And so the U.S. has to almost revert back. It'd be like England, instead of England moving. I don't know what to call it, a stereo, but instead of England pulling its tentacles out from everywhere, they're reestablishing them. It'd be like England going back and saying, no, not just yet. We're going to take charge of all these other countries. We're going to go to war over it if we need to. And we're going to pressure all these countries that are actually against us. Who's against us? And China's like, I am, right? And Russia's like, I am too. And the U.S. is going, well, okay, cool. We're going to, what? We're going to take all this back. We're going to, and then we're going to assert our authority everywhere, right? You see U.S. warships all over the Middle East. You see buildup of forces all over the place, including Europe. If you're from Europe, do you even know that they're reinforcing bridges? They're reinforcing roadways for U.S. troops to march through there to fight Russia. Happened like 2 years ago. It started happening like 2 years ago. So likely under the covers. I think I've said this to you too, this next part, which I've said to if you fuck with the U.S., they're going to meet you. Now, whether they should or shouldn't do that, I don't know. I'm not here to like tell you like maybe the U.S. shouldn't do this, or maybe they should give up the grips and let China take over, or whoever. What I'm going to tell you is what they're going to do, and they're not going to do that. The U.S. is going to they're going to meet you there. If you threaten the U.S. with a valid threat, they're not going to back down, even if they lose. They're going to meet you there and want to fight you, believe it or not, or knock you off your block. And a lot of that money and power, like, is like a lot of this all stems. The fucked up crazy part about this, like, this isn't even conspiratorial. Like, if you think about all that money and power that ran like the East India Trading Company, and powered and fueled the power that England had. All that fucking power and money shifted to the United States. It funded our revolution. It funded our Civil War. And it funded the build out of the second and third industrial revolution in the U.S., which was 1930 or 1830s to 1960, and then the turn of the century. And then, of course, we had World War I, World War II, and that same money and power that had shifted, right, came back with the U.S. defending Europe. So all that power and money is still here right now, all these years later. And they learned their lesson with the East India Company. Like, these are generational people. They're generational. These people have like multiple, like, I can trace my history back all the way over to England kind of shit. You know what I mean? I don't want to name some of these names because I actually know some of these people. So I'm not going to say it on the show, but but I don't think that most of these pundits on the petrodollar realize what's really happening. And they're looking in the wrong places, or they only see parts of it, but not all of it. It's been so comfortable. Say, petrodollar, throw it off the fucking cuff. I'm just going to brag petrodollar. It's been acceptable for decades to say that. To tell someone we're not pegged to oil anymore pisses everybody off, because it's an easy out, right? Petrodollar, bro. De-dollarization, bro. Like, you guys don't have any fucking clue what they're doing. It's gonna hit you like a fucking shovel to the side of the fucking face. I think China's aware of it, but they're not gonna openly discuss it though either. See what happens here. Come in. If we can get some more buy flows here at 12 p.m. Now 11:30 right now. 11:32. You just see they're trying to sell into this early. We'll see if they're successful. No, by like 12:30. Now, gold. Right over there so you can see it. Just want to see where these buyers are. They're right down here. So you've got these buyers right here. This is your second one right here. So we're just going to watch this one, see if they come in. Sorry, I haven't been drinking coffee. I'm like, I don't want to put anything down my throat, except for like ice water and shit. I'm gonna drink some right now. I'm having a little caffeine detox this morning. I can get a robot for $600 a month. That's cool. Robots are going to enter homes at $600 a month. That's dirt cheap. ADP employment report signals biggest job addition in 15 months. I told you that would be the case. Market-based inflation gauges warn of a longer oil shock. Yeah, every time, as long as the Strait is closed, it's gonna kick us down the road, kick the can down the road, right? The most hated tech trade is waking up. This is Wednesday at 12:30. Let me just read this really quick for you. China tech is starting to wake up again. High beta speculative indices are breaking above major resistance levels. Keep an eye on Chinext, China's speculative index. It's pushing higher and squeezing. It's like magic with that green bar down there, right? Was that a little green? Oh, are they going to buy this or no? Star 50 is moving right now. CamberCon is moving. That's Chinese NVIDIA and KWeb. Keep an eye on KWeb. Let me just look at KWeb really quick. I think I brought it up earlier this week, but maybe I didn't. Maybe I didn't spend a lot of time on it. Or maybe I said I was going to bring it up and I didn't. Oh, it's already moving right now. Keep your eyes. If you're looking for something, if you think that like the U.S. markets are a little overdone right now, keep an eye on KWeb. If you want to take a look at it, we can really quick. So here's KWeb. You know, looks like Bitcoin, doesn't it? Down, 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 down. Just looking for the signal to break out. Has a huge confluence of triggers here. Let's check this on a day really quick. You see this accumulation that's going on back here? Check out that accumulation on a weekly. That's a sexy series of higher lows. Just starting to get going on Daily Velo right now. Keep an eye on KWeb. If you've never traded KWeb, you can also look at the stanks that are lit like C and stuff. You can check out the stocks that are associated with this. The highest U.S. Publicly traded U.S. stocks from China that are built into this index. But KWeb, keep an eye on this one for a big, huge upside move in here. It's a lot of room in here for a rotation trade. Just be patient in here. Don't do anything. You know the drill. Just hang out here. Goldman clients are furiously buying USD JPY after every BOJ intervention. That's the cat shit wrapped in cat chip trade for U.S. markets to go higher. That's impacting this market right now, too, the intervention in the USD JPY. The entire market is chasing the same trade. Treasury funding, no changes to auction size. Bessing keeps at least in forward guidance. The dynamic of vol crushing inspired by Iran may be a deal, and the earnings crushing is a tide that is hard to fight. Dealer positive gamma and index and equity should also keep the buy the dip intact. 7350 is the clear overhead resistance for today, as shown in Trace. The resistance is but one heavy positive gamma cluster against a map that shows large positive gamma across all nearby strikes. There's currently no clear support level, but we anticipate zero-day players to come in near 7,300 to offer some put selling support. False. False. We're going to fucking trade like 738, 740. It's going to be stupid. They know what they're talking about. We're going to trade like close to 750. Spot gamma is wrong. As Bloomberg macro strategist Michael Ball outlines a positive feedback, he's wrong too. I think I haven't read his shit yet. Strong results. Bloomberg macro strategist Michael Ball outlines below a positive feedback loop fueled by AI earnings optimism and falling volatility would reinforce flows in a SP 500 rally. He might be right. Strong results validate the AI capex theme and push individual stocks higher, which invites more buying and call demand. That then forces dealers to hedge the move, which reinforces the broader rally. Yes, they're chasing right now. The latest catalyst comes in the form of AMD results, which showed data center spending is becoming fucking huge. The options market is chasing the earnings validation in a very specific way. Micron, Intel, and SanDisk traded more call volume than SPY on Tuesday per spot gamma. That's an extreme signal that traders are targeting the AI infrastructure chain directly rather than expressing broad index level biz bullishness. I already told you that on Monday. I told you that on Tuesday. Stock pickers coming out in force. Everyone wants to get on board. Is this the all boats rise together? Where are we in the end of the fucking bubble? Is it 2 years? Is it 1 year? Is it 6 months? Is it 3 months? So everybody's going to go up at the same time. Must have exposure. There's a risk the trade is getting expensive with large realized moves and implied volatility in the favored AI names and higher costs for the further upside participation through options. Yet that doesn't make the SPX setup bearish. Agreed. Dealers gamma holdings for the SPX remain positive, which should reinforce dip buying into the option expiry on May 15th. Listen to this closely. May 15th. Selling of zero date vol should help compress intraday chop, reinforcing the more linear daily moves seen recently. They're saying May 15th. That might be wrong. Oh, might be right. Okay, so they're okay. I see what they're saying here. Yeah, May 15th because no. Oh, it fucking falls. God damn it. That's why. They're saying the 15th, but it could be the 19th. Expiration falls past OPEX this year. Let me just look at this real quick. Yeah, that's why. We have the inverse this month on VIX. VIX is on the 19th due to the Juneteenth holiday. All right, I got it. So, yeah, your first chance would be the 15th, but it could take into the 19th. So, first chance of unwind, 15th. Real chance of unwind, 19th. Mm. You know, this would be fascinating to see, like, the unwind from, like, SanDisk and the unwind from these individual tickers should be fucking epic. It might not be epic in SPX, but it should be fucking epic on those individual tickers. Anything that's raced higher and higher and higher could get whipsawed. But if that money rolls into something else, we're good. And we also have NVDA and Avgo in May, right? 20th? Is it May 20th? So what you can see is like the money leave all these other reports into Vixpiration and OpEx, and then all that money funnel over into NVDA and Avgo. And that could help hold the market up as well. I'll look more into this and try to get some dates for you, but that's what I see. It says, yeah, that doesn't make the SPX setup bearish. I agree. Daily gamma holdings for SPX remain positive, which should reinforce dip buying into the option expiry on the 15th. Selling of zero-date vols should help compress intraday chop. Iran tail risk is faded in market pricing with oil dropping sharply Wednesday. If geopolitical worries ebb further, SPX support is likely to shift from single stock acceleration to vol compression. VIX has fallen toward the lowest level since early February. Less demand for geopolitical hedging will give traders more room to sell vol, which would likely create supportive Vanna flows and a further melt up in SPX. Yeah, and if you roll that fucking money from like all that shit into NVIDIA, NVIDIA will carry the fucking market straight up into, post May 20th. You figure 6 weeks, or anywhere from 2 to 6 weeks. If they're buying fucking calls and an NVDA and they're chasing it and NVDA goes fucking moon, the market should stay up just fine. Less demand for geopolitical hedging will give traders more room to sell vol, which likely, goddamn it, vol Wiz is going to be pissed. Likely create supportive Vanna flows and further a melt up in the SPX. Fucking banks are going to have to say they're going higher than 760 this year. I think that's funny. And that didn't come out until yesterday. So they were late to the party too. So all these guys were fucking late. These guys were all on fucking crash shit over the weekend. And they're late again. Peace deal or not, market has inflation written all over it. Agreed. It can be dealt with, though. The Zeitgeist disagrees with that, but that's because they listen to that crap. Zeitgeist cannot be trusted. It hasn't been trustworthy in some time. You can just look at Michigan consumer sentiment. It'll tell you all you need to know. It all changed during COVID. As good as it gets. Stocks are partying like it's 1999, literally. Nope. It's like 1998. Well, if it could be 1999 if you count 1999 and 2000. Yeah, you can make that argument. So suddenly it feels like equities are living in the best of all possible worlds. The Middle East conflict has taken a sharp apparent turn for the better, sending oil prices tumbling and taking bond and stir yields with them. Almost all of the year ahead Fed tightening that we discussed is already gone. Meanwhile, the AI earnings backdrop almost literally couldn't be better. AMD, the latest chip stock to knock the ball out of the park. It almost feels too good to be true, which may send a tingle down the spine of skeptics for understandable reasons. We have written about how extreme the move in semis has been, in many cases not seen since the dot-com bubble. However, BTIG's Jonathan Krinsky explains in a brief note today, in some ways, however, the 2026 move is even more extreme. That's not true. You have to remember that the dollar has been devalued since then. These fucking people. Christ. Hate these fucking bears. If we look at the top 10 performing NDX stocks in 1999, they were up an average of 559%. The top 10 in the year leading up to 324.00 are up an average of 622%. The top NDX names over the last year are up an average of 784%, beating the average of 1999, as well as the year prior to March 2000 peak. These fuckers are trying to fucking compare the same shit. Fucking hate these guys. No offense to you if you're a bear out there. Compare that to present day and look at the top performing NDX stock over the last year as SanDisk, not rated, up 3,960%. The best rolling 52-week return for QCOM during the entire .com bubble was 2,600%. So SNDK is beating that by 1,300 BPS. Interestingly, the second best stock in 1999 was SanDisk, up 581%. The best 52-week rolling performance for stocks in the .com bubble was 264%. So you could say we aren't quite there in the metric at 145%, but it's certainly closest we've seen in the last 26 years. The issue in the .com bust, of course, was that fundamentals didn't support the price, and stocks ultimately lost 84% from 2000 to 2002. Data centers are up 230%. The memory names are up 450%. While fundamentals are clearly better today, and we don't think we see anything like that decline, I disagree. We could see a greater than 25 to 30% correction that would only leave stocks at its 50 DMA. I'm going to warn you guys of something. Now, I am not a fucking bear, but I'm going to tell you right now, whenever this fucking bubble pops, that shit is all getting taken down to the depths of hell. They're going to take that fucking trade back to where they fucking bought it. I promise you. And there are going to be losers in that trade. This is about building out AI. That's all it's about. And there are going to be a lot of fucking losers that don't take their money. We'll be here with you to explain to you when we are rolling. There will be no black swan. I promise you. I will turn this fucking show off for the rest of my fucking life if I'm wrong, okay? I'll shut it all down. Stocks often top on good news. While we have been clearly too cautious in the group of late, today has all the markings of a swing high in semis given the string of good earnings combined with the positive news out of the Mideast. The question is, if we do get a meaningful pullback in semis, can other parts of the market actually pick up the slack? The answer is yes. I can tell you that right now. That's what happened. That's what happened in the first internet bubble. There were two things that happened. We got the late bubble IPOs. We have not yet had an open AI IPO. If you want to look at when the whole boat rises, you want to look for that IPO. That IPO will likely go public right as their analysts think that the rest of the market is going to lift everything up. And it's going to be a kick-ass ride for OpenAI. OpenAI is going to fucking moon with everything else. So the question they leave in this article is, the question is, do we get a meaningful pullback in semis? And can other parts of the market actually pick up the slack? The answer is yes. Historically, at least, the answer is yes. Now, the pullback, we have to talk about that. I spent some time with you showing you that when we do this here, right, there are going to be sharp declines. Big ones, like 3, 5, 10, 15. You're going to see that happen. It will be like violence to the downside, but you have to keep your seatbelts on and add until we get down, or until that, it should look like this. I showed you this earlier in the week, so we're grinding higher now. We're going up again. Flows are here. It's good. We're partying time. We're going up. What we want to be watching for is if this is price here and price is going up, like a so, and it starts stalling, right? And I'm going to show you two different things here. What we've been encountering, is like this like divergence here on monthly trigger. And the monthly trigger is like coming up vertical, right? Coming up vertical, but it's not flattening with price. Like it's not flat. It's vertical. And what's happening is the stank market then starts making its way higher. We get this new separation going on. So what we want to be looking for is something more like this. I want to show this. So what this should be looking for is like a stall, and you want to see the monthly trigger flatten. We haven't seen that. We haven't seen that at all. So we haven't seen this. So if we haven't seen that, yes, the market can pick up the slack, 100%. As a matter of fact, I think in 1998 we went all the way down to the monthly trigger, just barely missed it by a hair, and then started going straight up on a double back or a back test on the low that was on that monthly. Then we created more separation again. The bubble continued higher. So, do you get a meaningful pullback in summies? Yes, it should be violent. But then the last question is, can other parts of the market actually pick up the slack? Yes, I think yes. It's what we did in 98 as well. The entire market started racing up. It was crazy. It was just like everything went up, every fucking thing. If you couldn't pick it, it was like throwing a dart at the board with balloons all over it. If you missed, you really were bad at what you were doing. Go over this one right here. Well, I gotta check something here. Ooh. Keep an eye on Whirlpool. They're not there yet. But start watching them. They just got equal legs here. Let's go look at this one really quick. Check this out right here. Look at this Whirlpool trade. This is on a weekly. Let's go look at this really quick. Oh, we're going to look at this together. They just gave back their 2020 finally. They just gave it back just now. Keep an eye on Whirlpool. It's WHR trading $47. This fucking stock's been here fucking forever. $19.68. You guys remember the collapse of GE? It was like 2017, right? They said it was never coming back. That shit came back, didn't it? There's a new low right here. But see this right here? Like this is going to get a buyer, and here is going to get a buyer. This is 12 bucks, 29. I'll look closer at this, but you know, you'd expect them to buy $37, I would say, 37 bucks. It's trading 47 right now. It's getting close to a buy. This is 2012 lows. And we're cleaning out right now 2020. Look at that. This is the March 23rd. This is the entire trade. Mark my fucking words, okay? You see this right here? This is the 2020 trade for Whirlpool. When this bubble pops, it's going to be the same shit. This is the entire 2020 trade coming back to completion right now. Whole fucking thing. Like a big old rainbow. Look at that. Accumulation and distribution. Classic. Keep your eyes on this one. This is a generational dip buy. You know that, right? It's Whirlpool, man. They make fucking appliances. Keep your eyes on this trade right here. I mean, who doesn't want to buy Whirlpool? Okay, so we're coming in at 12 p.m. right now. There are worse companies you could own. Bring these over here. Let me just check the hour really quick. Now that hour's still good right there. We're good. So make sure we're still good here. We did get a new high up here, so this should be good. We're implying that we're going to hold this. We did get the high on the top side. Keep your eyes on Whirlpool. I might have to add that to my portfolio. I might have to add that to like fucking Thinkorswim or something, or to my Schwab account. I'm going to buy that Whirlpool. Just a heads up out there. Not yet. I'm going to set some alerts on it. I'll give you guys a chart on it, okay? I'll chart out Whirlpool post in the Discord. But start watching it. I'm not going to talk to you about HY yet. I wanted to, but I'm not going to talk about it right now. I gotta talk about this later. We're going to look at something else right now too. And I already talked to you about this, about KWeb. That's like KWeb is like, it's not just KWeb. There's a few indexes. If you're looking for the AI trade to expand overseas, KWeb's fine. There's a few others. I think I talked to you about them already. I'll give you a few of these right. I'll go over them again. Write this down at home. You want to look at HSTF. TECH. And then KWeb. And there's some other stocks in there too. Let's see what they do here at 12. We're looking for the next dip to buy at 12 p.m. Same setup as earlier over here. Be patient. How many more sigmas does the semi-cycle get? As many as we fucking want. More than you know. I got a good one to read to you here. Record-shattering call option activity sparks Goldman partner warning of market's semi-irrational chase mode. Get it? Semi-irrational? Semis? After yesterday's unprecedented surge in options activity, top Goldman trader Brian Garrett highlighted that the SPX traded a record-shattering 23.3 trillion notional calls yesterday, with almost 60% of the SPX option yesterday being a call. The tech rally continued with SoftBank surging 18% in Japan, catch-up from the week-long trading holiday, with Goldman's one-desk head Rich Pravorsky describing the U.S. markets as being, quote, in full-on spot-up, fall-up chase territory now. The franchise turned better to buy, and investors continue to add exposure across the AI complex. Overnight, the XAI Anthropic development was probably the most interesting. One interpretation is simply that demand for high-end compute remains extraordinarily strong and the ecosystem is becoming increasingly interconnected as companies optimize utilization and access to capacity. As another is that the market for AI infrastructure and inference is broadening out, with additional scaled participants emerging alongside the hyperscalers. Oil saw a huge correction yesterday at the MOU line, or headline. The reported 14-point plan contained some fairly significant Iranian red line concessions, including the removal of uranium from the country in a 20-year enrichment pause, elimination of underground facilities, all of which I would have to assume were difficult, impossible starting points. Equally, the wording around fully reopening the strait still feels somewhat nuanced when IRGC-linked messaging continues to imply that passage would remain coordinated through defined routing structures. Iran is expected to respond today, and my modal view remains that negotiations continue rather than a clean acceptance, though the overall tone from Tehran has arguably been more restrained than many expected. I think I posted that on Twitter, right? It's like, does anybody have the 3% priced in for war ending? I think they posted that on Sunday, Monday. I don't remember. Sunday, Saturday, Friday. Equally, with the wording around fully reopening the strait still feels somewhat nuanced. The potential major shift remains China's involvement. There have been relatively few leaks around what may have been discussed privately, and that usually implies more substantive diplomacy occurring behind the scenes. I agree with that. China is literally on edge right now. I think I said that to you last week. I've said this twice to you, I think, maybe 3 times. I said to you, behind the scenes, remember there was an article I think it was last week or something, there was an article that was like some fucking bullshit narrative with this one is only good for over here. Yeah, right here. You want to see it? Yeah, this one's it's still good right here. I think they might try to clean this out right now. Earlier this week, there was articles being spun that China speaking with Iran was bad for the U.S. That is fucking false. And I said that to you earlier this week. The conversation, now they're agreeing that that's true. So China is likely telling Iran, what you're doing is pushing us into war with the United States of America. We want to fight the U.S., but we want to fight them on our own terms. We don't want to fight them on Iran's terms. So more than likely, China's pissed, and they're going to help bring along some kind of a ending to the war sooner than you think. There can be structural problems for China's economy come June at some point. Let's watch this closely. They're dipping down in here. Remember that we're at 12 p.m. right now. Right, this is where we're looking to see if the second round of buyers steps in to go higher. Just watch this closely. Be patient, just like at 10 a.m. The potential major shift remains China's involvement. There have been relatively few leaks around what may have been discussed privately, and that usually implies more substantive diplomacy occurring behind the scenes. Trump heading to China next week raises the incentive for all parties to demonstrate progress. That's not true. These guys keep trying to fucking use politics, spin politics into the markets. It's not what's going on. This all has to do with China. This all has to do with the danger that China's in for their economy. And it all has to do with the West making a decision in 2005 that they were going to go to war with China. And this is just where we are in those stages of going to war with China. And I want to tell you something out there. I'm a Democrat. I'm going to tell you right now, it ain't going to change no matter who's in power. It is possible Iran is operating from a weaker position than public rhetoric suggests. I agree, and may therefore be willing to engage on previously difficult issues. Yeah, it's fucking China telling them. The market clearly wants to believe there's a pathway towards de-escalation. I think they keep talking, but unclear who moves gets back to normal anytime soon. False. China will not fight on Iran's terms the U.S., and definitely not at a disadvantage with the Strait being closed, and most fucking certainly with the U.S. fucking controlling the Strait of Hormuz right now, and not when all these fucking U.S. ships are in the area, not when all these troops are being amassed and built up. It's not going to happen like that. And most certainly, those kind of troop movements cannot be fucking hidden. There's no way to hide those troop movements. So, and not only that, we're going back into the season of not being able to fucking sail across the strait yet either to invade Taiwan. China has a big timeline on there. Like that, these guys think over centuries. And I don't think they're going to let Iran dictate that war, and especially not when the fucking U.S. controls the goddamn flow of oil and fucking gas that China needs right now. The consumer. The consumer backdrop looks increasingly bifurcated. In housing and consumer capex, exposed categories like WHR last night lost 16% post numbers. It's Whirlpool. With management describing a world of rapid deterioration in macroeconomic conditions. Huh? What? Have they seen the socks? They are taking decisive actions to restore profitability, including price increases and faster cost takeout. I'm going to tell you something about this Whirlpool. This is pure accumulation and distribution. I don't give a fuck about the recession or its impacts on Whirlpool or any of that fucking shit. It's just another goddamn narrative for a good reason to sell and look to buy cheap. So keep your eyes on Whirlpool. Compare that against DoorDash that says the second quarter is off to a good start and that demand continues to be quite strong, up 10%. That means you guys are still fucking ordering food and having it delivered, right? I am too. We still have our food delivered. I get fucking groceries delivered at my house still sometimes. When I get too busy, I have to get groceries delivered. When like the kids are all going fucking crazy and all this other shit's going on, like the kids like crazy right now. Springtime. DoorDash is off to a good start. Put differently, for big ticket housing linked spend, it feels like a recession. For delivery and smaller indulgences, it's as if nothing happened. No one's buying houses. There's no fucking person buying a house right now and then outfitting it with all this new durable good shit inside of their kitchens and inside their living rooms. It's stagnant. Home sales are fucking stagnant right now. So this is a perfect time for Whirlpool to come down and others like it, so that once that housing market unfreezes, that shit's gonna party time to the upside. Not to mention that we went through a huge cycle in COVID where you guys all splurged. You guys all bought fucking Wayfair shit. You guys all got new kitchens, new bathrooms. You had construction workers coming into your bubble to make your houses pimped out, right? Pimp my crib because I'm in work from home and stuck in the house. So you even have that working against all of this too, right? This backdrop. Hey, I bought a refrigerator. It still works today. Might not. They don't make refrigerators to last that long today, but you get the gist, right? Like the cycles of buying this stuff, we're in the tail end of it right now. The consumer has not disappeared. They have just become highly selective. So maybe no remodel right now because you did it in 2020. But they'll still buy fucking, their habits change. And I think Wolf Richter talks about this all the time. He shows, I shouldn't say think, Wolf Richter shows the spending habits of consumers and where that money moves to. It's very reminiscent of, it's very reminiscent of the complaints that people don't have savings, right? So like people don't have savings anymore, but what they fail to want to tell you is that it's because they put all their fucking savings into something else. They don't put their savings into savings account books anymore. They don't buy bonds, paper bonds for their kids and grandkids. Back in the day, right? I'm like 1 foot in the old and 1 foot in the new. Like my generation is like literally played video games, computers, but then we had a phone. You know what I mean? We had a newspaper. We had TVs. We had cable, but we had TV, right? As a matter of fact, when I was a young kid, we had one cable channel. It was HBO. It was a switch you'd do, a video switch, and you'd have all of a sudden a book for the year, and you could write on there like my daughter's birthday, my wife's birthday, my grandparents' this and whatever, and then they would calculate with you how much money to put into these different savings accounts. People don't do that anymore. What are they doing Friday? If you're poor, what do you do? Or you go down to the local gas station, you put your money in the box for, and the ATM for crypto, right? You got people trading the stank market today, right? More retailers in stank market than ever. You've got people managing their own retirements right now. They're dipping into their 401ks. They save differently today than they once did. Okay? So though you see small savings accounts, right, they're still in good shape right now. The other thing is credit. Everyone uses their credit cards to pay bills to keep their credit up, right, supposedly. And do they really use credit, though? I don't see it. They use cash all over the fucking place, even though they have kick-ass credit, or maybe they're carrying a large balance, but that balance gets paid off every month. When I was a kid, my mom used to carry balances and credit cards like candy, but not because she was paying it off every month. Like when I was a kid, right, when credit became in fashion, was before I was born. There was no credit cards. There was before I was born, but I'm saying they came into fashion like the 70s, right? 1970s credit cards came into fashion. And what did people do? They abused it. And they fucked up their credit. And so we've got all this, like, think of it's like that still today. That's not truly what's happening. People are carrying their debt on their credit cards and that they revolving pay off every month now. How many people do you know that don't use credit cards for anything other than like renting a car? Maybe a big purchase that you can pay off because you already have the cash or something. Anybody out there have an Amex? Amex is like that, right? Pay that bill off every fucking month. So I don't even think credit cards are used like they once were. Hell, you can leverage your shit now. You can fucking take money out of the goddamn stock. You can get a loan against your money in the stock market. Untaxable. And borrow against your holdings, right? If you have enough money, you can, right? So it's all like the environment's a little bit different than it once was. And I think that some of that stuff kind of applies right now too. So how is the consumer? They're better than you think that they are. And you still fail to fucking look at where did that money go? And that's okay because, the sizzle is better, right? The bleeding leads, right? Consumer savings looked worse than they've always looked. Run with that headline. Where did the money go to? They don't have it? No, it's one over here. Well, don't publish that. You just publish that the people aren't saving money anymore. And you guys read it, I read it, it gets spun 4 or 5 or 10 times. The fear kicks in. Nobody starts reading the actual fucking data. Before you know it, the consumer is in the worst place ever, and that's not true. Pretty incredible that SOX hasn't seen a weekly RSI this high since 1999. Yeah, we didn't see a fucking RSI that high in 1999, though, either, did we? Before that, spot up vol up dynamics limit how much additional systematic re-risking can occur because CTAs are already largely back towards fully long, while vol control demand becomes less incremental as realized volatility picks up on the upside. Yes, we have been realizing more on up days than down days since the Iran conflict began. But the broader point is that we are operating in a much higher velocity investment environment. Higher velocity. Don't do anything yet. Just stay here. Don't do a thing. Don't buy this yet. We're going to watch this closely. Don't do a thing here. Goldman's vol desk saw one of the crazier days of the past few weeks with the continuation of the spot up vol pattern. QQQ vol exploded as the market continued to gain momentum on its breakout rally, and its spread to SPX is now above 6 vols higher. We alerted you to that earlier this week. We told you to not trade SPX, to trade Qs, and in particular to pick single stocks. That has worked out perfectly this entire week in the face of everyone saying we're going to fucking crash. Note that the number of 3 sigma moves amongst S&P components was the highest since February 3rd, finishing at 35 yesterday. If people want a late 1990s analog, 1999 may be the better comparison. Many telecom equipment suppliers were effectively booked out, which gave the rally a tangible bottleneck narrative. The S&P 500's latest advance to fresh records is a rally reminiscent of the late 1920s and the dot-com boom of the 1990s. I've talked to you about that too, haven't I? I talked to you about, years ago I told you that we're back into this industrial revolution, and we're pre 1930s, and that the was that the Taft Doctrine or something was very similar to what we're doing today with tariffs and with Trump. We're literally doing like a repeat in similarity, the same playbook as we did back then. And what did we have? A boom, didn't we? What else did we have? We had an industrial revolution, right? And who wound up fighting? We found up fighting 2 wars, right? World War I, World War II, to decide on which economies are going to, or which governments are going to service these new economies. And the same thing is happening right now. Is China going to service that economy or not? Is the U.S. and the West going to service that economy or not? And who will survive? And you even have plays by our politicians and leaders and corporations that know this is happening, and they are all vying for powerful positions in whatever that servicing of these economies is and becomes. You see it everywhere, right? I do. I see it everywhere. I need my hand in this. I want my mark on this. I want to be remembered for this. I want my family, not me, but these very wealthy and powerful people, they want in. It's like, and I've said it's like they're all scurrying for it, right? It's a big club, but you're not in it. I'm not in it, and you can even see the machinations of it in our own government, right? Why is that guy in power? Why is this guy in power? Why has this guy been appointed to this position? He's never done that in his entire life. It's because it's a mad fucking rush to service new economies. The S&P 500's latest advance to fresh records is a rally reminiscent of the late 1920s and the dot-com boom of the 1990s. But the market is still underpricing wing options compared to realized moves, according to Bank of America's Global Equity Derivatives Research Desk. The semi-breakout is effectively parabolic, and until supply normalizes, the market can continue to justify increasingly large numbers across the ecosystem, although the obvious risks are building. Feels like we are in a mini irrational chase mode. Watching Iran headlines plus ARM price action today. Now, this article came out this morning at 8:45. I did check ARM this morning before this article came out. I did want to see what ARM was doing. And what's it doing right now? Fucking cranking, baby. Cranking. Let's look at gold finally. This is it. You guys ready to buy this? We're not there yet. Same setup. What do we do? Let's mark a bottom. Let's see if we can get some kind of a prior high to beat. It's either this one or we're going to create another one over here. Just watch this closely. Don't buy this. You know the drill. Most of you have been around here long enough now that you're getting better than me. So just chill. Don't do anything. When we mark a bottom, we do not know if this is bottom. We're just going to mark it. And I'm going to look at gold with you here. So I gave you KWeb as something to roll into. I gave you NVDA as something to roll into. Avgo to roll into, right? KWeb, what else? Whirlpool to monitor. I pumped out a bunch of fucking trades for you in the Discord for Spec Growth. They're listed in the Pro channel. Ask someone that's a pro trader to get those for you. So I've got a bunch of trades for you, right? And the next one we're going to look at here is going to be gold. Hold on here. No, I want XAU, not ARM. Hold on here. Yeah, that's what I want right there. Hang tight here. Sorry, I'm trying to watch price action and gold at the same time. Hold on here. I'm dying over here. Ugh. Oh, sorry about that. Hold on. I just like rammed everything up. Don't do anything here. Don't buy nothing. Just hang out here for a minute. Looks like we're putting in a top right here. Let's keep watching this, or our place to beat right here. You see it? Okay. I think we're ready to go here. There we go. There's our first high right there. Ching. There's the first one. See it right there? There's our first high. You guys are like, fuck it, I'm just buying. You guys are fucking savages up here. Keep an eye on this one right here. This is the one from earlier. It's yellow. This is now yellow too. Let me check something here. I'm just gonna check this on a higher frame. Just hold on here. Before you buy, don't buy this yet. Let me see something here. We're below a level I don't want to be below. I didn't say it to her, or maybe I did say it to her earlier, but I had said 733.23. Oh, we're so close. This is a trap for bears. No, it's not. Let me just check one more thing. There is a door open lower to 728.07. So just be here. I'll draw this in right here, but you have 1, 2. There might be some kind of fall off down here. Not guaranteed, but the door is open down there. So, see this right? Watch this closely, okay? Before you take a long here, You could trade inside of this if you want, like this and this. You can trade that, but you're like in and out. And I think there might be some failure in here, but the reason I'm saying this is this. If you're going to institute a long here, I would say wait for this move, and then we can talk about buying this with the 1 minute coming up. Don't be getting long until we're up here somewhere. Or unless you're like in and out. Like you can be in and out, but don't commit to it. We broke, there's a bull trap in here. So just be very wary of this. You can see this one right here. This one needs to be way up here. This needs to be up here to buy this right here. That doesn't make any sense to you or not, but it does fully to me. Like you need to see this move and then up. And I think that there's a trap in here. But just be careful here. Like you can like trade the inside of this, but don't be committed to up yet. We'll leave this here because this actually needs to be higher. This is not enough here. We'll watch it closely. You can trade the inside of this, but just don't commit to it. Just be like, I'm going to belong the whole fucking thing. There's a trap hiding in here. Or not a trap, but there's a door open lower that's now open to 28. And then you'd buy 28, and that would be the long. 728 and some change. It's like 728.23. We may not go down there, but there's a door to it right now open. Okay, while this is working out right now, because I don't want to be responsible for you getting shanked in here, we're going to switch gears a little bit, okay? This is gold. And I fucking know you gold. I fucking hate you gold bugs. I do. I watch this guy on TV and he tells me he hates me, but I watch him every day. So this is it, okay? Remember that gold goes sideways and then it catches up, okay? Gold is like this. Hold on here. Nope, hold on there, wrong one. You know, it's like S&P goes like this, vertical. Gold goes like this. So it catches. So what's the takeaway about gold? It's kick ass for selling theta, man. You fucking kill the bulls, kill the bears, and then the move is catch up. If you take that to your grave, okay? Unless something changes, it's been like that forever. Now the problem is that when gold does move, all the gold bugs come out of the woodwork and they tell you it's going to go here. It's going to keep going, but it doesn't. It falls back down again, and then it crosses, and then it goes up, and you get fucked, right? So you rotate into silver, which is great, but most people don't know that either, right? You jump into silver, and then you get out, and you have to wait. So this is a weekly chart right now. Okay, I'm just going to start on a weekly basis here. So any of you gold bugs out there, that's your target right there. Now that's your target right where we are. Okay? Now this is a daily chart. And this is going to right about there. That's weekly. On a daily basis, you should see this climb up here, hit this number right here, back test, and then push up and over right here. Okay. Be 200, right? Come on, come down. Sorry, I'm watching SPY go up right now. I'm watching SPY at the same time it's going up, right? This is July. Right there. There. Here, up here, this all follows the same thing right there. So we're on the daily. This is the weekly. Are we all following this together? We're going to go 4. Maybe we'll do it like this. Blue. Blue. The daily would go yellow. I'm just looking for a trap on this SPY just in case it fucking traps everybody in. We'll make this one white too. So it's not fucking with not clash with the colors. Fucking gold bulls. God damn gold bulls. Are we on a 4-hour yet? Yeah, we're on a 4-hour. You could even make this one solid. And then do something like this. And on a 4-hour, we're going to make it pink. We're going to make that pink. This one right here. And you're going to look for that to get above here. You see that last little tip right there? That'll be the roll down here. And the only thing I can't see in here is, does it come down here and then back up into right about there? Is that right? 1, 2, 3, 4, 5. Yeah, got that right. So I just want you to watch this with me with gold, okay? Ready? 1, right? Right in here. This is 2. Right in here, that's 3 right there. It's like this 1, 2, 3 could be a tip up here and then we lose it. And this is all a topping pattern. And then the other thing you want to be thinking about is, you see this low and this low right here? This one right here in September could be down here. And this is all still distribution, but highs may not be in yet on that distribution. Eventually this will fail. I'm going to switch back to SPY really quick. So want to see this here? We came all the way up here. We failed to get that new high. That's bad. And we're not getting this bigger leg higher here. So just be careful of a trap in here for bulls. If you are a gold bug, this is what you're looking for right here. That one right there, this one right here, this one right here. The only thing I can't see in here is right up in there, right? The only thing I can't see in here is, you see this dip? I can't tell if it shouldn't be that deep in the fall, but if it was, you know, you're like equal legging this one right here, and you could potentially equal leg this one up here. It's like that one and that one, but outside of that, I think I think, and I don't even know if it could do that. It's because it's gold. But at any rate, if you want to see what it looks like into the end of the year, the reason I'm bringing this up to you is because this is the start right where we are. Here's the start. If we're up here either end of the year, September, July, you know, it's time or price, right? This is your window. The only other thing I would leave you with in this would be, if you were going to take this trade, depending on how you structure it, you may need to put more time on it, like March or April. But this would be the basis for you, depending on how you structure this trade. But this is what I've got right here for this trade. Cool. And just remember that stuff down here with this prior high. That these two lows right here, you're going to be defending this right here. You're going to be defending this too. I don't know that we go down this deep. I don't think that we do. Your daily trigger is coming up just like this. That should grab all this stuff up here. This should go moon. And this one right here should go up here. This should be like a huge catalyst in here, up. This should flatten out. And then, you know, wherever that's going to be down there, once we lose it or whatever, it's either going to be lost. It's either going to be lost right here. So it's like 1, 2, and 3. That's your safest bet. This is all FOMOville up here. So here's another trade for you today. I'm doing this one early, okay? Now, how do you trade this? You know you're defending this right here, right? And you're defending the daily trigger. So any pullbacks down in here for any reason, any corrective moves, and we're like, oh my God, you got a big wick down here. Oh God, we went all the way down there for a minute, but you didn't get the second wick. No new low. It sucked back up. You're adding over here, then you're taking that trade up there and you're just partying. Make sense? So snap some fucking lines over here. And here you got them already right here. Set some alerts, like there, and like right there. And set some alerts right here. Four, 6, 4, 3, 4, 5, 9, 6, 4, 5, 2, 7. Set alerts on all three of these. You can do it anything you want. If you want the weekly trigger, you could do that too. I'm just doing horizontal lines. I've got 3 alerts now. I don't know if you can see them, but they're right here. Any kind of pullback, and we'll come back and look at this specific chart end of the year and see what happened. I'm telling you before, not after. So there's the trade. Price target, just under 6,000 by end of year. Is this a bull trap? Is it a bull trap? I'm going to give you 2 targets underneath, okay? For selling this. Are you ready for the 2 numbers? I'll give it to you right now. 729.93. Okay. And your second one is 728.19. Okay. I don't know if we can get that deep, but now let's talk about this trade here, okay? We think is a failure in here because we opened a door lower. We have the first low right here. You cannot take this trade yet, can you? You can't. You have to see the first low, then you have to see the second low, and then you have to see the failure, right? And then we sell it, right? Down there. So let's watch this close and together. Let's get rid of this because I was trying to show you what needed to happen. Cannot. What's up? Yeah, I need ice water pretty fucking bad right now. I'm losing my voice pretty bad. Make it all ice cubes if you can. I can pour water over the top of it. Thank you. I love you. Let's watch this closely right here. GME? I haven't looked at it since I was asking for it to go lower. Is it even lower now? Well, that Cohen shit was bullshit, dude. Oh, it hasn't gone nowhere. Did you catch the low already? Didn't I tell you to fucking look for like 20 or something like that? Oh, it needs to go a little bit deeper. I think it still needs a little bit of plunging. We're likely going to trade like 7,300 on SPX. I'm not sure, but if we can get down there, but they're going to try right now. They're going to try to back test, take the halfback trade. They're going to try. I think this is 7,300 right here. And they'll rotor root down here and then come back up and we'll start going higher again. I know there's someone in my stream that's like, bears assemble. Thank you. Oh, shit. The bear's talking. Traveling Tay is like, pullbacks are good for the market. I only want to go down there for just a minute. And then they're like, well, now that we're down here, let's close the door on the bulls. Shut that fucking door and go down. I'm just fucking with you. By the way, these are not the lines that we usually use, so I'm going to change the color of them. Because we usually use lines, meaning we're opening doors downstairs, but we're not. The green. What did I miss? I have to read that. I'll read that. Nick, thanks for posting that. I'll take a look at it. Let's see if the Bears can get this or not. You remember the marked bottom? Let's watch that. No new low, no downies. Remember, you need the new low, the rejection. Remember, to chase this, you need what? The plunge. And then you need the exhaustion, right? And then wham, wham, wham. Meat of the trade right here. You don't care. Bears are just like, I called the top. Fuck this. Shit's over. It's over. So there's gold for you. If you're a gold bug out there, start fucking accumulating. Like, start that accumulation. You know the basis of it. Those 3 white lines that I drew for you is kind of the basis for the bulls to go up into the end of the year. That Chinese tanker was hit. That would be fucking wild if that's true. It might be true. Oh yeah, look at that Chinese-owned oil tanker hit near Strait of Hormuz, and first since Iran conflict began.
If it's Kashkari, it's due to speak.
I like all I can think of is it like Night at the Museum? I shouldn't think this because it's more serious than this, but
text is expected, but there is a Q&A with the moderator and audience. Now, on time on the video, it looks like it's been updated to 2 p.m. Eastern time. So again, just what we can see so far.
oh, calm down, Mr. Bear Financial Juice. Somebody fucking email the guy at Financial Juice and tell him to watch the show. No, don't do that because he'll probably tell me to stop playing the fucking thing on the show, but because I fuck with him every day. Hold on here. You gotta remember, I'm in an office alone all day long. I'm locked in here with you guys. You're not locked in here with me. Or maybe it's the reverse. Yeah, it's almost perfect timing down here. See that? 1:30. Fucking being bear terrorized right now. Losing my track of thought here. Fuck you, Sergeant Dad. SG Dad. Bear's like, he's calling it for us right now. Those faux bear rugs from IKEA. Those things always look good on like a picture, and then they fucking suck in real life. Or they pinch out, if it's real, they pinch out like it's like the cow fur. It's like they only give you like a 36 by 36 inch mat. You got to go out west to get those things in Alaska and shit, like Colorado, Montana, and Alaska. Remember, you can't take this trade. Mark my words on it. So what were we talking about here? I gotta get back up. Oh, so like the Chinese tanker being hit. This whole thing is like Iran right now is Iran. I shouldn't say Iran like I'm from Texas, but like Iran. And I shouldn't say this because they're not this at all, but with the with like how like different groups in Iran are doing different attacks and stuff in different places, and then you got like Saudi Arabia acting up and all this other fucking shit, and it's like it reminds me of Night at the Museum. Night at the Museum when they had the really small like characters. They were wearing like their hair is all fucked up, and they were terrorizing everybody in the Night at the Museum, and that's what I keep envisioning in my head, is that you got like little bands of fucking, like, everyone's got their own thing they're doing, you know? And so there's like, I don't know if it's terror or just chaos, or it's like Maxwell Smart's chaos. And so it's kind of ironic to see. Like, I wonder if they pissed off, if maybe China said something in their negotiations with Iran, and they're like, take out one of their tankers. You know, just fuck with them a little bit. That wouldn't surprise me if they took out that Chinese tanker just as a slight. Oh, here comes Binky. Oh shit. Fuck, Binky's in here. Fuck, Binky's here. We're in trouble. Everybody run and hide. Ooh, look at that. Oh. Ooh. The bottom of this box is the new low. We're getting so close right now. Just want to look down there. Just look, check underneath. Hold on a second here.
Voice news disc.
Oh, wait a minute. I gotta put the bear guy back on again. All right, now you're looking for the exhaustion candle here. We don't have any news right now why we're going down. If we see something, we'll post it or I'll tell you. That's the new squawker guy. Zigging and we're zagging and we're zigging and we're zagging. Well, they zig, we zag. Well, they zag, we zig. You guys are I gotta stop talking. Like, I literally gotta stop talking. Oh, I never posted the review in gold right now on Twitter. I meant to, and I never did. Well, fuck them. I was gonna post for the gold bugs on Twitter, but never did. Well, it's their fucking loss. Let me
coming through with comments here.
let me post the gold for you inside of the.
Emerging. Central banks must remain within their mandates. Governments must put finance on a sustainable path. Household inflation expectations are adapting rapidly. If energy shocks broadens, policy will need to tighten. Losing independence would fuel inflation and slow growth. Independence is key for central banks tackling inflation. Risk of broader shock has increased in recent weeks, and signs of supply chain disruptions are re-emerging.
Fuck, hold on here. Is that fucking Yellen stepping in right now? Is that Yellen buying the dip right now? Look at that. Is that like Janet? It's got Janet Yellen written all over it. Is that Jerome Powell? Is he like hand staring the market right now? Look at that. You see that? You got the new low. That looks like exhaustion right there. That's pretty exhausting. All I need next is like John L to come in and be like, come into the pro channel and be like, oh, you fucks are buying the dip at 12, weren't you? You're losing all your money now. Bunch of fucking degenerates. We didn't buy this dip. I told him not to buy it. I told him to wait or trade within it. Now you gave all your money back you made. I took it all.
Losses Brent back up over $100 a barrel. U.S. crude turns positive after Wall Street Journal report that Iran rejects U.S. steel Australia for most as unrealistic. Reminder, we already had headlines about this before anyway. But it's being cited by major news wires as well.
Oh, that looks like exhaustion to me. Bulls are tired. Too much winning. Huh? Huh? Oh. Oh. Oh.
Voice news disconnected.
Am I getting kicked off now? Hold on one second here. Let me just look at one other thing here. Yeah, I'm with you, Bink.
So reminder, you had IRNA earlier on in the day, 11:20 a.m. Eastern Time, citing the Iranian Foreign Ministry, saying that the review messages via Pakistani mediation, no conclusion reached and no response yet to US side. According to Nikkei, SoftBank is in discussions with NVIDIA to build made in Japan AI servers.
Yeah, this looks like intervention, dude. If you're there, Bink, if you're even watching the show, this looks like this right here looks like intervention. That reminds me of shit at nighttime, middle of the night. You know, like middle of the night, we're fucking crashing and shit, and you just see the fucking hand of God come in. And you're like, that's fucking Jerome Powell in the middle of the fucking night buying futures. Like fucking, that's what this looks like right now. It looks like the fucking hidden hand of God coming in, cupping your balls. Yeah, dude. I mean, it might not be, but it looks like it is. That looks like that. That looks like intervention. It might not be, but if this was the middle of the night, I would call it intervention.
SoftBank aims to make data center batteries without lithium and cobalt.
Let me just look at. Just let me look at the.
SoftBank US data
I'm gonna
center.
go to Gamma Viz here on our website. I just want to see what the zero dates are saying.
Provided seeks to tap demand for sovereign AI.
Let me just give me a second here, boys and girls.
We have posted out that article on the feed for you to read through.
Zero date Gamma's got 7345 and 7350 as like the fuck you. And we're trading right at 735 right now. There are other targets higher. 7375, and then one date's for tomorrow, 7350. Man, we're getting pinned in here. We're getting hemmed in. We may not go deep here. We could, but it looks like it almost looks like Captain Condors here. There's potential for us to like park right here and not go anywhere. Get rid of this for the moment. Well, we'll keep watching it, but we can move this over too. Here, let me draw this in. Shit, did I just fuck that up? We'll keep this right here. Because see this 5 minutes coming down, this half an hour is coming down. It might just be a matter of pounding. You just might be waiting for the velocity to take us down. But the 0-8 gamma is saying we could sit here all day long. We could get pinned into the close. 0-8 gamma has got us at 7350.
Further from this Nikkei piece, then SoftBank.
Let's look at this closely together. Hold on here, guys.
Designing, assembling components for homegrown AI servers by the end of the decade, with the help of players such as Nvidia and Foxconn.
Voice news disconnected.
I turned that off. Okay, so this is our gamma map for the week, right? We have today 7350. Just bear with me here. We have a pin right here. Zero date gamma. Seven, 3, 4, 5. What's really fascinating is this right here. There's another pin right here. So there's a pin right here, right where we are right now, right? There are some higher strikes like on 7375. There's a pin up here. But it's not a magnet right now. There a gamma pin. Question mark. Well, this is where it gets fascinating. So for tomorrow, we have 7280. Wait a minute. Shit. Check this out really quick. A 1-date pin, ready for this? We have a 7350 on the top end for tomorrow, and then 7280 to the downside. What was that? They're doing construction? Okay, so check this out with me, okay? We're going to get rid of this. This doesn't matter anymore, right? And then we've got One. Oh, he Jack's all over it. Okay, good. That's my goddamn dog. You know that, right? So check this out right here. So let me just show you that what the gamma map looks like for 0 dates and 1 dates into Friday. So we hit our upside target for 0 date gamma. And I'm like, yeah, maybe we'll go up. And you got to remember too that this is on a 1 hour, but let me show it in a smaller frame. There's an easier way to look at it. Oh shit. Okay, so just watch, pay attention out there, okay? So on our 0 dates, we went up here and hit this one, right? And I'm like, yeah, let's bounce here and let's go higher, right? Oh, we've got NFP tomorrow, right? We have NFP at 8:30 in the morning, and we have unrealized volatility, not realized, but unrealized volatility on NFP. So this is the close here at 4. We need vol whiz here. This is 1 date gamma over here for tomorrow. This is 0 date up here, right? And this is 1 date down there. So, I mean, theoretically, this can recover and go up here. Like, we could theoretically go up here and then, like, plunge down in here to tomorrow. Or we're, like, roped in until, like, 4 p.m. If they can pin us in here at 4 p.m. once that gamma rolls off. When we get close to the end of the day, we could drop down here. So there's a few different things we could do in here. But I want you to take note that either way, you're looking to buy a dip on Friday morning somewhere down here. Because this will be an attractant with the volatility. Like, we should get sucked down into this by 9:30. It's either from a high above to get sucked down there, or we get sucked down here and they can potentially bury this. Like, bury it into the close and then jackknife up in the overnight hours and then slam it down by morning at 8:30. Maybe we get a little bit more doom and then it's up again, or at least to here. And what's fascinating about this too is, guess what the pin is for tomorrow? It's down here, and then the upside pin is right here for the close on Friday. So the setup is there right now. Now, 2 date gamma, this would put you into Monday. You're allowed to, there's an unclenched to 7,400 on Monday. So ready? Let's just draw it like this. So you're in here until 8 a.m., 9:30. You're pinned in here until close. Fuck, hold on here. I gotta go back to an hour. I'm doing this in a 1 minute. Hold on here. You can't escape this until the end of the day on Friday, excuse me. On Friday, you can escape back in here. And then the pin on Monday is 7,400, which is the close right here. So yeah, we're going down. We're going down into tomorrow, and then we cannot get above this until Friday close. And then Monday, though, there is an escape path. So you figure you're not going to hit 7,400 until the close. Does that make more sense to you guys? Now, when we do this, there is some information. Remember that gamma is kind of funky, right? If we do this down here, we have realized gamma, we could actually go deeper and then bounce. We just have to, like, when we hit this white line, we can go like here to here, you know? We can go underneath it, back up it again. That's what I'm going to call it right there. This is the plan from now into Monday. Cool? Are we bleeding more in SPA yet? Yeah, we're bleeding right now. This is at least for 0 dates, 1 dates, or 0, 1, and 2 dates into Monday. Ready for 3 dates on Tuesday? 7,400. 3 dates into Tuesday, 7,400. So this, you might want to put more time on. You know, this could be something where we're like, reject this, right? Monday open, we're finally above it. Then you're dragging all day long. And then you fail 7,400. And then on Tuesday, you actually hit the 7,400 on Tuesday or above it. So I'm sticking with the down move today. And I'm going to stick with the, you're looking to buy the dip now tomorrow if you can on Friday morning. And you're going to look for a print on Tuesday of next week, if not Wednesday, like we did today. You might get flushed out on one of those days, but if you stay long, you'll be fine. But this is, at any rate, what the gamma is looking like. I'm going to take a quick break here. Let's go to the main screen. You guys get all that? On the free show, you guys get all that? I'm going to post this in the Discord for you. Remember, some of this is, like, it could be Tuesday, not, hold on here. That's a nice chart I just posted. It's not completely accurate. I did it for Monday close, but it should be, you should include Tuesday in that. There's going to be a bunch of like reject, then bounce above it, then, you know, that kind of shit. We're making our way back to you, babe. This is the target right here. Whether it takes all day long or the close or we buried at fucking 4 p.m., it ain't going to matter. We'll get sucked in just by gamma. All right, I'll be back with you guys. Give me like 15 minutes. How do I set them up? Wait, if you have, do you hella wide? Do you have the triggers? Because there is a way to set them up. You have to set them up with specific chart settings. If you don't know them, let me know. I'll show you all my settings for my charts if you want. Hella Hawaii. Hella rad. Whoever you are, I do set the charts a specific way. I do set the charts a specific way too. Okay. I'll be right back. I need like 15 minutes. I gotta go potty. I gotta stand up. But I've been sitting here since 9 or something, or I'm sitting here earlier than that, but like with you guys, 9 a.m. And it's I've been sitting here for 4.5 hours. So I gotta chill for a minute, okay? This could take all day long. This whole move down, it could take till like 4 p.m. And it might not even unclench until after the bell. You gotta remember you need the gamma to unclench to get down there. We're locked. You're gonna show this. I'll show this chart again. Okay, ready? So let me explain some of this more detail here. We hit our upside 1-date gamma already, right? We're like locked into this. See the pin? We're like pinned in on these two white lines. So if you want to get down there, you kind of need the daily gamma to die, so that does not need to be delta hedged any longer by dealers, right? So we could get sucked down in here either at the end of the day, or we could get sucked down after the bell or in the nighttime. This would be the unrealized volatility. If we have realized volatility, we should plunge down and then back up again, right? That's realizing 1, 2, and 3, right? And then we come back up in here. We get like no into the close. And then we pop up over this again, maybe on Monday. Like we fail it, then we hit it, and then we fail, or then we fail this, then we hit it finally afterwards. I don't know if that makes any sense, but it looks like a gamma regime is kicking in right now. So just be aware of that. Like it could be this could be a drag into the end of the day today, this whole move. So see how we're fucking around, we're kind of pinned on this. See how we're focused on this right now. Just be aware of it, okay? So there's like a market pin right now. You want the unclench, like a daily expiry unclench. May not be able to happen until the end of the day. I'll be right back. Just hang out here, okay? And not only that, we can still trade that upside gamma bar too. So just be aware of that. And that is at 7375. So you could get sucked up into that. So just be aware that this is we're kind of like trapped in here right now for movement. I'll be right back. I'm going to leave you with Neil Kashkari talking.
Freedom to unblock the Strait of Hormuz.
I'm also being honest with you.
So from the Wall Street Journal, Saudi Arabia and Kuwait reversed decision to block the
where their central banks moved 3 to 6 months sooner, they had almost the exact same inflation outcomes that we had. And so, yep, we should have moved a little bit sooner, but I actually don't think it would have made much of a difference in what we all experienced, just because the magnitude of the supply chain disruptions, you had the COVID shutdowns, supply chain disruptions, and then you had, as I said earlier, Russia invading Ukraine. That was January of that year. It was one after the other, dominoes all pointing to high inflation. So sometimes, central banks can be powerful, but there are also some waves that hit the economy that are more powerful.
Well, good segue here, as you mentioned, from that world perspective. This question asks, what's the level of concern that you have regarding whether or not the U.S. dollar will weaken significantly and be supplanted as the worldwide currency?
I don't see that in the foreseeable future. What determines which currency is the reserve currency? If you take first of all, you have to have a big economy. as a basic. So take all the big economies in the world. Which big economy do investors around the world have the most confidence in? That's what determines who's the reserve currency. It's our economy by miles. And so the question is, when will one of the other advanced economies outcompete America so that investors around the world say that's a better place to invest than America? It could happen. I don't want to say that it's impossible, but man, I wouldn't trade places with China. I mean, they've got this incredible demographic cliff hammering them, like a giant tractor beam that's going to pull down their economy. Europe has all sorts of their own challenges as well. We have lots of challenges too, but I wouldn't trade places with anyone in the world by a mile, by miles. And so I actually feel very good about our competitive position. That doesn't mean we can't do better. That doesn't mean we shouldn't do better. But in terms of us losing out the global competition for economic vibrancy, I'm not going to bet against America.
So this question asks, as we continue the inflation conversation, in the new economy, is 2% an old standard? Should it be adjusted?
So this goes back to what is our target, 2% inflation. Congress gave us two primary goals. One is stable prices. We call this our dual mandate. Stable prices we define as 2% inflation, and maximum employment, as many Americans as possible gainfully employed and contributing to the economy. Now, central banks can set the inflation target. So we could have defined stable prices as 1% inflation. We could have defined it as 3% inflation. Here's the thing. What we can convince the American people of based on your lived experiences becomes a self-fulfilling prophecy. So we've told everybody 2% is the right number, and we can talk about why we thought 2% is the right number. But if you start to believe that 3% is now the new normal, it becomes a self-fulfilling prophecy. Or 4%. Because here's how it works. If you have employees, and they think, well, 3 or 4% inflation is now here to stay, they're going to come to you and they're going to say, I need a bigger raise. My family is falling behind. I need to be able to keep up with inflation. And they're going to be right. So you're going to have to give them a bigger raise, and then you're going to turn to your customers and you're going to say, I need to charge you more because my labor costs have gone up. And then it becomes embedded in the fabric of our society. Inflation is a tax on all of us. And so we want to keep inflation low. We want to get it to the point where nobody's thinking about it anymore. 2% inflation is kind of the rough equilibrium that most central banks have converged around as a good ballpark number that gives us some margin for error, but it's low enough that people don't need to worry about it. And so we need to get back down to 2%.
This question then asks, taking off on that, what other tools does the Reserve have to combat inflation other than interest rates?
Well, monetary policy writ large is the tool we use to try to achieve our dual mandate goals. So this interest rate that gets a lot of attention is what's called the federal funds rate. It's an interest rate that banks charge each other on the electronic cash that they send to one another. That's one part of our toolkit. Another part of our toolkit is something we call forward guidance. Forward guidance is when we tell you, when we signal to the markets where we think interest rates are likely headed in the future. Financial markets try to be forward-looking, and that can affect interest rates today. So I'll give you an example. I said to you, when inflation took off in 21, we first signaled in November, hey, we're going to start raising rates soon, even though we had not yet moved the federal funds rate until March of that year. But if you look back in November of that time frame, mortgage rates adjusted immediately. That's how forward guidance works. By signaling that rate changes are coming in the future, it can affect where rates are today. So those are two separate tools. One is what is the rate today on this interest rate that banks loan each other. The second is forward guidance. The third tool, which gets a lot of attention, is our balance sheet, which is if we've cut rates all the way to zero, we've embarked on this thing called quantitative easing, where we buy long-term treasury bonds to try to drive down long-term interest rates. So I think of those as three discrete tools that we have. There's some interaction between them, but we don't need to get into that. But they're three fundamentally discrete tools. But all of it is about shaping the cost of money and how banks borrow from each other and ultimately turn around and lend to their customers, all of you. Now let me say one more thing. This is technical, but it's really important. there's a concept in central banking which is, what is neutral? What is the neutral interest rate that neither stimulates the economy or restrains the economy? We don't set that neutral rate. We try to estimate it. And so if we see the economy is really slowing down, if this is our assessment of neutral, we'll try to bring interest rates below neutral to boost the economy. If this is our assessment of neutral and the economy looks like it's overheating with high inflation, we will tend to raise interest rates above neutral. But the thing is, this neutral rate moves around. So one of the things we've seen in the last 4 or 5 years, there's been massive investment into IT and AI and the chips and data centers, hundreds of billions of dollars a year. Well, that capital has to come from somewhere. That capital is being reallocated from other parts of the economy to data centers. How does that happen? That happens with a higher neutral interest rate. So I'll give you just a simple but theoretical example. Think about an apartment building that used to pencil out and get funded when it could get a 3% mortgage. Well, now Amazon, Google, Meta, they're investing hundreds of billions of dollars into data centers. So interest rates in the economy will be higher, and that mortgage rate will now be 6% instead of 3%. I'm just making it up, the numbers. So that apartment building won't get funded now. Instead, that capital is going to get reallocated in our market economy, and we're going to build data centers. So one of the things that makes it challenging for us, because we don't exactly know where neutral is. We have to try to see, how is the economy progressing? How is investment going? It balances savings and investment, and then we try to tap the brakes or tap the gas around that neutral level. But some of these broader forces are much bigger. So in the discussion earlier today, a bunch of the panelists, a bunch of the participants were saying, boy, it'd be great if interest rates were lower. And I said, I hear you, but it's not entirely up to us. Because if there's going to be massive demand for investment in this new sector of the economy, the capital has to come from somewhere. And that means some other projects that used to get funded are not going to get funded. That's how capital moves. And that mechanism is through higher interest rates. Sorry, that was like a little econ lesson, but it's like foundational to the kind of stuff that we think about every day.
President Kashkari, in that response, you indicated and noted the practice of forward signaling. And I know you wrote a dissent last week about kind of that virtue signaling. Can you give us some indication of to what that is and why you felt compelled to write the dissent?
Yeah, so last week when the FOMC voted, we voted to hold interest rates steady, but there were 4 dissents out of 12 voters, which is the highest level of, meaning no votes, in 32 years or so. One person, Governor Myron, wanted to cut interest rates immediately. 3 of us, myself, President Hammack in Cleveland, and President Logan from Dallas, voted no, not because we wanted to change the interest rate today, but because in the language that we put out with the policy action, there was a signal that the next move is likely a cut. And our view was that had been appropriate for the past several months, but given the uncertainty, my view, I'm just going to speak for myself, but I think my colleagues agree with me, given the uncertainty around the Iran war, I actually don't know what the future holds. If the Strait of Hormuz is closed for an extended period of time, it may well be that the next move might need to be up in interest rates. I just don't know. And so we voted against this, not against the rate action, we voted against the forward guidance because we just didn't want to signal that the next move was likely down. We just didn't know.
And then you'd mentioned kind of capital moving relative to data centers. So question here around AI, and it asks, what degree of concern do you have for the possibility that the AI bubble collapses, and what would that event maybe compare to?
I would be surprised if the AI is a giant bubble the way the housing bubble was. I don't think AI is a dry hole that's being dug. Every big business that I talk to, every single one is using it, finding new ways of either doing things they couldn't do or doing things more efficiently that they used to do. So I think it's real. Now, could there be some bad investments that are being made along the way? Absolutely. But I don't think the whole sector as a whole is just a complete bubble. So I expect there will be businesses that fail. I expect that there will be losses. history of technology adoption is one that it takes a lot longer than people think for these technologies to weave their way into the fabric of production and the fabric of the economy. So my guess is it's going to take a lot longer to have the full benefits of this technology and the full consequences of the technology. But I'm bullish on AI, just because businesses that I talked to that were skeptical 2 years ago are now telling me, no, we're using it. And I'll say, give me a specific use case. And they can walk me through tangible use cases of how they're getting either productivity benefits or they have capabilities that they didn't have before. So I think it's real. But I'll also say, by the way, just to the example of how long these things take longer than expected. I mean, 5 or 7 years ago, we heard all sorts of predictions about self-driving cars and trucks, and that all the long-haul truck drivers were going to be displaced within 5 years, and they're going to have to go back to school and be retrained. That has not remotely happened. Allegedly, they're making progress on the technology, and there are places like in Phoenix and San Francisco where you can get in a self-driving cab. So the technology is making progress. Will it eventually get there? Probably, but it's taking much, much longer than the evangelist told us 5 years ago.
So we're getting a fair number of questions that continue to allow me to ask questions that are a bit of a segue, but please keep them coming, 906-376-0676. So you mentioned the housing bubble and how AI you expect differs from that, but this question then tying into home ownership and housing asks, do you think the younger generation has a fair shot at home ownership under current policy?
You know, it's a real challenge. I mean, the affordability of housing is a widespread challenge all around our region. And if you look at what has caused home prices and home prices to go up and home affordability to go down, it's a confluence of things. Some of them are in our control, some of them are harder in our control. One is, of course, inflation affects that. Cost of materials. It takes materials to build a structure. Material costs are going up. So that's on the Fed. We have to get inflation back down. Availability of labor, cost of labor, immigration policy affects that. That's also a challenge in some markets in particular. Then you have things like local zoning. Like the UP has a lot of vacant land, but my sense is, from having been here now every couple of years for the last 10 years, there's still a reluctance, like, oh, we don't want to build over there. We don't want to build over here. Oh, well, you can't build over there. That's beautiful. I can't build over there. Well, when everybody rules out all the places that you can't build, you're not left with very many places to build. I go to Montana. I hear this all the time. So in Montana has a lot of land. And they always tell me how unaffordable it is to build housing. And I always say the same thing. What about there? What about there? What about there? Oh, no. And so these are choices that we're making. People who own homes, like I own my own home. My wife and I own our own home. People like me, and dare I say you, don't want people building more homes where we live. I'm not kidding. Because we like our neighborhoods the way they are. You live in the UP because you like the UP the way it is. And so we erect local, all well-intentioned local regulations making it harder to build. So part of it's the cost of materials. Part of it's availability and cost of labor. You got local zoning, which you own. It's up to you guys, you all to choose what you want to do here. And then, of course, you have the cost of capital. And the cost of capital is a little bit on the Fed, but it's also on the broader economy, as I described, because capital is going to other places. So some of this stuff is our choice.
So this question, President Kashkari asks, what impact do you believe crypto will have on the financial industry?
Nothing. I think crypto is like ESG for libertarians. Remember the ESG, right? It was like millennials and Gen Z wanted to feel good about their investing, so Wall Street rolled out all these ESG products, and they charged premium fees for them, and the millennials and the Gen Zs felt good about their investments. The banks felt good because they're getting premium fees. Meanwhile, they did nothing for the environment. That's basically what crypto is. It's been a dozen years now. Nobody's found any actual use case in any advanced economy for it, other than circumventing banking regulations. But people like the idea that they're circumventing the regulated system. And so Wall Street's happy to give them products. So, I mean, compare it to AI. Every day, people are finding new use cases for AI, every single day. It's been a dozen years, and the use cases for this crypto stuff, it's just marketing. It's like I call it a buzzword salad. Every time I sit down with somebody in the industry and I say, explain to me, what can you actually do with this? It's just a bunch of buzzwords. And then I'm like, okay, it's ESG for libertarians.
That's funny. So, of course, new change with the chairman. The question here asks, how do you anticipate that change will affect FOMC's future decisions?
Well, it's a committee. So first of all, I know a little bit, I know the new incoming chairman who's about to be confirmed, Kevin Warsh. I was at the U.S. Treasury Department during the financial crisis. He was at the Fed. He's very well qualified. He knows the Fed very well. We're a committee. Now, there are 12 voters at the Federal Open Market Committee, and it's a deliberative process where people have to bring their best ideas forward and make their best arguments and then ultimately persuade their colleagues on the right path. The chairman is given deference, of course. He's selected by the president, confirmed by the Senate. Deference is given to the chairman, but ultimately it's one of persuasion and analysis and arguments and data. And so, I think we're all excited to have him join us and have him lead that deliberative process.
President Kashkari, this question asks, at what point or what percent of GDP will you be concerned about the national debt's impact on inflation? And,
Well, the national debt, we're at around 100% of debt to GDP, which is quite high by American historical standards. No one knows where the danger zone is. Is it 100% of GDP? Is it 110, 120? Many countries have gotten into trouble with much lower levels of debt than we have right now. And yet you've got Japan, which has more than twice as much debt to GDP as we have right now. We know if you look at forecasts, like the Congressional Budget Office does forecasts of where our debt is going, it's going to do this. And it's going to do this mostly based on demographics, which is we're an aging society, we're having fewer children, so our benefit programs like Social Security, Medicare, they're funded by current workers paying for current retirees. And as that ratio goes imbalanced, the debt goes to the roof. So that can't happen. Something needs to be done to address that. And ultimately, it's up to our political system and our elected leaders in the Congress and the executive branch, the fiscal authorities, to come together and decide, do they want to raise taxes? Do they want to cut benefits? Do they want to have more immigrants to kind of change that balance, that mix? Ultimately, that's for our political system to wrestle with. It's not for the Fed. So I don't have a worry about our debt in the near term, but at some point, our political system is going to need to address this.
this question, President Kashkari asks, in your opinion, which country has the most financially stable system from your perspective?
Oh, the U.S. I mean, we all are very aware of all of our flaws and our internal dramas and whatnot. But again, I would not trade places with any other country in the world. We have so much going for us. Our university system, our rule of law, our innovation sectors that continue to outperform the world by miles. I wouldn't trade places with any other country in the world.
And speaking of this country, question asks, how does the Fed account for the fact that $124 trillion in assets will be transferring generations over the next 20 years?
I've seen some of those articles. I don't think about it much. I mean, I think that's the normal part of our economy, and different generations accumulate wealth, and then they tend to pass it on in some form to their children. People tend to save more. I mean, people who can tend to save more than they need as they get older. So you would expect consumption to people to spend more as they're getting older because they're not working, but people end up saving in aggregate more than you would think. And so I don't think that generational shift, it isn't obvious to me that generational shift is going to affect monetary policy somehow.
Or about halfway through, if we could put that slide back up just to ask the audience to participate in the question that President Kashkari's team is asking us to answer, would appreciate that. And you taking time either in this moment or subsequently to answer those questions. And we're doing well with questions.
And I'm curious, I mean, so, I shared what I learned this morning, that people are nervous about kind of the uncertainty facing the economy between tariffs and what's happening in Iran and just all of what we've been experiencing. What else would you say that businesses here are feeling that is front and center. Availability of labor came up a lot. It wasn't universal. I mean, I know this region is always structurally short of workers. I heard mixed feedback about that this morning, but I'm curious, what do you think is top of mind for folks?
Well, interesting, we had a roundtable with the next generation of leaders yesterday with former Governor Snyder, and a common denominator around that room of 12 was the impact of the bureaucracy and regulation. That would have been, I think, front and center. And then secondly, and you touched on it a bit, when you talked about kind of that banana belief that, build absolutely nothing anywhere near anyone. And so there's a lot of concern around just not in my backyard at this point. So those were really two of the big pieces we heard yesterday, and I think reflective of what we hear. The biggest opportunity from my perspective, President Kashkari, that's before the region, is a copper mine in the western end of the UP. 380 really well-paying jobs, and it's really embraced by the community. But there's that small, vocal, and emotional minority that are pushing back against it, that get the eye and the ear of policymakers, which make that then very difficult. So I think it's those two things principally that kind of gravitate to us.
Got it. Thank you.
Yeah.
Thank you. And if you folks have other things top of mind for you that's happening here in the UP that you want me to hear about, please, you don't have to ask us a question. You can make a comment, and I'd love to hear from you as well.
So we can mic you up. So this question asks if, it's a little bit of a repeat. So could you please highlight where you're seeing innovative approaches to community development in your district?
Yeah, so a lot of our district is rural, and different communities, they have some common struggles. Some of the common struggles are, even though they're rural districts, housing availability and affordability is a challenge for many of them. Availability of childcare, affordable childcare, accessibility of childcare tends to be a common problem. There's also tends to be declining population where young people who grow up there maybe go away to college, and then the question is, are they actually going to return afterwards? And so what does the future of our region look like? Those are common, widespread challenges that we see. I would say some communities have been more successful than others at trying to invest in some amenities so that their young people can come back and want to come back if they go away to school and come back. The availability of broadband is helping the people to start businesses, to be able to serve markets around the country or around the world. You also obviously have a university here, which is a key economic center and a center for innovation, and brings people from around the country or around the world to your part of Michigan. And so I think you've got some strengths here. But these are big challenges that many communities are facing, and the ones that I've seen tackle it most effectively, there's a healthy partnership between the local civic leaders, like the elected leaders, as well as the local business community and the local college. I think if you have those three things working hand in hand, then you've got a good shot at being able to change the trajectory and not just kind of end up wherever you end up, but actually shape your own destiny.
We did get a question in to that issue, President Kashkari, and it says, as you know, community colleges play a significant role in economic and workforce development. What partnerships or investments do you believe are most effective in aligning education, industry, and economic growth in places like the UP?
The things that I've seen are when businesses are very vocal about the skills that they need and say, hey, if you could produce graduates that have these skills, we've got jobs for them. And that seems kind of simple, but ends up being very hyper-local because each business is a little bit different. And so if individual businesses could partner with the local colleges, I've seen those partnerships work. We talked about it this morning, which is, when the labor market gets tight, it's actually remarkable what ends up happening. A tight labor market where businesses really have to compete to find workers, businesses start to change the way they approach finding labor. Like we saw it in 2018 and 19, which is a very tight labor market. We saw businesses say, you know what? I actually don't need a college degree for this job. I actually don't need an associate's degree for this other job. I can train you. If you can commit to getting here 5 days a week at 8 o'clock in the morning and working a full shift, I will invest in training you. Some businesses we saw for certain jobs said, you know what? I don't need to drug test for this job the way we used to. So we saw with a tight labor market, businesses reducing barriers, and then drawing more people in. That actually was very powerful and happened kind of across the country as a whole. I think that's one thing that happens. And then I think the other thing that happens are these micro, hyper-local partnerships between businesses and their local community colleges to build that kind of a pipeline. I've seen that be effective as well. But training and worker retraining and whatnot, these are very, very, very difficult things to do at any kind of national level. I've not seen evidence of them working at a national level. The only thing I've seen working is these hyper-local partnerships.
Well, speaking of what can be a difficult thing to do, you experienced it yesterday, and that's to get into the area and out of the area. And so this question asks, do you have any thoughts on the importance of having reliable rural air service for the economy to thrive?
Well, I think that's hopefully self-evident that rural air service is very important. It's like the mail or reliable internet. I mean, there's some fundamental things. Roads. So if you produce something in the UP, you need to be able to get it out. I think all of these things are table stakes, as they say, for our country and for all parts of our country. I had one conversation with an elected representative several years ago, and we were talking about the availability of broadband in rural America. And I just observed to him, we as a country decided that wherever you live in America, you're going to get access to the mail. As a country, we just have to decide, is that also going to be true for broadband? And a lot of money now has been made available for broadband federally and at the state level. So I'm told, and I don't know exactly what's happening in the UP, I'm told that a lot of progress is being made in rolling out broadband, and that the bottlenecks now are less about money and more about the workers and the technology and whatnot. But if I have that wrong, I'd love to hear it.
No, absolutely agree. Yeah, it's been a priority for us, and appreciate the work that our partner here, Lake Superior Community Partnership, has done around that, and our partner up in Houghton, Kita, has done. So, from our perspective, it's really difficult to have opportunity for us prosperity when it's so difficult to get in and out. So, staying kind of on the local side, this question asks, do you see Medicaid funding impacting local economic prosperity in rural areas of your region overall?
One area that's what I hear from a lot are hospital systems all around our region are really stretched, that their margins are low in good times, and now Medicare, Medicaid reimbursement rates are not keeping up with the costs that are continuing to climb. And so what ends up happening, one is those hospital systems are coming under financial pressure, and you're seeing some consolidation, and especially in rural communities, there may be hospitals that are closing, and so local families don't have access to the medical care that they need, at least within a reasonable distance. That's one challenge. The other challenge is if these reimbursement rates don't keep up with actual costs, then the costs get shifted to the private payers. And so the cost is still being borne. It's just shifting from the government to the private payers. And then it becomes harder and harder for private employers to be able to provide insurance for their employees. And so it's like there's no free lunch. It's got to be, the cost has to be borne somewhere. And so that one is I think a big factor that I hear a lot from rural communities and hospital systems all around our area.
And what are your thoughts, President Kashkari, on an aging infrastructure and that's impact to productivity and growth?
This is one I'm kind of skeptical of. So I started out my career, I studied mechanical engineering at the University of Illinois. So that was in the early 90s, I was an undergraduate student. For as long as I can remember, all the engineering societies put out these reports that our infrastructure is terrible and it's all about to collapse. It's been always about to collapse for 30 years. And so what I finally come to realize is these are mostly marketing documents for engineers who want to get more money into engineering. I'm not saying all of our infrastructure is perfect, but if you had a brand new airport instead of a 20-year-old airport, would it really boost the productivity of this region? I'm a little bit skeptical. It's a nice narrative that gets thrown out there. And so we need to invest in our infrastructure. We need to maintain it. I agree with that. But I'm skeptical that, hey, you know what? There are more potholes than we would like, that's what's holding back our economic competitiveness. I think that's, again, a marketing document for the American Society of at least civil engineers, probably mechanical engineers too.
How'd you make the leap from civil engineering to president of the Federal Reserve?
It's a long, meandering path. I studied mechanical engineering. I worked in aerospace for a few years on NASA missions, went back to business school to get my MBA, and then I went into banking and finance. And so I'm bullish on it. By the way, this is not criticism of engineers. I love engineering. I think engineering was great training for me. It's a very analytical way of looking at problems. And actually, I find it very useful in policy making. It's just, instead of thermodynamics, it's economics.
So thoughts on Chairman Powell not following tradition and stepping down?
Well, so the backstory to this question is the Fed Chairman, Powell, his term as chair ends in mid-May. But governors, he's a governor of the Federal Reserve first, and then the president picked him to be chairman of the Federal Open Market Committee, the Federal Reserve Board. His governor's seat lasts for 2 more years, roughly. So recent tradition has it when the chairman is done being chairman, he also stops being a governor. But that's not an obligation. There's no legal obligation that you do that. So he has articulated that he plans to remain as a governor for some time, just to try to make sure that Fed independence is protected. And he went through it kind of very in detail last week in his press conference, and I thought he offered a very thoughtful explanation.
Question here, how have the Section 232 national security tariffs on steel and aluminum impacted our economy, and do you have a belief whether or not they will remain in effect for an extended period?
Yeah, I don't know. I'm not a trade lawyer. I'm not a lawyer, and I'm not a trade expert. So I really don't know about the legal underpinnings of the various tariffs that have been applied. I know the courts ruled some of them were illegal, so now the administration has said they're going to use different tools to get a similar outcome. I think from an economy perspective, it created a lot of uncertainty when they were first announced. You had enormously high announced tariff rates, and then you saw negotiations take place and the effective rates came down. And then we looked at what was the actual tariff rate being applied at the border. What was the effective tariffs that businesses were actually experiencing? That was somewhat lower. So you had the big headline number, you had the effective rate, and then you had the actual rate that people were actually experiencing. And so we're monitoring this very closely. I'm hoping that in the next few months, we settle into some new equilibrium that you as business owners and leaders can say, okay, at least now we know what the rules are, and we can decide where we want to source our supplies from, what we want to charge our customers. Businesses have been trying to adjust their supply chains in response to these tariffs. And so I think stability, wherever it lands, stability I think will be good for the economy. And I'm cautiously optimistic that in the next 3 to 6 months we should achieve, it seems like we should achieve some form of stable new regime that we can all figure out how to analyze and operate under.
So picking up maybe with Chairman Powell, this question asks, do you feel outside pressure other than public comments from the administration is directing policy?
I'm sorry, say that again?
Yep. Question is, do you feel outside pressure other than public comment from the administration is directing policy?
Not at all. One of the things I can say is all of my colleagues and I are absolutely committed to doing our best to deliver on the goals that Congress has assigned us, using data and analysis to guide us. That's our true north. And the louder the political noise gets, the more we just hug the mast of data and analysis and objectivity. And we're all human, none of us are perfect, but I think overall, I think we do a pretty good job of that.
Have the financial markets become addicted to Federal Reserve intervention?
That's a good question. It's a conundrum because in 2008, we had this terrible financial crisis. And the Fed and Treasury and the FDIC and Congress ultimately all came together to bail out the financial system. No one wanted to do that. Because if you do that, it teaches people and it teaches banks and it teaches market participants, hey, you can roll the dice next time. And don't worry, the government will come running. But I remember hearing this interview with former Fed Chair Bernanke, who used this example, which I thought was a very good example. We're all taught, hey, if you're a smoker, don't smoke in bed because you might fall asleep and you might start a fire. So you're all taught that. And then your neighbor smokes in bed, falls asleep, his house catches on fire. Wouldn't you love to just let his house burn down to teach him a lesson? Well, you don't do that. One, because you don't want to kill the guy. But two, because we live in neighborhoods. And if his house burns, your house might burn. The whole neighborhood might burn. This might get out of control. So the fire department rushes in and you put out the fire to save that guy, to save his house, but to save all of our houses. That's the pickle that we have in this economic world that we live in. So bailing out the financial system in 2008 was absolutely the right thing to do, not for the sake of the big banks, but for the sake of all of us. But it keeps happening. You know, in 2020, when COVID hit, nobody's fault that COVID hit, the financial system was on the verge of collapse again. I couldn't believe it. So soon after 2008. And the Fed went in full-throated support of the financial system and managed to stabilize the financial system so a healthcare crisis did not become a financial crisis. I hated that we had to do it, but it was the right thing to do. And so these types of things keep happening. And so the downside of us intervening successfully is it teaches people that the Fed is there ready to intervene. And so we create this thing in economics called a moral hazard.
According to the IEA, they say that the IEA has only released about 20% of total oil stockpiles so far and ready to act again if required. The return of supply will be gradual once the Iran war ends, leading to volatility in the market. So IEA's bureau there.
Then I think it's the government's job to step in and stabilize things. I mean, the last thing I'll just say is another example I'll give you is a nuclear reactor. If a nuclear reactor is going to melt down, any government in the world will move heaven and earth to try to stabilize that reactor, not for the sake of the power company, but for all of our sakes. And so that's the challenge.
So someone took you up on the invitation to offer a comment, and so it takes up on the point I made about just how great your staff is, and they want you to know that last fall we had the pleasure of having a member of your staff, Joe, here to attend Local Economic Development Exchange in Marquette and share economic data. The session was a big hit. We appreciate the Fed's willingness to directly engage with local communities in that way.
Well, thank you. Thanks for that. So Joe he's here, one of our regional economists who spend a lot of his time on the road traveling around to these regions. I can't, I try to come to the UP every year. Sometimes I make it every 2 years, but Joe's here all the time just to be able to get intel from you on what's happening, and then he feeds that into me and into my colleagues who try to put this all together to figure out where the U.S. economy is headed. So when we invite you to participate in surveys, thank you for doing that. The data does get back to us, and it might make its way into the FOMC depending on what we see in the data. So we appreciate your partnership as well.
We have about 10 minutes left, so please consider that. And this question asks, how is the Fed evaluating potential changes to its data-dependent framework, particularly the integration of real-time inflation measures like
U.S. announces
inflation
transfer of
alongside
loan-rich uranium from
traditional
Japan.
lagged indicators?
So we look at a lot of different measures to try to get a sense of where inflation is going. We look at the official government statistics. We look at private sector. The various private firms have their own inflation indexes that they create, indices. We look at other experiments that people are trying to get a read of what's happening in the economy. Online prices, for example. And all of those are put into the sausage making, so to speak. And if somebody introduces a new data set, says, hey, I think I've got a better way of measuring inflation, we'll test it. And we'll say, let's look at it. Let's see how it does over time. And it's possible over time we might switch. So we've concluded that PCE, personal consumption expenditures data, is the best read that we have of what American families are experiencing on a day-to-day basis in inflation. That's our best measure that we should aim for. But that doesn't blind us to looking at all the other data sources.
East Beach Neighbor says European private credit market currently too small to pose systemic risk.
Different measures may tell us different things about what's happening in the underlying inflation trends.
Also, House lawmakers have proposed bill banning Chinese vehicles.
So core inflation strips out food and energy. It's not because food and energy are not important.
Schnabel says that more transparency is needed in the private credit sector before it becomes a systemic risk.
And so if we paid attention to this, we're going to get confused. And so we tend to look at core inflation because it gives us a better signal of where the economy is going. And this stuff, the food and energy that does this, will probably even out towards where core is over time.
This asks, given the Fed's own admission that SVB examiners flagged problems years before it failed and nothing happened, What's changed in your escalation process? And does the Minneapolis Fed apply any heightened scrutiny and quick response to banks serving remote rural communities like in the UP, where there's often no readily fallback institution available?
Well, there's been a lot of, so let me just first of all say, the regulations, banking regulations, are created in Washington, D.C. by the Board of Governors. And our jobs in the 12 regional banks are to supervise institutions using those regulations as the rule book. And we want to do that in a consistent manner all across the country. So a bank in the UP is going to get treated the same way a bank in Texas or a bank in California would get treated. And Silicon Valley Bank got into big trouble because they had bought a lot of long-term treasury bonds. And when interest rates went up, the value of those bonds went down. Their customers got scared and started pulling money out. And you had a classic bank run. And then it led to a little bit of a cascade requiring the Fed to intervene again to try to stabilize. We were effective in stabilizing it, but again, there's the moral hazard that I talked about from that as well. There's been a lot of reviews done
ECB's,
of how that
ECB
happened
Schnabel
and
says
why
the key,
escalation wasn't taking place.
the key question
quickly
is
enough.
whether energy price
We have
shock
a fairly
broadens
new,
to other parts of the economy.
which we call her the Vice Chair of Supervision, Michelle Bowman in Washington, D.C. She oversees this portfolio for the Federal Reserve, and she's embarking on a series of different reforms to make sure that we are, scrutinizing the right things, not spending time on the wrong things, making sure that there's appropriate escalation. I mean, one thing that I do at the local level is I say to our supervision department that they need to feel comfortable to escalate. They need to escalate. They need, if they need my help in escalating, they can come to me. If they're concerned about something, we want to make sure that the right leaders in Washington are aware of it, and so that we can bring the right judgments to bear.
This question is interested in your perspective on the wealth gap and the concentration of capital in fewer hands, and whether the Fed can or should take any action to impact that.
It's not the Fed's. One, we don't have the tools. Monetary policy is a blunt instrument. It affects the whole economy all at once. We don't have an ability to say, we're going to target you, and we're not going to target. We're going to target this table, we're not going to target this table. Those are purely fiscal policy decisions for Congress, the executive branch, your state legislature and governor, your local leaders. And that is, separate out monetary policy, which is just interest rates moving up and down. With these type of distributional questions, that's really for tax policy and fiscal policymakers.
This question asks, with the 2008 recession, COVID, and significant military conflict, how many tools are left in the Fed's toolbox to fight the next financial crisis?
What was the first part of the question?
It asks, with the 2008 recession, COVID, and significant military conflict, how many tools are left at your disposal?
Yeah, I think, the Fed is well equipped. Who knows what the next crisis would be. But as a general matter, I think the Fed is well equipped to do its part in stabilizing the financial system should a crisis emerge. There's tremendous institutional knowledge across the Fed from prior crises. So in 2008, a lot of what the Fed did in 2008 was unprecedented. For 2020, we repeated many similar things much faster and at much more aggressively and much bigger scale than was done in 2008 because we had the lessons learned from doing.
Excuse me here, guys. Hold on a second here.
ECB Schnabel says
Seems to be some miscommunication here. Hold on.
as wages increase in response.
at our
That
crisis
is the sign the
response
monetary
because
policy
we
has to react.
Turn off Kashkari there. Turn this guy off for a minute.
Disconnected.
Give me just a second here, guys. Let's go over here and talk about this. So we've got NFP tomorrow, and we have the U rate tomorrow. Get your pens and papers out. Your notepad, whatever it is you use. We're going to talk about this. So there are, just like there are different people in the market at different times, you want to be able to identify who's in market, when and where, right? So you don't want to you don't want to be fighting those currents. And then there are times where people can or people are not in markets and only other people are in the markets and they can move the market, right? If there isn't like 3 or 4 competing forces, like there's just one force, you can easily find out where the market's going, up or down or whatever, sideways or whatever that may be, right? When you get into these binary events, like you get into the middle of like OPEX or quarterly OPEX, you ever like, yeah, like sometimes I don't see it frequently anymore, probably because I yelled about it so much, but if we weren't here right now, if we were somewhere else, you'd probably hear traders frequently do things like plot and plan on OPEX or quarterly OPEX, right? They like come into like a quarterly OPEX Friday and they're like, we're going to do this and we're going to do that and we're going to do this and we're going to do that. And what they're doing is they're fighting a mechanical thing with no edge. Does that make sense? There's no edge. And you always want edge. So when you're building a plan, let's say, right, and you're like, I need edge for this, right? So you're like doing all your maths to get your edge in for what you're trading. And then you have a cross current of other things going on in the market that you have no control over. And you're like, well, my shit broke, or my shit outperformed, maybe like broke really bad or outperformed really good. And it can leave you with not knowing why it failed really bad or why it succeeded really well. And then you try it again and it doesn't work because you're not in that fucking situation where there are other things going on in market. Does that make sense? So as a trader, you're always trying to trade when you have an advantage with your plotting and planning, and then your advantage with who's in market with you too. So the reason I bring that up is because we have something tomorrow called NFP and the unemployment rate. So U rate, unemployment rate. What you want to do is simplify these things. You know, like when I was a young trader, right? I would go from like trading thesis to trading thesis. So like follow the Elliott waivers around, right? And I believed all the Elliott waivers. I was like, those fucking guys know, like those guys are good, right? And then it failed. And it failed enough that I took on a lot of pain for that, right? So I was like a disciple of Elliott Wave. And then I was like a disciple of Gamma, right? Then I'm like a disciple of traditional charting, disciple of candlesticks, disciple of ICT, disciple of triggers and velocity, all these different things, right? And you kind of want a unified theory. So my unified theory is I want to know who's on what base. I want to know who's on first, who's on second, who's on third, and what they all think is going to happen, okay? So you layer all of these different theses so you at least know where everybody else is. Make sense? So you'll see me like count candles. You ever see me on the show? I'll count candles and I'll draw like a traditional fucking bear wedge or something. But then I want to see what the velo is on, or the velocity and the triggers are within that traditional charting. And you'll ever hear like, then I'll start doing counts on waves. And you ever hear me tell you things like, your highest probability is the middle belly of this 5-wave move. And you'll see people like measure that stuff, and they're like, well, if you don't get this measure and you do this, then you're like, if you know, if we're doing this 5-wave right here, and this isn't longer than this, this breaks down for a second underneath here, that kind of stuff. So you broke this, we should go down, but it saved itself and then broke this prior high over here anyways, maybe pops back up and, you know, defeats that thing. So the reason I'm bringing all this up is because we're coming into NFP and the unemployment rate tomorrow, which is a binary event. So it's a major one. If you speak to a futures trader, someone that exclusively trades futures, they'll tell you oftentimes that they never trade around NFP. They just sit on the sidelines. And their rule is basically, if it goes down, I'll long it. If it goes up, I'll short it. Have you ever heard people on Twitter say, you fade the NFP print, price action, about an hour and a half, 2 hours after. Do you guys know this rule? Have you ever heard this anywhere? If you haven't, that's a real big rule traders have. Then they don't care what the outcome is. So listen to this like futures trader thing, right? I don't trade NFP. I trade the reaction on it. I fade whatever that move is, and I don't give a fuck what it is about 2 hours after. Now, every once in a while, they'll be wrong. But 9 out of 10 times they're right. And if they have that edge and they trade it like that consistently, they have an edge. So there's some other information here too. In those rules, there's some other rules. If we trade up into NFP, you fade it as we come into NFP print. If you trade down into NFP print, you long it. Does that make sense? This is before the after 2 hours after cash market open in New York City, where you fade that move. Hopefully you're following along right now. So the top line rule here is that you do not trade NFP. Now we're going to go back to a segment I did earlier because I want to discuss this with you too, which ties into this. So let's go up here. And I was trying to explain this earlier, but maybe you either weren't watching the show, or some of you weren't watching the show, or you weren't paying attention, or whatever, when I drew this chart right here. And this chart is very important in this thesis and these rules and all of this kind of stuff. So I want to talk to you about it one more time. I want to review it one more time. So right in here, okay, we have, I'm going to show it to you this way. This is the gamma visualizer, okay? And we're going to go with 0 dates right here. So I just want to show you this. So you have 7350 right here. There's a prominent gamma bar. It can act as an attractant. It can act as a repellent. And there's one right here too. Okay? So we're kind of like roped in. And this is 7345 and 7350. So let me click over here really quick, okay? So this is 7345 right here, right? And 7350. And we're coming into a known event tomorrow morning, NFP right here, okay? So the market opens up this morning, right? We have 0 date gamma. And the first thing that we do, let me put this back on a 1 minute here, because you can't see the price action with this chart. So if you go back over here, right, and you have the opening today. We decided to go up, right, into the top of the 0 date gamma up here. We hit it, right? It's early in the day. We come back down to this next gamma bar on 0 dates. We bounce, don't we? Ching, right? We have bouncing of price action, right? This is the real price action. Now, remember, we're sitting here as this is happening, and we keep rules, don't we? We say, okay, we think we're going to come down here. We're going to bounce. We want to see the beat of the new high. We want to see this actually up here to trade this to go back up here again. Does that make sense? And we have gamma over here for 7,400, don't we? We have gamma for a target up here at 7,400 while all this other stuff is going on. So when we're coming down here, right, we don't get our buy to go higher. We get dragged down underneath the pin for 0 dates here. And so did you see where I wrote this down here? I wrote PT by end of day. Why am I saying end of day? And the reason that I'm saying end of day is because we can't get down there. We cannot get down there unless we get what? A gamma unclench for 0 dates today. And that window does not offer itself until the end of the day, like last 10 minutes. And if we don't get that unclench, they'll do it after the bell. Like once those options die that pin the market or clench the market in. So let's go look at this top one again. So notice how we're being sucked back up into this right here. We're being sucked back up into this right here, right? We're not above it, are we? So we could theoretically go like this, right? sucked in here, and then if we get an unclench, come back down this way. Or after the bell, right? You get the unclench and we start dropping to the downside, finally, right? Now, there's some more here, too. So we're underneath this bottom pin, and someone was saying, well, can we squeeze today? And I said, sure. But if we squeeze, what do we have to do here? What does a squeeze look like in here? Because right now what this looks like is we're going to get roped in and just go sideways. But let's say we even went up here. So we go up here, right? You would need to be up here with two highs to potentially take this trade in here. Does that make sense? Potentially. But even then you're going to get sucked. There's like a sucking down delta. There's like sucking down like a delta dynamic that's taking place under the surface too, that's wanting to suck you back down into this, and even suck you back down into this into tomorrow. Okay? I don't know if that makes any sense or not, but it's okay if it doesn't. So you have a path here. You have a path to go up here, but then you have this event in here that's taking place, okay? Any of these outcomes are possible inside of these paths. You could actually see this go like this. You could see this like escape up here, and especially if you've got put buying going on, if everybody's hedging. Like I own all the market, and I forgot to put my hedge on today with cheap puts, and so all of a sudden, right, they're buying puts down here, right? The moment they're done with puts, what do the dealers have to do? Chase those guys down and delta hedge their puts for tomorrow too, right? They're going to try to murder their puts for the print in the morning. Does that make any sense? And their dealers are working on each individual batch of call buying, put buying, and they're chasing these guys, they're chasing these guys, they're chasing these guys. And then once they're done chasing each group of people, they're unloading into them one way or another, or buying the market, right? Like I'm chasing buying stock with retail traders. The moment retail traders stop buying calls, I start unloading equities on them, right? Now, if you mix this with put buying to hedge the event tomorrow, all of a sudden you get an amplified move down again, right? The moment they stop buying puts, what do the dealers do? Try to buy this shit back up again, right? Try to murder those puts for the print tomorrow. So you have a lot going on, don't you? You have a lot of cross and a lot of people in the market at this moment right now that are fucking with your tools and rule or tools or whatever. Just like an OpEx. This should happen. This might not happen. Then you've got other players in there that are all doing their own things while you've got your own thesis as to what should happen, right? Indubitably. So like a lot of like things going on while you're trying to get your thing going on to get up over here. Why aren't we just going straight up, bro? Because we have an event here. And then within this event, you have unrealized volatility and realized volatility. So you've got, check out all this noise here, right? You got a lot of noise here on just this event. So you have a lot of counterparties, and you have dealers and traders, and you have all these different groups of traders and all these different people, and they're all, you got people that are investors trying to hedge just NFP. I'm going to hedge my underlying. I made a bunch of money this week. I'm going to, I own S&P 500. I'm going to throw some cheap puts on there. If we go up, I don't care, right? They burn. I'm going to make more money going up anyways. If it goes down, I can make a bunch of money here, and then we go back up again and close the puts out, right? So you have like a lot going on, a lot going on right now at this moment for NFP. So my point here is that when the old adage from these guys, with the old adage of don't trade NFP comes into play, a lot of this noise leaves, by like 10 in the morning, 12 in the afternoon, and we start fading back up over here, right? And we have gamma down here, right? We got 0-date gamma up here. We got 1-date gamma for tomorrow down here. We have more 1-date gamma down there. Does that mean we can't trade under here? Absolutely not. We can go down here and trade underneath. That's realized volatility. That's when we get like a bad report and it's really fucking horrible and it matters to the market, right? So we go down, and then 2 hours later, it's been priced in, and we're done again. So if you don't want this volatility, let's say we have a good, so we do this right here. We pin in, we get the unclenched to the downside, and the U rate is fine. Unemployment's outstanding. We don't go down that deep. And the moment we blow that volatility off from unrealized volatility, the market is free to ramp, isn't it? Right? Whether that's at 8:30 in the morning or 10 a.m. in the morning. Let's say it's at 8:30. We get a good report tomorrow. There's a lot going on here. But let's say 8:30 in the morning, we get great reports, right? So all of a sudden we go like this tomorrow. Whipsaw straight up to 10 a.m. We stick our heads up, make the new high right here, right? And then at 12 p.m., they're selling this again. Does that make sense? Like literally fade that fucking move. They come back down again and we're back up on track again to go higher again. We're still with all of this still works. Do you see how like we're still inside of this path? This fucking path can be like this. It can be like this. Does that make sense? Like we're in and out of this path, and currently we have a ton of vol associated with this event tomorrow. Does that make sense? I don't know if it does or doesn't, but now it gets cleaner as we exit this volatility, right? We got the pin for tomorrow, the top pin. Then on Monday and believe it or not, Tuesday, we have 704, or excuse me, 740. There's a pin over here too for Tuesday. So you could say top Monday or even top Tuesday. You can even put it over here, top Tuesday. So price or time, right? You'll hear me sometimes say, you have a window to do this. So let's go look at this right here. And let's say something unexpected happens tomorrow and it's really fucking bad, right? So these are 0, 1, and 2, and 3 dates, right? So let's say we get really bad news tomorrow. We have unrealized volatility. We find out that it's horrible, bad, blast straight down. How does that impact 0, 1, and 3 dates? It impacts them pretty high, doesn't it? So you're down here and you're trying to fight back up here to get up into Tuesday 740. Will that still be there on Tuesday? Probably not. This whole gamma map would change, right? And all of a sudden on Tuesday, you're just trying to fight back up into where we were originally from the event, right? Now all of a sudden on Tuesday and Wednesday, you're right here. Now you're 0, 1, 2, 3 dates of fucking flushed. If it was really bad, you could literally change the entire gamma map, go up here, and then start making your way down. You'll start people start loading up. Oh my God, that was all horrible. It's material to the market, and they'll start fucking loading fucking options to trade us to the downside. So this is an evolving, living thing. Does that make sense? So you make a plan, right? When you go on a hike and you're walking through the woods, you got a plan. I'm going to walk 5 miles that way, and all of a sudden you find a bridge washed out. What do? Do you continue to walk across the fucking bridge that isn't there and crash and burn? No, you adjust your plan, right? So yeah, we have new information. We found out the bridge is out. We're going to walk around it to the next bridge and continue on our journey. Does that make sense? Or the bridge is out and there's no other way to cross, so we're going to go home. But you have to have a plan. You have to know everything else that's going on with what you're doing and the alternate routes to get there if something happens in this market. Because this does happen. Things change, right? So I don't know if I'm making any sense here, but so what do you have here? You have a plan or we have a plan based upon gamma. This is a gamma plan, right? Until we have some kind of new information that nobody knows. Does that make sense? So you have unrealized volatility over here, right? Let's say we get good news. We spike all the way up here. We can even spike up here if you wanted. Right back down into it again. Fade it again. All of a sudden you get Strait of Hormuz is open. Wham. We're up to 740. We're done. Right? We did it before we got to Tuesday. Does that make more sense or no? Does that make sense or no? We'll watch this together and see. And we look like we're gonna break out right now, don't we? On SPY. If you just look at SPY right now. Look at this right here. So you're looking at this right here, right? This looks like it's gonna squeeze, right? It's gonna squeeze titties off up here. We can bam up into the close up there. Is that what you're looking for? But we know something else, don't we? There's a pin in here, right? There's a pin in here, right? So you remember earlier when I said to you, we have to get above this? And then we need to get above that one up there, right? To even consider taking a long. So let's say the squeeze is showing up, and you remember that one over there? You still kind of need to do that, don't you? You got to do that one, and you got to do this one right here, right? Make sense? To even institute a long. And then you're thinking about doing that now at the end of the day here at 4 p.m. or 4 p.m. or whatever. This is a trap too, isn't it? So they just shit can your ass on NFP when you should have bought that fucking dip somewhere else. So you have to ask yourself the questions, who's asking why? Like when someone says, why can't I buy a dip? Why can't I do this? Why aren't we going up? Why is this? Usually you'll find out they're long back here. They didn't believe me. So they want this to print. Or they're long back here and they didn't close them out up here like you told them to, right? Hey, get out, wait for 10 a.m. Now we'll get out, take the money and run, wait for 12 p.m. flows. They're likely not following the rules. So they're in a trade that they're going against the rules and they want to fucking print. Does that make sense? So, or why doesn't it go straight up like it did yesterday? I want it to go straight up like yesterday. And this is not the time to do that. And not only that, even if you're going to trade this squeeze right here, you likely need to be above that pin, don't you? So if we go up here and look up here, if you look up here, do you think this is dangerous for a bull? Because I think it is. I don't think that they can't not be right. I mean, they might be right, and we go like this. We go straight up into the close right there. Do I think they have an edge in that trade? No. I think they're pinned in right there. And I also think that even if they break above it, let's say they break up here, up 1 and 2, and they want to take this trade, I think that there's a good potential to take that trade, but I think they're going to get sucked in by the time we get to 4 p.m., either the last 10 minutes or afterwards. No, I don't think there's a breakout up here. And I wouldn't trade it even if it did. And it's not that you can't win this trade. It's that, do you have an edge? And that's my bigger question. Do you have an edge? And I'll be honest with you. I've lost too much fucking money with no. They don't. I've been around too long to sit there and watch people say, look, you were wrong and I was right, and then they fucking disappear the next time that setup comes. They're gone. And if that setup doesn't work out for them today, they disappear too. And they come back until it does work, and then they look like a rock star. And I'm not trying to come off as angry or anything. I'm not. But I know already what the percentage probability is of all of these things happening. And I'm unwilling to take that trade until I have a clean path to take it. Like I have all my ducks in order, because they're going to go wrong still 15% of the time. 15, which is low as fuck. But you need everything in your favor. I got to ask you guys a serious fucking question. How many of you out there, right, make a good trade, then give it all back? Make 5 good trades, then give it all back. All of it. And I know it's frequent. It's frequent because you're not fucking following rules, and you're, or fear of missing out, or you don't understand what's going on, or, you have a few wins one time and then you rely upon that the next time and you get blown out. Like, why did it work that time and it didn't work this time? Why did I hear this news and it worked, and then the second time I heard the same news in the same situation, it did not work? Like, news is great for inflection points, but that's about all it's good for. Tits in a bull otherwise. Like good news is good news and bad news is good news, and I can't figure it out. Well, I do know how to fucking figure it out. I know when we get good news is good news and bad news is good news, or whatever it fuck it is, however it's said or whatever. But that's because I'm already pre-planning and plotting what the probabilities are, and you need to too. So for right here, there's no edge. There's no edge. Now there was edge earlier, like right back when we were here, right? Right back when we were over here, I said, hey, we get the bounce over here, but we got to make this big bounce up here, and then we can get some edge in there to break out and away. And there was time enough in the day to do that. So if we can do that, even to make an equal leg up here, if you made the second one, if you did the second one up here, you could bammo take that thing out, and then we could roll down here into the close. Does that make sense? And we have time and room and breathing room, and we have flows coming in at 12. And if these are buy flows, we want to be with those guys, right? But even then, you're likely going to get sucked into the close over here. So for me, at least, there's no edge here. There's a big giant sucking sound trying to take you down. You're fighting. You're literally fighting something that's already working against you. Even if you win, it's working against you. So why would you want to be fighting? Like heading into the close today, you're fucking fighting a mechanical thing with a lot of cross currents. And when you could just take the easy trade, the bread and butter trade, it works out every fucking time if conditions are correct. So for me at least, does that make sense? So in this gamma map here is not the path. This is the gamma path. And we're using this gamma path, right? I already gave you the path. So we have this one path, right? And then we got what's gamma doing. This is the gamma path. And so, and this thing can change fast, right? You know, my favorite gamma company out there, I've always said one of the worst things they do is they don't do something they don't update quick enough for people. We do a live stream all day long, so we have that advantage. Hey, it's changing. Hey, this is happening. But those people don't, do they? They've done a better job at it, but, you know, gamma is the kind of thing that's like can change fast, can't it? Especially if the main dissemination of that information can get stale really fucking fast, right? So remember that we're here, you know, all fucking day long. You know, like it's rare. There's only so many people that do this all day, every fucking day, 5 days a week with a show. There's not many. It's kind of on a hand. 10, 20 maybe. So you know, this kind of reminds me right now of hindsight trading, where oh look, it went up. Next time I'm going to do the same thing, kind of stuff. You just sit out. It's literally sit out and wait until your conditions are met. So if my conditions aren't being met and I don't like them, that doesn't mean you don't have to trade it. You can do whatever you want. It's just not my setup. Does that make sense? So even though this path is here, and let's say we squeeze, say we fucking moon up here into the bell, that's not my setup. And I ain't taking it. Do you know what I mean? And you can take it all day long. I've lost enough money. I've lost fucking literally probably $500,000 fucking dollars, if not more, maybe $1 million on shit like that. So for me, at least, I just want the best trades. If I can get the best trades, I'll take it. And even if we squeeze up here, I'll probably, if not today and tomorrow, I'll probably get another chance tomorrow at 12 to get that long into Monday and Tuesday. So I just want the conditions to be perfect, or as perfect as I can get them, as close as I can get to perfection, in the most imperfect thing that you can ever deal with. That's what I want when I trade. I want the easiest setups. I don't want if I was to just trade the ooh wow over there, I missed that, and the run over there and be the supply, and run over here to be the supply, and tail between my legs, I'm getting ragdoll back and forth. You know what I mean? I'm chasing something after it's happened. Does that make sense? So I want to create my own tools and rules. I want to apply them so that they're consistently right, and I mean consistently. And then I want to execute them in the stock market because I'm going to be here for years. How many of you have been here for years? Most of you, I would think. Or if you're just starting, you'll be here for years. So until you learn, you're going to, one way or another, the market's either going to teach you or it's going to wash you out. You come back again, and it'll wash you out again until you literally find something that works for you. Not for me, but for you, where you're consistently making money. And it's a very small group of people. It's not a large group of people that know these or that do something similar to this. It doesn't have to be my rules. You got guys out there with their own fucking rules that have nothing to do with what I do, and they're consistently making money. That's because that's their rules, and you need to have your own for your own trading style. But the inconsistency in rules for yourself it's a killer. It's a fucking killer. When you're just like walking into things and going, well, it's going to work. Hey, AMD just went up. It's going to do that every ER. Fuck no. So you have to like have the perfect conditions for you to make those calls and try to be right as much as you possibly can. And I really don't care if we squeeze here. I give a rat's ass. If anything, if we squeeze here, I might buy some puts for the close because the first round of put buyers already came in. You can see them right here. So it's just a pain trade for those guys into the close today. Yeah, the rule here, the top rule is what Supergal just said. Be patient. And there's been a few trades already today where I said, don't do this and don't do that and don't do this, and it worked, didn't it? How many times so far today? If I were to go back in this stream, from the start of the stream to the close, or to right now, and I said to you, don't buy that dip, don't buy that dip. Okay, buy that dip. If I go back, I bet you there's maybe 7 or 9 times I've said certain things to you today, and they've all been correct. And there's a reason for that. And that's because the probability was on my side. It's not because I'm smart. It's not because I have a fucking crystal ball. It's not because of any fucking magical powers that I have. It's only because I've been through this so many goddamn times and fucking seen when it's worked and hasn't worked, that it hasn't worked enough for me to do that thing. Does that make sense? So even if you didn't make money for the last half of this day, how many times have I saved you money? A ton. You didn't see me buy puts in that trade. I didn't want puts in that trade, and the reason I didn't want it was because I didn't want to do the grind all day long. I don't want to be like suffering all day long as they try to drop the market into the close. And I know there's no VIG on puts either. There's not enough VIG for even a hedge. When they're hedging this, it's not directional. They're literally hedging this. So it's not a directional trade. There's too many call buyers, too many bulls. So there's not even any money making puts in this. You could trade futures and make money on the down move. But even so, what was that? A drop? I'm just fucking with you guys. So the reason I'm bringing this up is because we were talking about it in the Discord. What was that right there? Where's that guy saying we're going to squeeze? What the fuck is he? Did he disappear yet? What's that right there? I want an answer. Give me a fucking answer. They're all gone now? Did they disappear now? They got back in the hole again? How's that fucking feel? That sucks, doesn't it? So, when you hear me say this stuff, it's like written in blood. My blood. I'm the fucker that's lost money doing that. Too many fucking years of me losing money like that. So, when I say these things to you, like, I'm not dicking around. I'm being pretty fucking serious because people can lose money, right? You know what I mean? Like, you're over there, not in my stream or my chat or my Discord or anything, but you're over there telling people like on public somewhere, woo, we're going to squeeze. And when it doesn't squeeze and you get blown out and they get blown out, they get pretty fucking pissed about it. They get angry. So, this is why furus lose. Like people go from furu to furu to furu to furu until the furu is wrong, and furus get full of themselves. They're like, I got it right, and they get one wrong, and they blow everybody up. I'm not into that shit. So, I'm trying to take the best trades you can get. To like see through all the bullshit, see through all the noise, see through all the news, see through all the social media, see through all of it, and say, that's our trade right there. If that makes any sense, I don't know. Yeah, there is. There's a rotation, 100%. So, we do our own thing here. We're trading, which is completely fucking different. So, written in fucking blood. And I know there are people out there that know what the fuck I'm saying right now, and they're quiet. They don't say it. They might be like, you got that wrong, you got this wrong, or it's not that, it's really this. Like, guy's smarter than me. But I keep my shit simple. I don't try to, when I learned something, when I was learning shit, I'm like, what's my key takeaway from this? What do I need to remember? What's the meat of what I need to remember? Because I'm going to be needing to remember not just the Gamma guys shit. I got to remember the Furu guy, the Elliott Wave guys shit. I got to remember the fucking traditional guys shit. I got to remember the fucking ICT guys shit. I got to remember the triggers and the velocity guys shit. I got to remember that shit and this shit and that shit and this shit. Who's on first, second, third, and fourth. And then I got to write rules for myself and say, I'm going to keep this really fucking simple. I'm not going to complicate my fucking life. And I'm just going to wait for my perfect fucking setup. And when I see my fucking perfect setup, I'm going to go to you and say, hey, I got a perfect setup. You ready for it? And if I get enough of those in a row, you like me. You're like, hey, that guy fucking gets them right. Or John L. gets them right. Or Binky gets them right. Or fucking Winky gets them right. And I surround myself with those kind of people. You know what I mean? I keep those good traders near me because I know they do the same shit that I do. And I know that if it's not the same, it's similar. It's their own system that they have, and that they've backtested this shit a million times like I have. Again and again and again and again and again and again and again until you get it right. And it's the shitty part of trading. And if you're watching the show and listening to me right now, and you're like either lost or you don't know what the fuck's going on or whatever, just stick around, because the more you hear it repetitively, the more it'll hammer into you, and you'll formulate your own rules. You shouldn't have my rules. You should have your own rules, like what works for you. But the bigger lesson here is, do you have a fucking edge? And I want to know what the fuck it is, because I would love to have your edge. I would. I got no qualms saying, hey, I'm not the best trader in the world. I got no qualms showing you when I lose. I got no qualms of having egg on my face. I'm going to show you exactly what the real life is of a trader. That's the only thing I promise you. I'm going to show you what it really means to trade. I'm going to show you what it really means to figure out rules and tools. And I'm going to show you how to have an edge for yourself, and you can apply anywhere in the stock market just by trading SPY. You can apply it to ES, Qs, IWM, fucking your favorite stonk out there. All of it is applicable anywhere. And Old Faithful is not your fucking favorite stock. It's the SPY. It's the SPX. It's the ES. It's not Qs. It's not IWM. The fucking regular fucking thing that you can always come back to no matter fucking what, most times of the year, unless we're in some kind of sideways shit, which does happen, right? Middle of summer, we're going to hit that, and we're going to have to leave SPY more than likely, or trade within the range or whatever. But at the same fucking time, all of this you can use and take with you to use somewhere else on something that you love. I love crypto. I love Bitcoin. I like oil. I've had people tell me I can't trade fucking oil, that I can't forecast oil and gas. I fucking forecast that shit fucking twice a day, 5 fucking days a week successfully. I fucking forecast rates. I fucking forecast currencies, and it works across the board. So, dude, can you imagine taking that trade right there? I'd want to fucking pound fucking wood right now. I bet you there's somebody watching this fucking show right now that's pissed off because of that turn down right there. I guarantee it. I love all of you. I love you, Parlay. I'm not mad. I'm expressing the no, it's not anger, but the emotion of it, because this is real money. And for a lot of people out there, they can get really fucked up by listening to, what about this and what about that and what about this and what about that? Like, it's kind of like when you were the teenager. You know what I mean? And the teenager's like, what about this? What about that? With this? And the teenager doesn't realize that you've already done that. And you're trying to be calm and explain to them. And it's not a discussion. The teenager doesn't know that it's not an open discussion. You're the adult and you're telling them, no, we're going to do this because of this. Or I'm not going to tell you all of it because no time for it. Or I'm going to explain it over years to you. Whereas a teenager thinks that it's an open conversation, right? With the adult, and it's not. You know that as a parent, right? It's not an open conversation. I mean, you listen to the kid as much as you can, but the kid keeps going on with what about this and what about that and what about this and what about that, and you already know the answer to all that stuff. At some point, you just say to the kid, it's cool, just relax, man. I'm going to teach you this and explain the reasoning why over time, and we'll do it again and again and again. And I promise you, son, that you're going to be right more than you're wrong. And then eventually your son goes, I trust my dad, and I'm going to listen to him and what he's telling me to do, and I'm not going to do the oofs and whats and maybes and what about this and what about that, and what about my buddy up the street and all this other shit, and the Joneses across the road. Your kid has no concept of the Jones. You can't chase the Joneses. You know what I mean? That's why your parents tell you, like, fuck the Joneses. Stop comparing yourself to your bratty up the street with the fucking 2.5 kids and the white picket fence, and you have a broken down fence. How do you explain to a kid why you might not have a broken down fence? It could take years explaining that to him. More than likely, that kid's going to have to learn that on their own experience. So the same thing applies here to some extent. There's a soliloquy for it. It's this right here. So you just wait for your perfect setup. When you get your fucking perfect fucking setup and you're following your fucking rules, your own, not mine, you're like, every time we come in an NFP cap, this happens. And I'm going to say it another way too. There's easy ways to learn this. On your own, a good way to look this stuff up for yourself so that you can be a kick-ass trader is you go back to every NFP and you start snapping vertical lines. And look at the price action into NFP. Look at the price action during NFP. And then look at the price action after NFP. And what you'll find is everything I'm telling you right now aligns with that history. And so that gives me a fucking edge. So when you're trying to fuck with the markets on NFP day and you're making plots and plans like people do on quarterly OPEX, there's a lot of fucking traders that look at you like you're fucking crazy. That's not every instance. If you have the most shorted stock, it might go ripping on QOPEX. If you have the highest stock, it's going to go down on OPEX. Those are other rules. But that trader likely doesn't know those things, because that trader would have likely acknowledged those things when you're discussing quarterly OPEX. They would likely already know what I'm telling you about NFP. Does that make sense? So when you're getting the what if this and what about that, it's a tell to the dad that the son doesn't know what the fuck they're talking about. Sometimes dads are dickheads. They'll just go to their son and say, you know what the fuck you're talking about. And other dads will explain it to you. Other dads will explain it to you, and then when you don't get it, they'll come back and they'll explain it a second time to you. And sometimes when that dad's telling you that, they're telling you that with force so that you can stop and listen. Because I don't want you to fucking lose money. And I want to imprint this upon you so that when I'm not here, you remember these things for NFP. It's not because I don't like you, don't want you to be around or any of those things. I'm doing this for your benefit so that you don't get fucking hosed at the wrong times in the market because of bullshit like NFP. Does that make sense? So if there's a squeeze set up at some point, I did say it in the Discord, if there is a squeeze set up today, we will take it. But the conditions are not quite yet, or we're not quite there earlier. So if we can get that setup going and we can take that squeeze into the close, we'll take it. But if it doesn't present itself, we just sit here and we be what? Patient. We just sit here and we wait. It's that fucking simple. And if the conditions present themselves, we take it. And even in this trade right here, when we were looking at this trade, what did I say to you about this trade? You can trade the inside of it, but you can't commit to it. Notice how that worked? So little rules along the way as we go. You pick them up, you write them down. And, if I'm wrong, I'll change that rule. I'll adjust that rule. And then rules change. The market does change to some extent. There are things that work and then they stop working. And there are, as a matter of fact, I was talking about this morning, I was talking about Warsh. And I said I'm fucking my voice right now. I was talking about Warsh this morning, and I had said Warsh could change the landscape of FOMC meetings. Warsh could change the landscape of a Senate hearing, because that's how it used to be. The trading around FOMC meetings has fundamentally changed, which changes your rules and how to trade it. If we go back into that system, those rules around that date will change too. So you can change your rules over time as well, depending upon the conditions that you're in. And that's a whole other conversation, but I hope this helps. I really do. It's NFP. You can do on a day like tomorrow is we could do a poll today. Who thinks we're going moon tomorrow on NFP and who thinks we're not? And I bet the other half, the people that are wrong, are going to disappear, or they don't tuck tail between the legs. I wouldn't want to be out there. Oh, shit, I said we were going to squeeze and we went down, man. That sucks, right? I hate that too. I show up every fucking day when I make a bad call. I come into close and I'm like, we're going to do this tomorrow. And it's different, right? In the morning. I don't want to come to the fucking show. I'm a human like you are. But I do, right? So, it's okay to be wrong, but be wrong from the position of, this was my thesis. It was wrong, but this is the reason I made that thesis. Not just, hey, we're going to squeeze, bro, or hey, we're going to dive down to the depths of hell and it didn't happen. And now we're all getting blown up and losing our money, right? So sometimes the better thing to do, like right now, is patience, right? Don't do shit. And this has been miserable, hasn't it? This hasn't printed for bears, right? That kind of did, but it took, what did this take? 12:30 in the afternoon, a bunch of fucking shit in here, and then that's not a bad trade right there for the first leg. I think we had a mark for that first target. Not too bad, but this has been miserable, hasn't it? And right in here, right? And I said, they're gonna fucking, it's gonna be all goddamn damn if listen to these fucking bears and a fucking stupid ass price action into the close, right? And it's not even worth trading, is it? Maybe that one leg down was worth trading, but this to me is not worth trading. It's not even worth it if you don't squeeze. What if we start squeezing here and we're squeezing now into this pin up here and then the delta rolls off and what happens? We're getting sucked back down with a failure to squeeze, right? Everything looks great here and it's still not doing it. So I think that's why I'm streaming, right? I think that's why I'm streaming. I hope this helps. I know, Dad, right? right, Nick? So just hang out. If anything presents for a squeeze, we'll take it. I have the feeling that we're not gonna. I have a feeling they're gonna rope us in here. We're gonna get sucked down into this bullshit for tomorrow. But you know how I look at this? I look at this as get it as deep as I fucking get it. Like if we can get any deeper than this, once all this passes, it's just a discount for you to get that big upside move. So if you're a bull, the last part of this would be if you are a bull and you know NFP is coming, we've traded up into it, your biggest hope into NFP is going to be get me as deep as we fucking possibly can go. Because I know that once we're fucking done and that good news comes out, I can long the fuck out of this into Wednesday. Does that make sense? So even with all of this, I would love to see a down move, either today after the bell or in tomorrow morning to get long. I would love for that to happen. People are saying in the Discord, they're like, what do you mean? Why does he want it to go down? It's because I want a goddamn discount. There's only 740 up here, right? It's fucking 740 right here. Like, what do you want to do? Like it's almost like what a bear does, right? The bull's like, I just want it to go right here, right now, Cap. And but then once you're there, you're like, okay, we're gonna go down to the depths of hell. And they're like, no, Cap, it's gonna do this and then up. And I'm like, that's not how this happens. So you got to get some fucking juice in here so we can make some money. And you have an opportunity with volatility. Hopefully, you can get an opportunity with some volatility to get this little whiplash and make a bunch of money up there. Does it make sense? A big fat fucking move up there. So if you're a bull, what do you want? You want to fucking trade that? I want to fucking trade this. I want that. I want that fucking juice. And meanwhile, you and I are all dicking around and fighting over this for this little scrap up here. And I want to fight for that fucking scrap. I mean, I don't mind fighting for scraps in the right conditions, like a quick 5-minute trade for 100%. But for this move this move right here, I really want that big trade. And I don't care if I get it. I don't care if I get it on the unrealized volatility in the morning. I don't care if I get a snap up and then down to take that fucking trade. I don't care. Make sense? Hang with me like you do. And if we see that, and let's say it passes me by. Let's say we do this. We don't go down. We just go up, and I miss the whole entire move. I missed the move. That's okay. And come back in a few days and do it again. And come back in a day. It don't feel like you have to be in every trade. Don't feel like that. You can get left behind in trades all the time. The real problem is if you get left behind on trades like that. Let's say I get left behind on this one, and then I see an earnings and they moon. There's another earnings over in there I don't know about, and they mooned. They went up 30%. Then I missed this trade. What does that do? It creates fear of missing out, doesn't it? So now I'm like, oh my God, everything's ripping. I'm missing the entire fucking thing. And then I'm waiting for my next thing over here. I totally lose sight of my rules, and I'm like, that thing's going to fucking rip too. And all of a sudden it's boom. And had I just followed my fucking rules, I would have known that that fucking thing was going to fall, right? So don't worry about what fucking Bob's doing or Mike or anyone else. Create your rules. Suck information off of people like me or people like Winky or people like John or anyone else that you think is a kick-ass trader, David AMS, whoever the fuck else it is out there that you like. I don't care who you pick. You hang around with those guys, girls, whoever they are, they, them, and V Princess too. And I know I'm gonna be fucked at the end of today. I can already tell. I already know I'm fucked. This is why I didn't come on the show yesterday. So there, like, it's okay not to take every trade. It's okay. Like, it really matters, even if you just take one trade a week, or one trade a month, or one trade at 3 months, one trade a year. You'd be better off just being that, like, I won fucking 3 straight trades for the year. I beat the market. I beat the fucking managed fucking fund. I beat the fucking guy charged me rates from my fucking not 401k, my fucking local financial advisor. You guys get what I'm saying? Just get your trade. Have your rules, have your tools. They don't have to be my rules. They don't even have to be my tools. You just have to I want you to think about being a trader and having those things actively going on in your mind. And then one day someone says to you, hey, do you have a toolbox? And tell me what your tools are. And they can say, I don't know what you're talking about. I just follow Gamma or something. Or I just follow this, follow that. And I'm like, what do you mean? You don't have like box full of fucking like first, second, third tier tools that you use and add them all up and come up with an answer for how you're going to trade? Like, you just winging it? I feel good about this? Like, fuck that shit. I don't want to be anywhere near you. Like, you scared the shit out of me. And you might win big, but I know you're going to lose as big too. I know that the stats are against you. I know that ultimately you lose and I win. Ultimately. So if you're a guy left behind here, right? We just start fucking mooning. And you're like, fuck that guy, Jim James. Fuck him all day long. You can suck my balls, suck my ass, suck my titties, whatever the fuck you want to say. But then I know for a fact that when you go and you disappear, I know the next time you run that, you're going to lose, and you're going to lose again and again and again and again. And you might even find your way back to me. Because once you take your licking, you come back and say, all right, that motherfucker was right and I hate his guts. But I'm going back there. Make sense? One day when you have them, I know I'm totally fucked. My voice is so complete. By the time I get up, but by the time I get up in the morning, it's going to fucking be like a vice in my neck. I think I have polyps growing right now, or some scar tissue. He felt my fucking neck, and it wasn't my goddamn fucking, glands. So just hang out, be cool. We can always, there's a bunch of trades here tomorrow. There's a fade the react, there's a reaction trade in the morning. There's a fade the reaction trade a couple hours later. There's a big target up here, for 740. And if it leaves us behind, it's okay. It is okay. You just need to be a high rate of wins versus a high rate of losses. And if you were that guy, you'd be wealthy. I'll say that to you right now. You would not have a job and you'd be very wealthy. You could piss money away whenever you want. And that is real. There are people here in this show that do that. There are people in our community that do that. They might not show or tell you that, but there are. There are people here that make a lot of money, and they follow shit like this or some form of it, and they do very well in life. They blow away tens of thousands of dollars whenever the fuck they feel like it, with no return on it. Seriously. And they spend a bunch of other money on return stuff, but you want to become that person. I promise you, you want to become that person. On text to speech. Tapping away text to speech. Did he say tomato or tomato? Make sense? Just hang out. We'll get through NFP. I might be right. I might be wrong. But just like hang out, chill, and we'll see how this goes into the close. I love all of you guys out there. I'm not mad at you. I just don't want something to like not pan out for you. I'd rather, like even if it rips, guys, like those people that are shot callers, fucking furs, they're wrong, dude. They blow fuckers up like crazy. You already have enough of that going against you as it is. You don't need more of it. You just need to like make sure that the trades that you're taking, you've run, I don't know how many fucking times. You've paper traded them, you run them again and again and again and again. And these setups are the fucking same. They're the fucking same. They're the same. You guys think they're all different, but they're not. Like, it's the same fucking playbook. They don't give a fuck what's going on out there. It's the same shit. The more time you have market, the more you see it. You're like, oh my God, that same setup's there again. Oh my God, this same setup's there. Oh my God, they're doing this again. Oh my God, they're doing that again. You'll start identifying that shit, and you'll figure out where you should be fucking around with those guys or where you shouldn't. Right now is one of those no times. It's one of those no edge times. And I love edge. I love looking like I'm predicting. I love looking like I'm the badass. What's up, Jared Delino? Spend 10K on things and return them easy money. You want me to give you my fucking sauce? Yeah. The reason I don't, some of them I publish. Some of them I have published on the website. I publish them in channels too. You can see them; they're pinned, but I don't publish them all. And why? You know the reason why? I want to hammer it into you. I want to hammer it into you like a mentor. every day, all day long until it's like bang, bang, bang. You know what I mean? And a list of rules won't do that for you. So I do like verbalizing them too, and you're drawing them for you, showing them to you. And I think the best or the easiest way is to say it, like speak it instead of writing and all this other stuff. Because there's a lot of there's a lot of interplay with this stuff too. There's a lot to monitor all at once. My brain is going 1,000,000 miles an hour with 1,000,000 different outcomes. Not 1,000,000, but a whole bunch of different outcomes, and if this and if that's and stuff like that. So I really want you to become that too. You know what I mean? If I just hand you the rules and you walk away, it's like, you know what I mean? If I teach you to think like I think, then you're gonna like not just read a list, but you're gonna I can give you a Black Schofield model. You can't apply that to anything, right? I can apply it to all kinds of parts of the market. I can apply it to almost every tool you use too. So like a math equation doesn't give you the answer, does it? You need to see the person, sit down and show them how it works and why it matters. And what is it telling you? So that there's a lot more information than just that. Oh, my throat gives out. I'll tell you one thing, my kids have done very well in life because of the way I teach them. So I'm hoping that same thing crosses over to you guys. I got one kid fucking honor roll in fucking number 2 research institution in the U.S. The other one's fucking National Honor Society and a fucking protege of like music and sports and shit. So I'm hoping, and it's not because they were born with it. It was definitely nurture, excuse me. So I'm hoping that I would nurture you guys the same way, so you guys are all rock stars. I want you guys to all be rock stars, literally. I want you to come back and say, "Hey, I learned so much more than you know, Cap. I'm such a better trader than you." I really want that. I don't ever want to think I'm the best trader in the world. I want you guys to like take this and take other things from other people and other places, and you become a better trader than me. You know, then I know you for a long time, and so those formative years matter, don't they? And this applies to any trader. I don't care how old you are, how long you've been in the market. Sometimes people just want to be. Sometimes people just need, like, hey, I know all this stuff, but I just need you to yell at me or something, or snap out of it, or whatever. Let's see what goes on here into this close. Is my motherfucking yellow box? Huh? You like that fucking thing? Huh? You like that? Like that? Cap, just get rid of the yellow box and we'll go up, bro. It's a new rule. Just hang out. I'm glad I'm here today. Yesterday I was like cruise control. Today, no cruise control today. We switched from easy street yesterday. Like, hey, we're in, you guys are all good and easy. It's just straight up, quick back test, up, up, up. Today gets a little bit harder. Tomorrow will be even harder. So that's why I'm here with you. Thanks, Market Squid. I know my throat's all fucked up. I'm totally fucked here. Just hang out. Be cool. When that trade comes, I'm going to tell you, take it, right? Like if the trade comes that is the good trade, I say it to you. I even say it in public, like that's the bottom. Take that fucking trade. Keep it pretty simple, don't I? I'm having a lot of pain right at the moment. I'm not supposed to have pain, and I'm having pain. Let's watch closely here. Let me show you guys a couple things here. So in the background, one of the things that I'm doing here So one of the things that I'm doing here in the background is while we are Webull has really nice candlestick charts. Some of the best, like straight pure candlesticks, okay? So in the background I watch candlesticks and I'll chart like traditional stuff on this, and I'll chart traditional stuff, and I also count candles on this chart from Webull on a screen back here you can't see. So I'm watching this all day long. So I want you to, in your mind, imagine this is a 4-hour chart right here. Okay, this is a 4-hour candle. This is a 4-hour candle, okay? Within this 4-hour candle, there's a whole bunch of stuff that goes on. Like we're going up and we're going down, right? Inside of a candle, there are different time frames. There's like let's say this is a 1-minute time frame. This is a 5-minute time frame. There's like 15-minute time frames. A bunch of different stuff going on in that candle is my point, right? And there's an even larger candle, right? There's a daily candle, right? So here's a 4-hour and a 4-hour within a daily candle, right? You understand what I'm saying? Like this candle has not finished yet because the day is not over. So let's look here while we're trading a 1-minute chart. We're trading a 1-minute chart, right? So while we're trading a 1-minute chart, I am also watching other time frames. Okay? And what I was watching today in the background was this. I was watching this prior stuff over here, okay? So I want to show you this really quick. So here's a rectangle right here. That's hard to do. I think I can do this, but there's this candle right here. Now you see these two candles right here, right? And they have a tail. These happen to have a tail here and here. I think this one has a tail down here and a tail up here, right? I'm always looking for like 80% of each one of these candles, basically. Okay, 80% of these two candles on this price action in here. On other time frames, it's like an hour time frame, excuse me. So let's look at this really quick, okay? Got that one right there. I got this one right here, right? And before we know anything that's going on in this 4-hour, before this candle even is made, right? When we're on like a 1-minute, let's say, and we're coming down here and we're starting to hit levels like that, or like this, or like this, or like this, okay? So I'm already watching things like this right here. I'm already watching things like this right here. Okay. And what can I tell right now from this 4-hour candle and this 4-hour candle? If I bring this to a 1-hour, it's going to show you something else. It's going to show you that we went down here. We did not erase most of this, and so we went up. And then we eventually smashed this, and we came back up here. But this candle beat this candle, and it's now free to trade this entire thing before we roll lower. So we can go down here today. Can. And there's something else here. We don't have to, but we can. I want to show you the 1 hour candle now. So let's look at this 1 hour. And I know where these 4 hours are in my head, at least, right? So we're blasting down in here. I just erased this candle right here. Do you see it? Erased that candle right there. Right? So that means that this is wide open. We don't have to go down there, but the door is open down there. Do you see it? And still be bullish into tomorrow. Okay? Now, had we not come down here and erased all this stuff, we could go up here. All right? Because we didn't open the door to this right here. The rest of this candle right here. Make sense? Now let's look at this at a smaller frame. Okay? So we see this, how we took this one out right here? We took that candle out right there. Now let's go to a 1 minute. You kind of get the gist here, right? Hold on. It's not really what matters, but dude, what happened there? Oh, no. I can't show it like this. Hold on. Not off screen. There we go. That works. What does that look like to you? Does it look like a cup and handle? And there's more information here. So we have this one right here, right? This was when I said to you, we're going to mark this bottom, which I said that to you, right? And then I said we need to get above this, right? And then above this big thing up here before we can take that long, right? So this is where the trade actually is. We failed. And then we opened up what? New zone down here, didn't we? And then we closed the deal with a new low, right? You have a low and the new low. And what is that telling you? The door is open to the fucking downside. The fucking door is open to at least right here. At least right there. Do we have to go there? No. What can send us down there? What can send us down there? Gamma rolling off, calls, maybe. Freedom to unwind on an expiry. If expiry is 5 days a week. So we can actually go down here, can't we? And we have reason to go down there outside of just candles. And we have an event tomorrow, right? And so the chance of us going down here is, and the probability is very high. It's done all my rules, met every rule I have, and conditions have a propensity to send us down here at some point, either the end of the day or after the close or before we get to NFP. And guess who else knows this? The street, hedge funds, kick-ass traders, professionals, like the top trader from GS. Where you go to a hedge fund or a boiler room or a family office and you got 30 traders and there's one and the guy goes, that guy makes the decisions over there. Right? And so those big swinging dicks are all swinging money around the market, right? And all of a sudden you get them all in the same trade and they all know what's going to happen before we get there and they start leaning into that trade and it happens. Low, new low. Now, does it have to happen? No, we probably need an event or we need options dying. Make sense? Maybe it doesn't. I don't even think I need anything on a chart but candles. Candles are pretty easy. But you'll get that over time. We should talk more about that stuff, like candles, counting candles at some point, but I don't think there's a trade there. A long, I don't think there is one. You know where there would be a long trade here? Where? Any guys know where the trade is? If there is a long trade, you know where it is? For a long here, for what we know right now, what's the trade for long? Anyone know? It's a swoop down, right? Hit that one. Up here, new high. We could take that long. What's another long trade we can take? If we break this one up here, right? Get that one right there, back down. Take that long right there, too. Take that one right there. There ain't nothing here. The only thing that's in here right now is danger. That's it. Danger. So, is there a trade? Long. For me, there is not. There just isn't. So I need to see that condition be perfect. And if that condition is perfect, I'm probably going to be right about 85% of the time. 85. And like the other 15 times you see me lose, you know, it's going to happen. There ain't nobody perfect. There ain't nobody perfect. So if you're not perfect, you owe it to yourself and you owe it to your trading partners, fellow retailers, to make sure that you know what the fuck you're doing. Because when you are wrong, it sucks. You don't want to hurt anybody. You know what I mean? So we'll watch this closely here. Does it mean we have to go down here? Nope. Doesn't mean we have to go down there, but we can. We can easily go down here and still be bullish to the upside. So I'm either buying the breakout or I'm buying the down here. And let's say we go down here. Let's say we smash this. They were stuck in the middle. Go up here, a little squeeze up here, but then we blast through this. Sorry, I don't spend that much time on Weeble. I'm not a Weeble master. But let's go look at this really quick. Let's go back to a 4-hour. Because we're going to look at the day now, too. We got a whole bunch of stuff to look at here. Let's say we go down here and we reach down in here. Ping right underneath there. And we just take, we don't even need the new low. That would call into question this candle right here, wouldn't it? So all of a sudden you're like, if you're just bouncing right here, you're still talking about a cup and handle and then a release. But if you break this, ding, you took that one out, but then you go to do your handle and it's deeper. That's bad, right? You've broken this one. Now you have your cup and handle. Your cup and handle fails. Oh my God, the cup and handle failed, right? Before you know it, we stall, and then we're now trading what? All this down here, right? If that holds and starts making some new highs, I can get confident again and start getting long again, right? So pure price action on candles is the ultimate, isn't it? There's nothing like candle counting. There ain't nothing like it. And we haven't even talked about daily candles yet, because you get the 4-hour here, but then you have dailies. And even this matters, doesn't it? See how my daily candle is right where it's supposed to be, right? So all of a sudden, we're now bleeding down here. We're now opening this door up. All of a sudden, we come into Friday, and we make a new low. We're going to a weekend. Before you know it, we're on Monday morning, and it's down here, and we were talking about taking some kind of fucking squeeze trade up here. And then I'm the guy that actually places my first trade, and I'm like, whoo, there we go. Well, Cap said we're only going to go down here and squeeze. Cap said we were going to do this. Cap said we're going to do that. Cap said he follows fucking rules. He has a plan. And if something comes in the middle of that plan, I know not to take that trade, or I know not to walk across that bridge that's broken. Because this could happen too, right? Small chance, but it could. And I know there's bears already thinking it's going to happen, but it hasn't shown itself yet. So you can't take that trade, in my view. The way is higher from right where we are. And once this volatility passes tomorrow, if we're not down under here fucking around, they're going to scrape these fucking bears in, right? What are we going to do down here? We're going to do another distribution trade, right? Make sense? They missed the 40 right there. The failure of 40. Or we bounce, right? We start saying, fuck it, we'll trade 760. So you just kind of hang out and you kind of try to get as deep as you can. You know what I mean? Deep, deep, deep. You're a bull. All of that inside of all this price action. Giordano's, I'm getting yelled at right now. Giordano's like, drink the fucking ice water, bro. Oh, I feel so good. I needed that. Thank you, Giordano. Thank you. Appreciate you, brother. Or sister. I don't know if you're a man or woman. Fucking Giordano Reserva. Hell yeah. Brazilian football player. God, I want to buy that shit so bad. It's because I'm typing and doing other things. I'm like literally going. Oh, I want to buy that so bad, that close. I can't do it. It's breaking one of my rules. Do not buy the bottom of that fucking candle. I really want to buy that candle, or I really want to buy it because it's the bottom of that 4-hour candle or that daily candle. Like, you want to know from my end, like what I want to do and what I'm stopping myself from doing is, this candle looks so goddamn juicy to me. Like this daily candle right here, it's fucking juicy where we are. See how that low right there? Like I'm trying to min-max down here to get that leg up there. And this is not a bad place to be long, right? And what rule am I breaking if I go long here? We traded up in NFP, right? You're feeling lucky? I'm not. I think they're gonna woodshed this shit in the after hours. That's what I think they're gonna do. I think they're gonna woodshed this fucker. Yeah, I know. This shit's written in blood in my view. Too many fucking times I've walked into a goddamn NFP and it's like everything is beautiful. Like under any other normal circumstance, I would have bought the fuck out of that. But NFP, want nothing to do with it. Zero. If we traded down into NFP for like 3 weeks, I'd buy the fuck out of that close. I mean, I'd buy it all. And I have on the show. But not in this situation. I don't want anything to do with it. And I might be wrong. Like, I could show up tomorrow. We're wrong. I should have put the long on the close. Should have taken it, fucking read it till 10 a.m. You can. You guys can. I'm not. I would prefer to just sit out and wait. You can, El Director. You don't have to do what I do. I don't expect you to do what I do. I don't get mad when you guys do your own thing. I want you to do your own thing. I do. Like, not to be a dickhead or anything. Or like to be like, I told you or some shit like that. None of that. I want you guys to do your own trading. Like, literally. Just for me, it's not the right setup. Hold on a second here. I'll be right back. Give me one quick second here. Oh, did I do the fucked up hair thing this morning? I should have tied my top knot higher. Hold on here. They think it's all, they think it's stiff or whatever, but I just didn't get the chance to blow it all out. Not blow it up, like open it up for the day. Do it right now. Do it just like this. I think they want to see the wavy or whatever, but I don't see the wavy until it dries out, and then it gets, I fucking have it wet. I gotta let the air get to it in my motorcycle. That's better. Oh, it looks so teasing. Look at it. Just want to buy that fucking clothes and have that fucking NFP fucking rip. Fucking up 3%. We're at 740 at 10 a.m. tomorrow morning. I'm fucking sharing. Make fucking 500%. I was going to get David in here if I could. I was going to get David in here to tell you the same thing. I think he said he was on vacation. He was going on vacation. What there? He never trades this shit. He stays the fuck away from NFP. Am I in the right place? Let's see what this is right here. See all the mechanical shit going on here. Look at that big fucking horse trading going on in the bell here. It's a goddamn trap, bro. It's a goddamn trap beast. If it ain't a trap this time, it's a trap the other fucking 9, brother. Fucking trap. It's like bait. It should look extremely bullish. It should like hit, like the price action should look fucking sexy. Like that, it's what it should look like. It's a goddamn trap, dude. If this fucker gets buried into tomorrow morning, I'm taking the day off. I'm just kidding. All right, more water. What? I'm seeing a lot of I'm reading something like I'm reading a bunch of posts here about like how exciting retail is right now. JPM Retail Radar notes, number 1, retail investors are gradually returning, with buying now running from around the 77th percentile versus the past year as confidence improves. And look at me, I have no confidence in this close. Alongside geopolitical and energy concerns. It's almost like they're teasing. Unlike last year's aggressive buy the dip behavior, retail largely stayed on the sidelines during March and April, while still maintaining a strong preference for AI-related themes. That wasn't us. That wasn't us. Flows are now reaccelerating into AI and memory trades, with single stock buying reaching the 81st percentile and ETF inflows rebounding sharply. I guess we're not a part of the rest of retail. Jesus Christ. Let me look at something here. They're claiming the EWI chart looks pretty bearish here. On a one down day, that fucking thing went to the moon. I'm looking at EWY. It's a Korea ETF. That's something to short right there. EWY. This is good to read. U.S. retail clients still selling tech stocks. Retailers taking the money on 228 million of outflows on Wednesday as there continues to be accelerated profit taking across tech stocks with focus on semis, which now consistently account for around 20% of retail. If we do make a move last 10 minutes, 350. Let's see what happens here last fucking 10 minutes. Hold on a second. I can't do this quick enough, but let me ask you a question. Answer me in YouTube and Twitch, and I'll read all of the responses. And I'll read the market chat and the pro chat. Without me building a a poll, all I want to know is from now into 8:30 or 7:30 in the morning, 8:30 in the morning, from now into 8:30 in the morning until we get that report. Is it up or down? Just say up or down. From now into NFP at 8:30. Up or down? All right, hold on. Oh, dude, Arkansas slaughter you fucking traitor. Fucking Hamsky Doodles, fucking traitor. I'm taking names. uh Oh, there's Darth Maul. He's in there. He's down, and I see Darth Maul is in there. What's up, brother? Good to see you. Yeah, I'm down with that. Ham Skadoodles, I'm with you on that. I'm with you in that. I'm with you in that to like 9 p.m. And then like 9:30 they start selling. Then fucking 2:30 they start selling. And then they get the fuck out at 7:30. And then we rip faces off. 100%. Yeah. No, I think they'll squeeze him to the close. They got to make him pay into this bell. Just got to put the fucking screws to him. I was thinking that I'd buy puts in the close if we squeezed up. But I don't know if I can get out of them by 9:30. I want that like second rip down. But I don't think we're going to get it. I think the report's going to be fine. I don't think they're going to be great. They're not going to be as good as Jobs. But it should be a decent report. Or it should be like a inline report. Like the payroll should be good. Payroll should be good. U rate should be like in line. Data doesn't matter. I think it does to some extent. Like the narrative got busted that the employment situation was all fucked up. Remember where I was showing you the employment when I was explaining to you that the employment rate or employment looked horrible because of the adjusted, the like swings high, swings low, and then comes back in line. So there's like a bunch of so like, tomorrow I think that your jobs numbers are going to be outstanding, but your unemployment rate I can't tell because we are still shedding jobs. Well, we're adding jobs too, but we're shedding jobs, so the U rates could look kind of ugly. But of course they'll fake that, or not fake. They'll not tell you the truth about why it looks like that, because it's actually not bad. It's good. Like we're shedding jobs, but we're also adding jobs at the same time. The complete information. We're adding a fuck ton of jobs. We're actually hiring people, but we are shedding jobs too, like traditional jobs and stuff. Damn, getting eaten alive in that. Look at that fucking thing over there. It's getting eaten alive. Brutal. What's up, Canada Fett? Good to see you, brother. I got a goddamn rule. I don't trade this fucking thing up tomorrow. It's like, even if it goes up, I can't fucking do it. I just want to see some horse shit downstroke and then grab that fucking thing. Or if they squeeze it and dump it at 10 or 12, that'd be dope too. Grab that fucking 10 or 12 o'clock downstroke would be badass too. I think they tee off at well, I don't think that they tee off. I think that Asia would sit in its hands, and I think that London sits in its hands. And then they swoop in and they clean up the destruction, either on both sides, right? If it goes up, they clean up there. If it goes down, they clean up in the bottom. London and Asia are gangsters. They live for the after of the report in the morning. Right? Stretching walls. I'll be down there tomorrow. I'll be down there waiting. I've got us going down. I think we go down tomorrow. I think when you come into 8:30, it's down. No matter what this is, it's down. I think in all scenarios, it's down. Maybe not all, but I just don't think I can't tell if we get the realized volatility. I don't think we get that. I think we just get the unrealized volatility built into the options in the market, and then you won't get the second round of put buying. I don't think, unless you're going to be the fucking bag holder of it. It was really bad. Here's some puts, bro. Fuel this right up. Is that fucking pin right on the fucking SPX? Are we sitting right on that fucking pin right now? Where are we at? Yeah, we're right on it. Right underneath it, but still on it. We haven't gone fucking anywhere, guys. Stretching walls, you're right, man. We haven't gone fucking anywhere. Haven't gone goddamn anywhere. Sucked in here, sucked down there, sucking in here. Underneath this fucking thing. I do want to buy it though. It's like screaming at me to buy, so that's why I'm not buying that shit. It's like tugging at all my emotions. It's like, buy us, just buy the clothes. We're gonna go up. All this sucking everywhere. I'm sucking myself off. That's why I have actual throat damage. Sucking too much peen. Too many blowjobs. I gotta switch back to hand jobs. Where's VIX 9 day at right now? Let's check this VIX really quick. VIX 9 day telling us anything? Yeah, it's not saying too much. I don't see. VIX 9 day looks like it's saying we're going to go up tomorrow. I'll wait. I'll sell it from a high. Let me sell it from like 15 or 1550 or something. No, 1540. Get that VIX moving, pumping for me so I can get long. What's at the money vol looking like right now? Anybody know? SPX at the money vol? I haven't looked at it. Is Zell director long right now for tomorrow? I'm not in the room right now. Sorry, I wasn't in there. Look at that shit. Oof. It's a nice three trigger cluster right there. You see it? L director, you did go long. Did you get him for tomorrow's expiry, or did you get him for Did you get him for tomorrow or for Wednesday? I think getting him for Wednesday is the best. You got him for Wednesday? Good. Put some time on that shit. Oof. What was that? Fuck was that right there? God damn. Look at that fucking downstroke down there. That's vicious. Oh God, what's that? Wrong way, Spoos. No, Spoos. No. All right, I'll see you in the morning. I hope you're all right. That's the people that are long. I pray for you. We'll see you tomorrow. No matter the direction tomorrow. I don't feel so good, Mr. Stark. You'll be fine. You have Wednesday calls, you'll be fine. Just close your laptop and come back on Wednesday. All right, I'll see y'all tomorrow at 9:30 in the morning.